Okay. Let us start with the overheads. The main objective of this chapter is absorbing overheads to the product. Once the product get completed, what we need to do? We need to sell it in the market. If you want to sell it in the market, you have to fix selling price. We have to fix the selling price. To fix the selling price, we need to arrive at the cost. Let me take an example. This remote get completed. If they want to sell it in the market, first they need to know how much is the material cost of this remote. Are you understanding? So let me take an example. The material cost comes to 150 rupees. Just I'm taking the example. The material cost comes to 150. And the labor cost, what they calculated is, let me take an example, 100. So together comes to prime cost 250. To the prime cost, we need to add, to the prime cost, we need to add factory overheads, correct? When I say factory overheads, it will be having multiple expenses. What are the multiple expenses? It will be having factory rent, it will be having insurance on plant and machinery, it will be having depreciation on plant and machinery, it will be having supervisor salary. Like this, n number of expense will be there. When I say overheads, it is a sum of indirect material, indirect labor, indirect expenses. So all these three things, if you sum up, that will be called as the factory overheads. Now the point is, under factory overhead, there will be multiple expense will be there. All these expenses we need to charge it to this remote. We have to charge factory rent to this remote, depreciation to this remote, supervisor salary to this remote, lubricant cost to this remote, power charges to this remote. Are you understanding, all of you? So that is what the discussion that we are doing in this chapter. How to charge overhead to the each and every product. Now you may ask me one doubt, sir. Why you are discussing this much? Make a total divided by number of remotes. You'll get cost per remote. But if they're producing only one single remote, one type of remote, then we can do this. Single product manufacturing company. If the company is producing only single type of product, then we can do this. Average cost we can take. But many of the manufacturing companies will not do the single product. Multiple products will be produced. Are you understanding? So now the point is, when the multiple products have been produced, how to charge to the each and every product. Why? Because the value of the overhead to be charged to this remote is different from the overhead to be charged to the TV, overhead to be charged to the speaker. So the overhead will vary. Are you understanding? So in this chapter, we are going to discuss how to absorb the overheads. All of you clear about this? Now, that can be done. Okay. So if the company is a single product manufacturing company, we can absorb the overhead directly by calculating the average cost per unit. But the problem is, when the companies produce multiple type of products, then we need to see how to absorb the overheads. That will be done through a process called as the absorption process. That can be done through the process called as the absorption process, which is having three steps. The first one is primary distribution summary. The first one is primary distribution summary. Second one is secondary distribution summary. At last, absorption. These are the three steps using which we can absorb the overheads to the product produced in the factory. Now let's see how to do that. See, let me take one picture to explain this. What they'll do, first they'll make a list of all the expenses. Let me take an example: rent, power, insurance, depreciation, lighting charges, etc. Like this, they'll make a list of all the expenses. After making list of all the expenses, they will identify the different departments in the factory as a production department and service department. They'll identify into the department, production department and service department. So what is production department? What is service department means? Let me take an example of the car manufacturing company. If you take the car manufacturing company, multiple spare parts will be produced by the factory. There will be a department where they'll manufacture the engine. There will be a department where they'll manufacture the steering. There will be a department where they'll manufacture where they assemble the car. Like this, multiple departments will be there. So all these departments are called as the production departments. Apart from this, there will be a canteen. Are understanding? There will be repairs and maintenance department. There will be stores department. All these things are the service departments. Are you understanding? So the entire factory we are going to bifurcate into production departments and service department. Let me take an example. There are 2 production departments and 1 service department. P1, P2, S1. P1 stands for production department 1, P2 stands for production department 2, and S1 stands for service department 1. Now what we need to do, this rent, we need to apportion to these departments, P1, P2, S1. Can you tell me on what basis we can apportion the rent? Square feet basis, area. When it comes to power, on what basis? Horsepower of the machine. Are you understanding? Sometimes they'll give you horsepower of the machine, sometimes they'll give you machine hours. If they given both, take the product. Are you understanding? If they given only horsepower, take only horsepower. If they given only machine hours, take only machine hours. If they given both, take the composite. Are you clear about this? Next, when it comes to insurance, what is the base? Cost of the machine, value of the machine, depreciation, value of the machine. Are you understanding? And one more thing, lighting charges. When it comes to lighting charges, number of light points. So these are the basis to apportion the overheads. So all these expenses will be apportioned to P1, P2, S1. Now what happened? All these expenses accumulated in P1, P2, S1. No more individual expenses. Are you understanding? Individual expenses converted to departmental expenses. This individual expenses converted to departmental expenses. Are you understanding? All of you. So this step is called as the primary distribution summary. So in primary distribution summary, converting the individual expense into departmental expense. Clear about this? Understanding? Next. After doing this, what will happen? When it comes to service department, as I told you, the example is canteen, storeroom, repairs and maintenance. Let me take an example. This is the repairs and maintenance department. Who will be there in the repairs and maintenance department? Mechanics. What they'll do? Whenever the breakdown happen in the machinery, they'll go and rectify the breakdown. Will they generate any revenue in that department? Can they generate any revenue? No. Whatever the cost apportioned to S1, they cannot recover because they are not generating any revenue. They are providing internal service. They are providing internal service. Are you understanding? All of you. So what I mean to say, repairs and maintenance department cannot generate any revenue. So they cannot recover the cost. Now what we need to do? The unrecovered cost of service department should be given to production departments. The unrecovered cost of the service department should be given to production departments. This is called as the secondary distribution summary. After doing secondary distribution summary, the S1 department will become 0 because the entire cost has been apportioned to the production departments. All of you clear about this? Now from the P1 and P2, we are going to charge it to the products. Let me take A, B. From P1 and P2, we will charge it to the products. From P1, we will charge it to product A. And from P1, we will charge it to product B. And then we will charge it, P2 will be apportioned to A. And P2 will be apportioned to B. This process is called as the absorption. This process is called as the absorption. Have you understand this? So this is the first step, this is the second step, and this is the third step. So in first step, what we are doing, individual expenses converted to departmental expenses. In the second step, secondary distribution summary, the unrecovered cost of service department apportioned back to production department. In third one, from the production department, we are charging it to the products, each and every product. So this is called as the absorption process. Have you understand this? All of you now. Let us start with primary distribution summary. Primary distribution summary. So it's very simple. See, let us understand the format first. What will happen? We'll be taking particulars, list of all the expenses. We'll be taking particulars column. We'll be writing list of expenses, and then we'll take basis. On what basis we are going to apportion the expense, and then we'll take the total amount. So first we are writing list of expenses, and then we'll take the basis, and then we'll take the total amount, and then we'll take the departments P1, P2, S1, S2. Like this, we'll take the department, and then we'll do the apportionment. Are you clear about this? Understanding? So this is about the primary distribution. One of the very important point which we need to learn from the primary distribution is, tell me one thing, direct material, direct wages, direct expenses should be considered in this calculation. It is all about overheads. It is all about overheads. When I say overheads, indirect material, indirect labor, indirect expense, we should not consider these three things. All of you clear about this? Now, they given you the direct material in the question, and they given you 10,000 rupees per P1, 20,000 rupees for P2. For S1 they given 5,000. For S2 they given 7,000. Now the point is, the direct material cost of service department should be considered as the indirect material for the production departments. Don't consider the direct material of the P1. Don't consider the direct material of P2. But you have to consider S1 of the, the direct material of the S1 and S2. Why? Because direct material of service department will be indirect material to the production departments. If you take a canteen, what is the direct material for canteen? Groceries, rice, dal, oil, all this is the direct material. For a car manufacturing company, rice, dal, oil, all this is the direct material. No, that is the indirect material. So from the company perception, it's indirect material. But from the canteen perception, it's the direct material. Are you understanding? If they given you the direct material, direct wages, service department cost has to be considered. Don't consider the production departments. This is the only point which you need to remember in the primary distribution summary. All of you clear about this? Understanding? Next. Let us start with secondary distribution summary. Under secondary distribution summary, totally we have three methods. What are the three methods means? First one, direct redistribution method. The first one is direct redistribution method, and the second one is stepladder method, and last one is reciprocal method. Are you clear about this? Now, first one, direct redistribution method. What is the assumption means? The service departments will give service only to the production departments. There is no exchange of service between the service departments. The service department will give service only to the production departments. Okay, now direct redistribution method, which I call it as, let me take P1, P2, S1, S2. What is going to happen? The S1 will give service to P1 and P2. The S2 will give service to P1 and P2. There is no exchange of service between the service departments. This is called as the direct redistribution method. Are you able to understand? Okay, here the assumption is the service departments will give service only to the production departments. Clear? Next. Step ladder method. Under step ladder method, that will take P1, P2, S1, S2. Listen to me carefully. Under step ladder method, assumption is the service department will give service to another service department, but it cannot take back the service. Or it can take the service, but it cannot give back the service. Are you understanding? Now, S1 is giving service to P1, giving service to P2, and it is giving service to S2. Whereas S2 is giving service to P1 and P2, it cannot give back service to S1. This is called stepladder method. If you look at the S1, it is giving service, but it is not taking back the service. If you look at the S2, it is taking service, but it is not giving back the service. Are you clear about this? This is called stepladder method. And one more important point is, normally they will specify in the question in what sequence we need to apportion the overheads. Whether we need to apportion S1 first, or S2 first, or S3 first. They'll give you the sequence. Suppose if they didn't give the sequence. In one of the questions they didn't give the sequence. Then how to, sir, which department to be apportioned first? In this case, only 2 departments. Sometimes they'll give you S1, S2, S3, S4. Like this, 4 departments given. They're asking to do it under stepladder method. When they're asking to do it under stepladder method, we have the doubt which department to be apportioned first. If you apportion S1 first, we can apportion to S2, we can apportion to S3, we can apportion to S4. When you are apportioning S2, can you apportion back to S1? No. Now the point is which department to be apportioned first. Are you understanding? So how to identify? See, if they given the sequence, suppose if they given you the sequence, accordingly we'll apportion. If they didn't given you the sequence, what we need to do means the department which is giving service to more number of service department will be apportioned first. The service department which is giving service to more number of service departments will be apportioned first. Are you understanding, all of you? So that is about the stepladder method. All of you clear? Now, at last, reciprocal method. When it comes to reciprocal method, again there are 3 methods. What are the 3 methods? Repeated distribution method, repeated distribution method, simultaneous equation method, trial and error method. These are the 3 methods. In case of repeated distribution method, what we'll do? We'll take P1, P2, S1, S2. The service department's cost will be repeatedly apportioned until the service department become 0. By doing the secondary distribution, listen. By doing the secondary distribution, what is the target? We have to make service department 0. Whatever, that is what I said, that is what I told you here. Whatever the service department cost, that will be apportioned to the production departments. After doing that, the service department should become 0. The target of the secondary distribution summary is to make the service department 0. Are you understanding? Okay. Now, in repeated distribution method, S1 and S2 will be repeatedly distributed until the department become 0. Service department become 0. All of you understanding? Now, in case of simultaneous equation method, instead of doing the repeated distribution, we are going to form the equations, we solve the equations, we get the total overheads of the S1 and total overheads of the S2. Sir, what do you mean by total overheads? I'll give the example. S1, S2. Let me take an example. S1 is giving the service of 10% to the S2 and S2 is giving the service of 5% to the S1. Let me take an example. Are you understanding? Now, primary distribution summary. After doing the primary distribution summary, S1 has the cost of 10,000 and S2 has the cost of 15,000. Along with the S1 and S2, we will be having P1 and P2 also. Are you understanding? Now the point is, when I say total overheads of S1, how to calculate that? Already apportioned cost of 10,000, the existing cost of 10,000 plus how much percentage of service it is taken from S2? 5%. So what we need to do? Existing cost of 10,000 plus 5% of S2 is the total overheads of S1. Yeah, are understanding? So what I mean to say, total overheads of S1 is equal to existing cost 10,000 plus how much percentage of service it is taking? 5%. So what I am going to do? I'll take total overheads of S1 as X, total overheads of S2 as Y. Now what I'll do? In place of total overheads of S1, I'll write X. X equal to existing cost of 10,000 plus 5% of Y. If you really understood, can you tell me Y equal to equation? 15,000 plus super 10% of X. So like this, we'll form the equations, we'll solve the equations. By solving the equations, we'll get X and Y. Using this x and y, we'll do one-time apportionment. Automatically, service department become 0. This is called as the simultaneous equation method. All of you understanding? Last one, trial and error method. What is this trial and error method means? It is a repeated distribution only between S1 and S2. Here we taken P1, P2, S1 and S2. But here we are going to take only S1 and S2. Are you understanding? Repeated distribution will be done only between S1 and S2. So by doing that, we'll get total of S1, total of S2. That is the total overheads of S1, total overheads of S2, and do the one-time apportionment. We'll get the service department. We'll make the service departments 0. So these are the 3 methods under the reciprocal method. All of you clear about this? Okay, now whenever it comes to secondary distribution, 3 methods. Whenever it comes to secondary distribution, 3 methods. What is the first one? Direct redistribution method. Second one, stepladder method. Third one, reciprocal method. Under reciprocal method, there are 3 more methods. Repeated distribution method, simultaneous equation method, and last, trial and error method. In repeated distribution method, repeated distribution will be done between P1, P2, S1 and S2. In case of simultaneous equation method, we'll form the equations of the each service department, we'll solve the equations, we'll get the total overheads of the service department, and then we'll do the apportionment. In case of trial and error method, distribution will be done only between the service departments. Are you clear? Understanding? Next. Last one, absorption. Before going to that, let us do one question. Look at this question. Deccan Manufacturing Limited have 3 departments which are regarded as production departments, service departments, production department. Service department costs are distributed to these production departments using stepladder method. Estimates of factory overhead cost to be incurred by each department in the forthcoming year are as follows. Data required for distribution is also shown against each department. Now look at here. There are 3 production departments and 4 service departments. Correct? The question is about which method? Stepladder method. The question is about stepladder method under secondary distribution. What is the objective of the secondary distribution? To make service departments 0. Are you understanding? So how many production departments are there? 3. What are the 3 production departments? XYZ. What are the 4 service departments? PQRS. So what they given? Factory overheads given, direct labor hours given, number of employees given, area and square feet given. Now look at here. The overhead cost of 4 service departments are distributed in the same order PQRS. I told you now. Sometimes they'll give the sequence. PQRS are the service departments. They given the sequence in which we need to do the distribution. First we have to distribute P, then Q, then R, then S. Respectively on the following basis. When it comes to P, number of employees, Q, direct labor hours, R, area and square meters, S, direct labor hours. All of you clear about this? Now, you are required to prepare a schedule showing the distribution of overhead cost of the 4 service departments to the production department. They are asking you to show the apportionment of the service department cost to the production department. Clear? Next. Calculate overhead recovery rate for a direct labor hour for each of the 3 production departments. I'll come back to this. First, let us do this. Shall we start doing this? All of you? Now, what we need to do? Means I'll do one thing. Directly I'll show you the solution. So this is the solution. Secondary distribution summary. First we take a primary distribution summary given in the question. Okay, I'll show you the question also. Look at here. Factory overheads of each department given. 1,93,000, 64,000, 83,000, 45,000, 75,000, 1,05,000, 30,000. The same thing I'm taking here. 1,93,000, 64, 83, 45, 75, 1,05,000, 30,000. Are you understanding? Now, after doing that, according to given information, which department to be apportioned first? P. First we have to apportion the P department. I think this question is there in the study material also. What the page number? 4.70. 4.70. Please take out the question. 4.70. Page number 4.70. Now, so first we'll apportion P. First we'll apportion P. Basis is number of employees given. I took the proportion 100 is to 125 is to 85 is to 0 is to 50 is to 40 is to 50. So what is the total amount in P department? 45,000. This 45,000 we are apportioning to all the X, Y, Z, Q, R, S. Are you understanding? Next we are apportioning Q. When we are apportioning Q, what is the basis given in the question? Direct laborers. When it comes to direct laborers, we took the proportion and P department becomes 0. Now in the Q department, how much is the overhead means? According to primary distribution summary, 75,000 rupees. Now we apportion 5,000. Totally comes to 80,000. This 80,000 will apportion to production departments X, Y, Z, but will not apportion to P because we are under which method? Stepladder method. It cannot give back the service. Are you understanding? Okay, now it will give service to R, S. Then R, area in square meters. We took the proportion. What is the total amount in R department means? 1,05,000 plus 4,000 plus 24,000 totally comes to 1,33,000. Are you understanding? Now, at last, yes, we'll apportion the S department cost. We took the proportion. The total in S department is 66,000 that has been apportioned. So after doing this, what happened? P, Q, R, S, all these department become 0, whereas X, Y, Z, we took the totals 3 lakh, 1,35,000, 1,60,000. All of you clear? No. Here the point, one of the point which we need to understand is why they are calling it as step ladder method. If you look at after this, how these lines looks? Steps. So that they call it as step ladder method. All of you clear about this? Okay, now. So after doing secondary distribution, service department become 0. The entire overhead cost accumulated in X, Y, Z. All of you clear about this? Now. Here, look at the second requirement. What they are asking. Calculate overhead recovery rate per labor hour for each of the 3 production departments. In the production departments, X, Y, Z, we already calculated the overheads, 3 lakhs, 1 lakh, 35,000, 1,60,000, correct? 1 lakh, 35,000, 1 lakh, 60,000. So, this is the overheads. Now, they are asking to calculate overhead recovery rate per labor hours. Are you understanding? So, we are going to divide with labor hours. How many labor hours for X? 4,000, 3,000, 4,000. Are you understanding this? Now, how much is the labor hour rate? 75. $45 and 40. So this is the overhead absorption rate. Overhead recovery rate, which is also called the absorption rate. All of you clear about this? So this is how we are going to calculate the step ladder method. All of you clear? Yeah. Next. Look at the number 2. Question number 2. This is based on the reciprocal method. This question is based on the reciprocal method. Sanj Limited is a manufacturing company having 3 production departments A, B, C and 2 service departments X and Y. The following is the budget for December 2022. They given direct material direct wages, factory rent, power, depreciation, other overheads. Now, additional information given: area in square feet, capital value of assets rupees in lakhs, machine hours, horsepower of machines given. This is the additional information given. What is the page number in study material? 4.23. Take the page number 4.23. A technical assessment of the apportionment of expenses of service department is as under. When it comes to X department, it will give service 45% to A, 15% to B, 30% to C, and 10% to Y. 0% to X. Self-service is not a service. Self-service should not be considered as a service. Are understanding? Next, when it comes to Y, it is giving 60% to A, 35% to B, and 0% to C, 5% to X. Now, required. Prepare a statement showing distribution of overheads to various departments. Prepare a statement showing distribution of overheads to the various departments. Distribution of overheads to the various departments. How many departments are there? 3 production departments, 2 service departments. They are asking distribution of overheads. These are all the overheads. Distribution of overhead to the various departments. That means they are asking primary distribution summary. In this question, first they are asking primary distribution summary, overhead to the departments. Now, service department to the production department. That is called what? Secondary distribution. From the production department charging to the product. That is called what? Absorption. Are understanding? So sometimes they won't specify the name. They are not asked to do primary distribution, secondary distribution. They'll give the, what happens in that step. They'll tell you. If you look at the question, they are asking overhead to the various department. That means overhead to the departments. Means primary distribution summary. All of you clear? Next. Prepare statement showing redistribution of service department expenses to production departments using trial and error method. What is this? Secondary distribution method. Secondary distribution summary under which method? Trial and error method. Are you understanding? And one more thing. When it comes to trial and error method, it is under what? Reciprocal. What do you mean by reciprocal? Giving and taking back. Are you understanding? Look at here. X is giving what percentage service to Y? 10%. Y is giving what percentage service to X? 5%. Giving and taking, reciprocal method. Under reciprocal, how many methods? 3. What are 3? Repeated distribution method, simultaneous equation method, trial and error method. In this question, under what method they are asking? Trial and error method. Are you understanding this? Okay. Now, look at this. First, we'll discuss about the primary distribution. First, they given direct material. Tell me, should we consider 1 lakh of A? Direct material 1 lakh of A. First of all, direct material, is it form part of overheads? No. Now here, these 3 are the production department and these 2 are the service department. Just now I told you, direct material, direct wages of the service departments will become indirect material, indirect wages for the production department up to the company. Are you understanding? Now tell me on that basis, should we consider this 1 lakh? No. Should we consider the 2 lakhs? No. Should we consider 4 lakh? Should we consider the 2 lakhs? Yes. 1 lakh? Yes. Same way wages also, don't consider these 3, consider these 2. Clear? Yes. Understanding? Next. Factory rent. Can you tell me on what basis we need to apportion? Area. Are you understanding? Next. Power. Machine hours into horsepower. They given machine hours as well as horsepower. So here we have to take machine hours into horsepower and take the proportion of that. Next. Depreciation. Capital value of asset. Other overheads. See, whenever they given general overhead, other overhead, miscellaneous overheads. So normally what we will do, the first preference we are going to take the machine hours. The first preference we are going to take the machine hours as the base. If the machine hours is not okay, machine hours and labor hours, one out of these 2. These 2 is not given. Then we'll take the direct wages as the base. Listen to me carefully. When they given other overheads, we don't know what all the expense include in that. They'll mention other overheads, general overhead, miscellaneous overheads. When they given you such kind of information, we don't know what is the amount included in that. And we don't know what is the nature. If you know the nature, at least you can take the basis. So what I mean to say, in such case, first preference you take the machine hours and labor hours. Out of these 2, which either of the one is not given. Machine hours is not given, labor hours is also not given. Then take the direct wages as the base. Are all of you clear about this? And in this question, have they given the machine hours? Yes, we can take the machine hours as the base. In some of the questions, they give the labor hours. Take the labor hours as the base. All of you clear? And one more thing, tell me, this other overheads, we need to apportion to all the 5 departments. This other overheads, we need to apportion to all the 5 departments. In one question, what they did, they given working hours. But that working hours given to only 3 departments. Are you following the discussion? Good morning. All of you listening? Good morning. Are you listening? Yeah. So in one question, what they given? I told you. Whenever they given the other overhead, take the machine hours or labor hours. Correct? Huh? If these two is not given, take direct wages. In one question, what happened? They given the working hours. That working hours is given only for the 3 departments. If you take working hours as the base, what about these two? So in that question, what they did, they took the direct wages. Are understanding? In this question, machine hours is given for all the 5 departments. So comfortably, you can take the machine hours as the base. All of you clear about this? Okay? Now, so this is about that. Next. So by doing this, we'll get the primary distribution summary. All of you clear? Now, can you tell me primary distribution summary totals? A, B, C, X, Y. Primary distribution summary 2,70,000 B, 3,70,000 C, X, 4 lakh, okay, 5,35,000. Now, this is the primary distribution summary totals. Now, what we need to do? The X department cost and Y department cost has to be apportioned to the ABC. This is called as what? Secondary distribution summary. They are asking to do it under trial and error method. I'll tell you how to do it under trial and error method. Listen. This is the trial and error method. Look at this. Repeated distribution between service departments. I told you na, in trial and error method, we'll do only between service departments. Production distribution summary of X department is 4,75,000. Y department is 5,35,000. Here I written X department is taking 5% service from Y department. Y department is taking 10% service from X department. First time apportioning X. First time apportioning X. How much is the cost in X department? 4,75,000. So that we taken 4,75,000. Y is, see, how much percentage given to Y? 10%. So 4,75,000 into 10%. How much you will get? 47,500. Are you understanding? Now, what is the already existing cost in Y? 5,35,000. So 5,35,000 plus 47,500. You will get 5,82,500. Now we need to apportion Y. 5,82,500 is there in Y department. Out of this, how much percentage given to X? 5%. In examination also, you write like this, so you can avoid the confusion. You write like this in the question paper and the solution paper, so that you can avoid the confusion. Many people confuse. Many people confuse with the percentages. Are you understanding? Okay, now. So 5,82,500 into 5%. I like 82,500 into 5%. How much it comes to? How much it comes to? 29,125. Are you understanding? Now the point is, this 4,75,500 is already apportioned. Now we need to apportion only 29,125. So what we'll do, 29,125 into X should be given to Y. What percentage? 10%. So it is 2,913. This 5,82,500 is already apportioned. Now what is to be apportioned is 2,913 into what percentage given to Y? X, 5%. Then 146 into 10%, 15. Then 15 into 5%, 1. Are you understanding the calculation? All of you? Now, by doing this, we'll make the totals. These are the total overheads of X department, total overheads of Y department. As how we do the apportionment in case of simultaneous equation method, same way here also we'll apportion the overheads. So if you look at here, taken production department, service department, values according to primary distribution, and then first we are taking X department. When we are apportioning the X according to the given percentages, that is 9:3:6:0:2. In that proportion, X department total cost is 5,04,272. Total cost is 5,04,272. By taking that, we are apportioning to A, B, C, and then Y. When it comes to Y, total overheads is 5,85,428. By taking that, we are apportioning to A, B, and then X. We made both 0 and the total cost accumulated in the ABC. So this is called as the trial and error method. All of you clear about this? Understanding? Okay? No. Now, before going to question number 3, let us understand absorption. Tell me one thing. After doing secondary distribution summary, the service department become 0. Entire amount accumulated in the production departments. In absorption, from the production department, we'll charge it to the products. From the production department, we're going to charge it to the products. Now I'm taking the example, particulars. I'll take only P1 and P2. I'll not take the S1 and S2 because those two become 0. Are you understanding? I'll take only P1 and P2. Let me take an example. Secondary distribution summary. After doing secondary, or else I can write like overheads. Overheads of P1 is 10,000 rupees. Overheads of P2 is 15,000 rupees. Now what I'll do? I'll take the labor hours as the basis. As example, I'm taking labor hours as the basis. Here it is 5,000. Here it is 3,000. Can you tell me absorption rate of P1 department? Absorption rate of P2 department? 5. Now what will happen? There is a product called as product A. Product A is consuming 2 hours from P1, 5 hours from P2. In P1 department, per hour, how much we are going to charge? 2 rupees per hour. In P2 department, per hour, how much will charge? This is called as absorption rate. Now tell me, product A is taking how many hours from P1 and how many hours from P2? 2 hours from P1. So 2 hours into 2 rupees. How much it comes to? 4. In P2, 5 hours. Per hour, how much? 5 rupees. Total comes to 25. So 29 is the overheads of PA. Sorry, product A. 29 rupees is the overheads of the product A. Same way, let me take product B. If you take product B, P1, P2, it is taking 3 hours from P1 and 1 hour from P2. 3 into 2, 1 into 5. This is 6, this is 5. Total is 11. Like this, we'll evaluate product C, product D, product E. Are you understanding? All of you. So, here 2 things are happening. When it comes to absorption, 2 things are happening. Number 1, calculation of absorption rate. Number 2, charging overheads. Charging overhead to product. Are you understanding? So when it comes to absorption, 2 things are happening. Calculation of absorption rate and charging overhead to the product. Absorption rate equal to, let me write the formula. Absorption rate equal to, what is the formula? overheads divided by base quantity. As an example, I taken the labor hours. Apart from labor hours, we have the machine hours. There are multiple things are there. Okay, now 6 items are there. Base quantities are 6 items. I discussed that. So overhead divided by base quantity. Absorption rate is overhead divided by base quantity. Are you understanding? Okay, now when it comes to charging overheads equal to base quantity consumed into absorption rate. What we are doing here? We are taking, see, base quantity is labor hours. Here we taken labor hours consumed into 2 rupees. What 2 rupees? Absorption rate. Are you understanding? When it comes to here, P2, we taken the hours consumed into absorption rate. So charging overheads equal to base quantity consumed into absorption rate. Are you understanding? All of you. Okay. So absorption rate equal to overhead divided by base quantity, and charging overheads equal to base quantity consumed into absorption rate. Now the point is, when it comes to base quantity, according to our syllabus, there are 6 different types of base quantities. What are the 6 different types of base quantities? Means number 1, labor hours. Number 2, machine hours. Number 3, production quantity or production units. Number 4, material cost. Number 5, labor cost. Number 6, prime cost. These are the 6 different types of base quantities. Are you understanding? If you take labor hours as the base, what is the formula for absorption rate? Overhead divided by labor hours. If you take machine hours, overhead divided by machine hours. If you take production units, overhead divided by production units, we'll get per unit. If you take material cost, overhead divided by material cost into 100 to convert into percentage. Because overhead is also in rupees, material cost is also in rupees. So we'll convert into percentage. If it is labor cost, then overhead divided by labor cost into 100. All of you clear about this? So like this, we can calculate 6 absorption rates. Using 6 different base quantities, we can calculate the 6 absorption rates. All of you clear? Understanding? Okay. So this is about the absorption process. Okay. Now, so if you take here only, we take an absorption rate of ABC. Look at here. We had done the apportionment 8,48,178, 6,50,540, 7,51,281 divided by labor hours. We'll get the absorption rate. All of you clear about this? Understanding? Okay. Now one of the point what we need to understand, very very important. As I told you, the masala added to the subject is because of this concept, budgeted rate versus actual rate. This is the concept which makes the costing subject slightly difficult. Okay, see here, budgeted rate versus actual rate. What is this? Let me take an example. Budgeted overheads equal to 3 lakhs. Budgeted overheads equal to 3 lakhs. Budgeted labor hours equal to, I'll do one thing and copy paste. Okay, I took the example. Look at this example. How much is the budgeted overheads? 3 lakhs. How much is the budgeted labor hours? 20,000. And how much is the budgeted rate? 15 rupees per labor hour. 3 lakh divided by 20,000, we are getting 15 rupees per labor hour. Now, when it comes to actual overheads, it is 3 lakhs, actual labor hours 15,000, and the actual rate is 20 rupees per labor hour. Sir, what is this? Please understand. The company will be having two types of data. One is budgeted data, and one more thing is actual data. When they prepare the budgets, at beginning of the period, If it is a yearly budget means they'll prepare at the beginning of the year. If it is a monthly budget, they'll prepare at the beginning of the month. Because the budgets can be prepared monthly, yearly, quarterly, half yearly, daily. Are you understanding? So we'll take the budgeted information, and there is one more thing called the actual information. The actuals will get to know at the end of the period, at the end of the year, end of the month, end of the week. Are you understanding? So there are two types of data having by the company. One is budgeted data, and one more thing is actual data. If you use the budgeted data and calculate the absorption rate, which we are calling it as budgeted rate or predetermined rate. One more name for that is predetermined rate. Are you understanding? If you use the actual information and if you calculate the absorption rate, that is called as the actual rate or nominal rate. I'll have to clear about this. Okay. So there are two types of rates now. One is budgeted rate and one more thing is actual rate. Now the point is, just now we discussed charged overheads equal to base quantity consumed into base quantity consumed into absorption rate. I'll write the full form. Base quantity consumed into absorption rate. Please understand. Now there are two types of rates: budgeted rate, actual rate. Now tell me, what rate should be used to absorb the overheads? Actual rate or budgeted rate? Actual rate. I'll agree with you, but please understand, in cost books, we are always going to absorb using budgeted rate. What you said is correct. I'll agree with that. But why we'll take the budgeted rate? But why we'll take the budgeted rate means the reason behind that is because we don't know the actual rate. Actual rate we'll get to know at the end of the period. Let me take an example. I'm doing it for the financial year 23-24. What is the beginning of this year? 1st April 23. What is the ending? 31st March 24. The company is into manufacturing of the markers. To produce the first batch of markers, it took 3 days. Now, they started business on 1st April 2023. As on 3rd April 2023, the first batch is out. Once the batch get produced, they have to sell it in the market. If they want to sell it in the market, they need to fix the price. If they want to fix the price, they need to know material cost, labor cost, overhead cost. Once the product is out, they can assess material cost. They can assess the labor cost. The problem is overhead. The overheads has to be absorbed, charged, or loaded to the product. When they are planning to load the overhead to the product, see, at beginning of the period, we know the budgets. We can calculate the budget rate. At the end of the year, we'll get to know the actual rate. They cannot wait until 31st March from 3rd April 2023. The product is produced on 3rd April 2023. They cannot wait until 31st March 24 to fix the price. Once the product is produced, immediately they have to sell it in the market. Then only they'll get the funds for the rotation. Are you understanding, all of you? So what I mean to say, the product produced on 3/4/2023 cannot be waited until 31st March 24 to fix the price. Are you understanding? As on this date, we don't know the actual rate, which is readily available. Which rate is readily available? Budgeted rate. So use the budgeted rate. Sir, what you're doing is wrong. They also know that. Even I also know that. Are you understand? But there is no option. What to do? So for that reason, we are using the budgeted rate. This rectification we are calling it as under over absorption. This mistake what we are doing now, as on 3rd April, whatever the mistake that we done, that will be rectified on 31st March. That rectification process only under over absorption. Are you understanding? Okay, so we'll take the budgeted rate. Along with this, after taking this budgeted rate, base quantity. What is the base quantity? Labor hours, machine hours, production units. Now tell me, should we take actual or budgeted? Actual. Someone say budget. No. See, once the remotes get completed, can't I say how many remotes produced? If you know the actual, why you take the budget? Are you understanding? Once the product is out, we can say how much is the material consumed, how many labor hours taken. Once this bench gets completed, once this bench is produced, can't we say how much is the material consumption? How much is paid to the labor? Can't we calculate that? Are you understanding? If you know the actual, take the actual. I am using the budgeted rate Because I don't know the actual rate. Because I don't know the actual rate, I'm using the Byter rate. Or else I would have used the actual rate only. Then the subject would have become 6th class subject. Are you understanding? So please understand, we are using the Byter rate because we don't know the actual rate. When it comes to base quantity, we know the actual. We'll use the actual only. So actual base quantity consumed into budgeted rate, they given the name called as the absorbed overheads. They given the name called as the absorbed overheads. Are you understanding? So there are 3 different types of overheads. Number 1, budgeted overheads. Number 2, actual overheads. Number 3, absorbed overheads. Budgeted overheads, actual overheads, absorbed overheads. Budgeted overheads, overheads planned. Actual overheads, overheads incurred. Absorbed overheads, overheads accounted. Are you understanding? So look at this. There are 3 types of overheads. Types of overheads. There are 3 types. Budgeted overheads, absorbed overheads, actual overheads. So budgeted overheads is budgeted hours into budgeted rate. Actual overheads is actual hours into actual rate. Whereas absorbed overheads is actual hours into budgeted rate. Nothing but actual base quantity into budgeted rate. Are you understanding? Now one more name for the budgeted overheads is overheads planned. Absorbed overheads is overheads accounted. Actual overheads is overheads incurred. Are you understanding? All of you. Now, in our example, budgeted overheads is 3 lakhs. Absorbed overheads is 2,25,000. Actual overheads is 3 lakh. Listen to me carefully. Very, very important point I'm going to tell you. Listen to me carefully. First of all, this overheads incurred, how they'll get to know? From which books? From financial books. This overheads incurred will get to know from the financial books. Are you understanding? Because actuals will be accounted in the financial books. Actuals will be accounted in the financial books. As on 31st March, they'll close the financial books. Once they close the financial books, they'll get to know the overheads. Are you understanding? These actual overheads will get to know from the financial books. Whereas absorbed overheads has been accounted in the cost books. Are you understanding? All of you. Accounted overheads means in which books? I'm calling it as accounted overheads. In which books means cost books. There are 2 set of books which we learned elaborately in the cost ledger accounting. There are 2 set of books, financial books, cost books. Are you understanding? Now, when it comes to financial books, we'll get to know the actual overheads incurred. In cost book, there will be accounted overheads. By looking at that, tell me how much is the actual overheads? How much is the actual overheads? Or overheads incurred? 3 lakhs. The overheads incurred is 3 lakhs. How much is accounted in cost books? 2,25,000. How much is the under accounting? That is called under absorption. Are you understanding? All of you. At the end of the financial year, we are going to compare the actual overheads with the absorbed overheads or accounted overheads. In cost books, they accounted 2,25,000 because they are following budgeted rate. In cost books, they are following budgeted rate. So they accounted 2,25,000. Whereas in financial books, they are accounting 3 lakhs. That is the actual cost incurred. Which we need to account 3 lakhs or 2,25,000. 3 lakhs. Whatever the amount incurred, that is the cost. Are you understanding? So 3 lakhs is the cost. But what they accounted is 2,25,000. That is the error, mistake that we need to rectify. That rectification is called as the treatment of under or over absorption. Are you understanding? So first of all, there is the under accounting. How much is the under accounting? 75,000. How you got that 75,000? Difference between absorbed overheads and actual overheads. Difference between absorbed overheads and actual overheads. Are you understanding? So can I write like this? Under absorption equal to. Can I write under slash over absorption equal to under slash over absorption. Under slash over absorption equal to absorbed overheads minus actual overheads. Absorbed overheads minus actual overheads or accounted overheads. One more name for this is accounted overheads minus actual overheads. Accounted in which books? Cost books. Actual overheads from which books? Financial books. All of you have the clarity. Now tell me one thing. Absorbed overheads is greater than actual overheads. This portion is called what? Over absorption. This portion is called as the over absorption. Same absorbed overheads less than actual overhead. This point is called what? Under absorption. Are you understanding? All of you? Okay. So like this, we'll identify the over absorption, under absorption, and then we'll give the adjustment to that, which is called the treatment of under or over absorption. Clear? Understanding? Now, let us start with treatment of under slash over absorption. Treatment of under slash over absorption. So how to treat that means, before giving adjustment or before adjusting this under or over absorption, first we need to identify reason why there is a under or over absorption. Broadly classified into two reasons. Number one, due to wrong estimations made. Okay, let me take wrong estimations or normal increase in prices. Wrong estimations due to unavoidable reasons. So please understand, the first reason is, see, in our example under absorption is 75,000, correct? In our example under absorption is 75,000. Now we are identifying the reasons why there is a under absorption. Two reasons can be possible. One is wrong estimations due to unavoidable reasons or normal increase in prices. Second reason is abnormal reasons. Abnormal reasons, or we call it as any other reasons. Any other reasons. Are you understanding? Now, due to wrong estimation or normal increase in prices, this will be collected from the customers. This we are going to charge it to the customer. We are going to recover from the customers. Are you understanding? When you want to recover from the customer, we need to add it to the product. When you are considering it for the product valuation, we call it as which cost? If you are considering for the stock valuation, product cost. If the value is considered, if the cost is considered for the stock valuation, we call it a product cost. If the cost is not considered for the stock valuation, we call it as period cost. Due to normal increase in prices or wrong estimation, we are going to collect it from the customer. When you want to collect it from the customer, we need to charge it to the product. So we need to consider for the stock valuation. So that I am going to call it as the product cost. All of you clear? Now, abnormal reasons, we need to transfer to P&L. That means we are treating it as the period cost. Just as an example, out of 75,000, 15,000 is the period cost. 60,000 is the product cost. Are you understanding? 15,000 is the period cost and 60,000 is the product cost. Now this 15,000 will be transferred to P&L account. P&L account debit. It gets closed. Are you understanding? This 60,000 we need to consider for the stock valuation. When I say stock, there are three categories: stock of work in progress, stock of finished goods, and then goods sold. Stock of work in progress, stock of finished goods, goods sold. Are you understanding? Now the point is, stock of work in progress is 10,000, stock of finished goods is 5,000, and goods sold is 20,000. This work in progress 50% completed. This work in progress is 50% completed. Now tell me, this 60,000 rupees has to be recovered from the work in progress, finished goods stock, and goods sold. No, all the three. We have to recover from all the three. We have to charge it to all the three categories. Are you understanding? Now the point is, when you want to apportion between these three, what are the base available? Units. Are you understanding? What are the units of work in progress? 10,000. What are the units of finished goods? 5,000. What are the units of goods sold? 20,000. Tell me one thing. Can we add these three directly? Yes or no? No. Why? Work in progress is 50% completed, whereas finished goods and goods sold is 100% completed. How can you add 100% completed units with 50% completed units, which are dissimilar? 3 monkeys plus 4 donkeys equal to. These are too dissimilar. We cannot add. Are you understanding? So we have to add the similar items. So what we need to do? This is 100% completed. This is 100% completed, whereas this is 50% completed. Are you understanding? Now what I am going to do, this uncompleted units, I'll convert into completed units, which is called as equivalent units, which we are going to call it as the equivalent units. Are you understanding? So how to do that? 10,000 units, 50% completed, which equals to 5,000. Then 5,000, 100% completed, which comes to 5,000. 20,000, 100% completed, which comes to 20,000. Total 30,000. This 30,000 is called as the equivalent units. Are you understanding? What is the total cost that need to be recovered? 60,000. Total cost that need to be recovered is 60,000. ಏನಪ್ಪ ಅರ್ಥ ಆಗ್ತದಿಲ್ಲಪ್ಪ. Okay, now what I am going to do, this 60,000 divided by 30,000, which equals to rupees 2. The name for this 2 rupees is supplementary rate. The name for the 2 rupees is called the supplementary rate. So how to calculate supplementary rate means under or over absorption divided by base quantity. In this case, under or over absorption is 60,000. Base quantity is units. I'll have to clear about this. Understanding? Now, per unit, 2 rupees per equivalent unit. 2 rupees per equivalent unit. Now tell me, looking at here, this is work in progress, this is closing stock, this is goods sold. Work in progress. How many units are equivalent units? 5,000. 5,000 into 2, 10,000. Next, closing stock. 5,000. 5,000 into 2, 10,000. Goods sold. 20,000 into 2, 40,000. Total 60,000. 60,000 is accounted. Are you understanding? Total unaccounted is 75,000. Total unaccounted is 75,000. 15,000 accounted as period cost. 60,000 considered as product cost. Out of 60,000, according to our calculation, how much is charged to work in progress means 10,000. How much is charged to finished goods is 10,000. And how much is charged to goods sold is 40,000. All of it clear till now? Understanding? Now. Finally, last one what we need to write is profit impact. Impact on profit. Now, 75,000 is unaccounted in the cost books. If it is unaccounted, we are accounting now. If you account the cost, listen. If you account the cost, profit is going to be decreased or increased. If you account the cost, profit is going to be decreased or increased? Decreased. Are you understanding? How much it is going to decrease means to the extent of 15,000 and to the extent of goods sold. And unexpired to the extent of closing stock. Do you remember this? Unexpired to the extent of close. See, period cost will expire fully, 15,000. Whereas product cost will expire to the extent of goods sold and unexpired to the extent of closing stock. So how much is expired? 15,000 plus 40,000. How much is expired? 55,000. So how much it will decrease means 55,000 to the extent of expired cost. Are you understanding? Yes. All of you. So can I write profit impact equal to total under absorption minus unexpired cost? Can I write like this? Which equals to total under absorption is 75,000 minus unexpired cost is just about 20,000. 10,000 for the WIP and 10,000 for the closing stock. So how much is the expired cost? To this extent, the profit will be decreased. All of you understand? Yes. All of you clear about this? So this is about the treatment of under. First one is calculation of under absorption, and second one is treatment of under absorption. Okay, this entire procedure what I explained to you, I just give it in 5 points. You just copy that. It's so helpful to solve this kind of questions. Step by step I given. You just copy this. These 5 steps. Steps to be followed for under or absorption questions. Please copy these 5 steps.
In the primary distribution zone, if they give the overhead called sundries, How I'm supposed to apportion it?
That's what it is. Sundries means miscellaneous only. You don't know what is the expense included in that. So generally what they'll do in the institute study material is that either they'll take the machine hours, labor hours. If these two are not available, then they'll take the direct wages. That's what I told you. That you just observe that they would have given only for production department. That labor hours they would have given only for production department. That's what I mean. That sundries belongs to all the departments. How can you take only production departments? Are you understanding? So I already told you now. So when they're given for three production departments, don't take that. Take the direct wages only. So whenever there is a question from the under or over absorption, you follow step by step. You're able to solve that question. So first calculate the absorbed overheads. Second calculate the under or over absorption. Then when it comes to treatment, identify the reason. How much is because of the normal increase and how much is because of the abnormal reasons. And at last, calculate supplementary rate and calculate impact on the profit.
So this base quantity, what will be the base quantity supplementary?
Same labor hours, machine hours, anything. But normally here they're given the question units. You take the units as the base. There is one or two questions which is based on the hours. The hours is the way, hours take the hours. Here we took the example also 10,000 units has been taken. No? In that case, they give the hours in the WIP, hours in the finished goods, hours in the completed units. So you take the hours, units.
So like the equivalent units long equal.
No. Why to calculate? See, there is no 50% hours. No? 50% completed units will be there, but 50% completed hours will not be there. When they're given the hours information, don't take the equivalent hours, directly take the hours. I understand. See, 50% completed unit will be there, but how can be 50% working hours? It will not be there, no? If they're given the hours, directly take the total and apportion the cost. How many of you are still copying? Okay, now let us take one question based on this. Illustration 3. I think in your material What is the page number of this? ABC Limited. I think it is there in the practical questions. You don't found the question? 4.75. 4.75 is the page number. Study material 4.75. Okay, look at this. ABC Limited manufactures a single product and absorbs the production overheads at the predetermined rate of ₹10 per machine hour. Can you tell me what is the base quantity in this question? Machine hours. Machine hours is the base to absorb the overheads. Machine hours is the base to absorb the overheads. So here they give predetermined rate. Can I call it a budgeted rate? One more name for the budgeted rate is what? Predetermined rate. So budgeted rate equal to how much? 10 rupees per machine hour. This is the information given in the first paragraph. All of you clear? Next. At the end of current financial year, it has been found that actual production overheads incurred were 6 lakh rupees. What is the 6 lakhs? Actual overheads. It included 45,000 on account of return of obsolete stores, 30,000 being the wages paid for strike period under an award. This 45,000 is because of the obsolete stores. Means what? Outdated stock. That 45,000 has been wrongly included in this. Are you understanding? Next, 30,000 wages paid for the strike period. That is also form part of the labor cost, wrongly included in the 6 lakhs. Are you understanding? This 6 lakhs wrongly included by 45,000 and 30,000. So I have to exclude that. So actual overheads is not 6 lakhs. 6 lakhs minus 45,000 minus 30,000. Can you tell me the actual overheads? 5 lakh? 25,000 is the actual overheads. I'll have to clear about this. Next. The production and sales data for the current year is as under: production, finished goods, 20,000, work in progress, 8,000, 50% complete, sales, 18,000. Can you tell me closing stock of finished goods? Closing stock of finished goods, 2,000. Closing stock of finished goods is 2,000. Production is 20,000, sales is 18,000. Production is 20,000, sales is 18,000. So the closing stock is 2,000. Closing stock of WAP, 8,000. Can you tell me equivalent units of WAP? 4,000. Are you understanding? Equivalent units of WAP is 4,000. Closing stock is 2,000. Goods sold 18,000. Total comes to 24,000. 24,000 is the equivalent units. Are you understanding? In place of units, if they given the hours, directly take the total. There is no concept of equivalent hours. Are you understanding? Okay, now. The actual machine hours worked during the period were 48,000. This is the actual machine hours. Next. It has been found that 1/3 of the under-absorption of production overheads was due to lack of production planning. 1/3 of the under-absorption. 1/3 of the under-absorption was due to production overheads was due to lack of production planning, and the rest was attributable to normal increase in cost. Are you understanding? Okay, now. What is the actual overheads we calculated? 5 lakh? No, 25. 5 lakh 25,000. Correct? Actual overheads is 5 lakh 25,000. How to calculate absorbed overheads? Actual machine hours into budgeted rate. Actual machine hours is 48,000 into budgeted rate is 10, which equals to 4 lakh 80,000. Now absorbed overheads is 4 lakh 80,000. Actual overheads is 5 lakh 25,000. Under absorption or over absorption? Under absorption. Under absorption equal to 4 lakh 80,000 minus 5 lakh 25,000. 45,000. This 45,000 divided into 2. Normal increase in price and due to lack of production planning. Normal increase in price. See here. 1/3 is due to lack of production planning. So 1/3 of 45,000 is 15,000. And 2/3 is 30,000. This is due to normal increase in cost. If it is due to normal increase in cost, we'll classify it as product cost or period cost. Product cost. Normal increase in prices or wrong estimations, we'll classify it as product cost. If it is due to any other reason, we'll classify it as period cost, and this will be transferred to P&L account. This 30,000 treated as product cost. Treated as product cost. This 30,000, using this 30,000, we are going to calculate supplementary rate. How to calculate supplementary rate? Supplementary rate equal to 30,000 divided by equivalent units. What is the equivalent unit? 24,000. So 30,000 divided by 24,000. How much it comes to? 1.20. 25, I'm sorry. 1.25. Using this 1.25, we'll charge it to WAP, finished goods, goods sold. And then we'll write the impact on the profit. So that is what they're asking. Look at the requirement. Amount of under absorption. We calculated 45,000 is the under absorption. Then they're calculating accounting treatment. So accounting treatment, treating it as product cost and period cost, and calculating the supplementary rate charging to the goods. All of you clear about this? So as I told you, go step by step. I given you 5 steps. You just to go step by step, you're able to get the right answer. Clear? Okay. Now, the last time they asked this for 8 marks in the last attempt. In the attempt of September. Are understanding? Okay. So this attempt barala sir. Hela kagala. Don't take like that. Okay. So the major content got over. That is the under or over absorption. All of you clear? Okay. Now, one more concept in this topic is machine hour rate. One more topic is machine hour rate. What this machine hour rate means? Suppose if you take a factory. If you take a factory, there are n number of machines. This is machine 1. This is machine 2. This is machine 3. This is machine 4. Like this, different machines are there in the factory. Management wants to know how much is the cost incurred to operate machine 1 for 1 hour time. That is called the machine hour rate. What is machine hour rate means? In this case, see, don't get confused between machine hour rate, what we calculate in the absorption, and machine hour rate, what we are calculating here. In absorption, what we calculate is machine hour rate equal to overhead divided by machine hours. This is different. What I am discussing is different. Many people confuse between these two. Here, suppose if you are getting 10 rupees per machine hour, what is the meaning of this? Overheads per machine hour is 10 rupees. Are you understanding? Overhead divided by machine hour. I am getting 10 rupees. What is the meaning of that? Overhead per machine hour is 10 rupees. Here what I am calculating machine hour rate equal, let me take an example, 50 rupees. What is this 50 rupees means? 50 rupees is the expense incurred to operate the machine 1 for 1 hour time. This is totally different. Don't get confused between these two. Are you understanding? All of you. So here what we calculate is absorption rate. Here what we calculate is machine expense per machine hour. Machine expense per machine hour. Are you understanding? Now, when I say machine 1, can you tell me what all the expense possible to incur on the machine 1? What are the expense possible for the machine 1 operation? Power, fuel, insurance of machinery, super, labor, operating labor, the labor who are operating the machine 1. Are you understanding? All of next. Raw material is direct material, no? That not form part of the machine. I am telling you to operate the machine. To operate the machine, what is the expense? Repairs and maintenance, depreciation. Are you understanding? So these are all the expense incurred for the machine 1. We'll make the total. We'll get the total expense for machine 1. Can I say like that? If you make a total per month basis or yearly basis, according to given information. If it is yearly basis, take the total. Total machine expenses of machine 1 per annum. Divide by machine hours. We get expense incurred to operate for 1 hour time. Let me take an example. Machine 1 total expenses is 10 lakh rupees. Machine 1 total expenses 10 lakh rupees. 10 lakh rupees per annum. 10 lakh rupees per annum. In 1 year time, they are operating for 5 lakh hours. 5 lakh hours is not possible. 50,000 hours. In 1 year time, they are operating 50,000 hours. Can you tell me per hour? Can you tell me per hour? Rupees 20 per hour. What is the meaning of this? 20 rupees is the expense to operate the machine for 1 hour time. Are you understanding? One mission. See, if you take our ICI building, there are n number of rooms. We are running crash course in this room. So they want to know what is the expense incurred to operate this room for 1 hour time. What are all expense they'll take? All these lighting charges, faculty fee, and then rent paid for this one room. So they'll make the total. Divide by how many hours the room has been operated. We'll get expense incurred to operate this room for 1 hour time. Are you understanding? So same way they'll calculate machine 1 machine hour rate, machine 2 machine hour rate, machine 3 machine hour rate, machine 4 machine hour rate. All the 4 machines will do the same operation. Let me take just example. All the 4 machines will do the same operation. Now let me take an example. Machine hour rate of machine 1 is rupees 20, what we calculated. Machine 2 is 25. Machine 4 is 15. Machine 3 is 45. All the machines will have the same operating ability, same capacity, but cost is different, sir. Please understand, when it is newly purchased machine, the cost will be less. Old machine, the cost will be more. I understand. Now tell me, whenever you want to produce the product, what the first preferable machine? Look at this. What is the first preferable machine? No, you just look at the example. M1, M2, M3, M4. Which is the first preferable machine? Machine 4, 15 rupees. What is the last preference? M3, 45. Are you understand? This is how they can make the decision when they want to produce the product. So first they will occupy the machine 4. Then they will go for the machine 1. Then they will go for the machine 2. Lastly, they will go for the machine 3. Are you understanding? That is the helpfulness of the machine hour rate, what we calculated. All of it clear? Very simple concept. Take the total divided by machine hours. But they'll give you the information different forms, which confuse you. Some of the information given per annum, some information given 6 months, some information given per month. Make it common. Convert everything to per annum. Are you understanding? All of you? Okay? Now, let us do one question based on this. By this, the topic will get over. Question number 4. A machine shop has 8 identical drilling machines manned by 6 operators. How many machines are there? 8. Managed by how many operators? 6. So that means 8 machines are there, but 6 operators are operating. Okay, now the machine cannot be worked without an operator wholly engaged on it. This point makes sense. The machine cannot be worked without an operator wholly engaged on it. That means whenever the machine is working, operator has to work. Otherwise, machine cannot work. It is just like a driver driving the bus or JCB operator operating the JCB. Are you understanding? So, if the operator is not wholly engaged, the machine will not be under function. All of you clear? Now, 6 operators can operate how many machines? 6. 2 machines will be idle. Are you understanding? So, they have the 8 identical drilling machines. You would have seen the drilling machines. Correct? Sometimes the machine will be idle only. At different locations, they have different. I mean, at 8 machines will not be at same location. Will be there at different locations. According to the requirement, they will operate. All of you clear? Next. The original cost of all these machines comes to 8 lakhs. These particulars are furnished for a 6 months period. Be careful with the period. This is for 6 months period. They given normal available hours per month 208. Absenteeism without pay hours 18. Leave with pay hours 20. Normal idle time unavoidable hours 10. So this information. Okay. This information per month. Remaining all these things is for the 6 months. Please be careful. See here. They given these particulars are furnished for a 6 months period. All the information is 6 months period. But one information they specifically mentioned per month. Specific will prevail over general. Specific will prevail over general. Specifically they mention per month. We have to take it per month. Remaining all the information will be taken 6 months. Are you understanding? Okay. Now, next. Average rate of wages per worker for 8 hours a day is 800 rupees. Can you tell me hourly rate? Can you tell me hourly rate? 100. For 8 hours, 800 means per hour, 100 rupees. Next. Production bonus estimated 15% on wages. Value of power consumed 80,500. Supervision and indirect labor 33,000. Lighting and electricity 12,000. All this information is for 6 months time. On the top of the table mentioned. What is the page number of this question? It's not there. I think it is there. It is there. 4.72. It is there. All are study material questions only. 4.72. You got it? Yeah. Next. These particulars are for a year. So some of the information given 6 months and some of the information given per annum. So what is the information given per annum? Repairs and maintenance including consumables 3% of value of machine. Insurance 40,000. Depreciation 10% of original cost. Other sundry work expenses 12,000. General management expenses allocated 54,530. This everything is per annum. Now you are required to compute comprehensive machinery rate of the machine shop. They use the word called comprehensive machinery rate. See, when they use the word comprehensive machinery rate along with the machine expenses, it includes operator wages also. Are you understanding? Okay. Now what we need to do? Take the total of all the expenses. Now the point is, some of the information is per annum. Some of the information is 6 months. What we need to do? We need to convert everything to per annum. It's better to convert to per annum. Are you understanding? All of it. Now, what we'll do? First, we'll calculate the machine expenses one by one. Now, listen to me carefully. I hope you understand the question. Now, first of all, we need to calculate the operator wages. How many operators are working? 6 operators. According to given information, how many days in a month? No. How many days they are working? Okay, fine. I'll tell you. The point is, normal available hours per month is 208, correct? Now, here we need to calculate the operator wages. First, we need to discuss about the operator wages. How to calculate operator wages? There are two bases to calculate the wages. Either it is piece basis or time basis. According to given information, what can be taken as base? Time basis. What is the formula? Hours worked into hourly rate or hours paid. Actually, we have to take hours paid into hourly rate. Our understanding, just now we discussed hourly rate. How much is the hourly rate? 100 rupees. Are you understanding? Now we need to calculate hours paid per annum. Hours paid per annum for the 6 operators. Hours paid per annum for the 6 operators. See, comprehensive machinery rate of the machine shop. For the entire shop they are asking. It is not for one single machine. This is also one more important point. Sometimes they will ask you for single machine. Sometimes they will ask you for the entire shop. When they are asking for the entire shop, take the total data. When they are asking for single machine, take the single machine data. See, concept is very simple, but they'll try to confuse you with different kind of questions. Try to have the clarity. Ultimately, asking is machinery rate. Machinery rate can be calculated for the entire shop, or it can be calculated for one single machine. In this question, they are asking for the shop or for single machine. Shop. When they mention for shop, we have to take the total expense of the shop. Are you understanding? Now tell me. See, here we need to take hours paid. According to given information, 208 hours is per month. Correct? Available hours. This is the available hours per month. That means in 1 month time, available to work is 208. Sir, what is this? I'll tell you the example. What is the available hours for the casting crash course means 18. Available hours for the casting crash course is 18. Each day 6 hours, 3 days, 18 hours. Available hours. I understand. In that, how much we are working means maybe 1 hour here and there will happen. Are you understanding? Normally, how many hours available? 208 into how many months? 12 months. Are you understand? So 208 into 12. 2,496. 2,496 hours. Are you understanding? Into how many operators? Okay, before going to that, 2,496 hours available. 2,496 hours available. Now tell me, for how many hours they are not going to receive the payment? For how many hours they are not going to receive the payment? 18 hours. For 18 hours they are not going to receive the payment. Are you understanding? Because absenteeism without pay. They are not going to pay the money. The company is not going to pay the money. The company is not going to pay the money. So 2,496 minus 18, how much it comes to? Correct. 18 into 2, correct. How much it comes to? I'm sorry, 18 into 2, how much it comes to? 36. What is the net? 2,460. 2,460 hours is the hours paid per worker. Hours paid per operator. Are you understanding? How many operators? 6 operators. So 2,460 into 6 operators. 14,000. Have you understand this? All of you. So 14,760 is the total hours paid. I'm repeating again. First, what we done? We taken per month available hours is 208. Into how many months? 12 months. So we got 2,496. Absenteeism without pay is only 18 hours for 6 months time. For 1 year means into 2, 36. So 2,496 minus 36, 2,460 into how many operators? 6 operators. Okay, I'll write the calculation here. 208 into 12 minus 36 into 6 operators. This is the calculation. Are you understanding? We'll get 14,760. 14,760 into hourly rate 100, which comes to 1 crore 47 lakh. Sorry, I'm sorry, 14 lakh. 14 lakh 76,000 is the operator wages. Are you understanding? Plus 15% production bonus. For this, we need to add the 15% as the production bonus. We'll get the total amount paid to the workers. All of you clear till now? Anyone has a doubt? Okay, now. So by this, we can set the wages, production bonus. Next, value of power consumed 80,500 per 6 months time. For 1 year, 1,60,000. Sorry, 1,61,000. 1,61,000. Correct? Next, supervision and indirect labor 33,000 into 2, 66,000. 12,000 per 6 months. So 24,000 per annum. So if you make a total. Now, apart from that, repairs and maintenance 3% of the value of machine. What is the value of machine? 8 lakhs. 8 lakhs into 3%. 24,000. Are you understanding? Next, insurance 40,000. Depreciation 10%. 80,000. Other sundry work expenses 12,000. General management expense allocated 54,530. If you make a total, we get the total machine expenses. How much is the total, pa? How much? 21 lakh. You would have getting the material now. How much is the total? 4.72 is the page number, I think. 21 lakh 58,930. Have you understand this calculation? All of you? Okay, now. So 21 lakh 58,930 is the total machine expenses. Doubt? Any doubt? Any doubt? You only. You. Okay, now. 21 lakh 58,930 divided by machine hours. Let us see how to calculate the machine hours. Now tell me, in this question, had they given the machine hours? In this question, had they given the machine hours? Yes or no? Answer is no. Where are they given the machine hours? They given only available hours. I understand, but the point, I highlighted that. This highlighted point is very important in this question. The machine cannot be worked without an operator wholly engaged on it. Can I say machine working hours? Sorry, operator working hours is equal to machine hours. Can I say like that? Because operator is wholly engaged on it. So what I mean to say, in this question, they didn't give the machine hours specifically. They give indirectly. Operator working hours is equal to machine hours. Are you understanding? Now, first of all, tell me total available hours is how many hours? 2,496 total. Correct? Okay, fine. 2,496 is the total available hours. How you are getting 208 into 208 into 12 months. 208 into 12 months. How much it comes to? 2,496. This is the total available hours. In this, how many hours they are not working in 6 months time? Tell me how many hours they are not working in 6 months time. How many hours they are not working? 48. Sum of this. 18 hours absenteeism without pay. 20 hours leave with pay. 10 hours normal idle time. In all the 3 cases, they are not working. Absenteeism with pay, absenteeism without pay, whatever it is, they are absent. Idle time, we know that there is no production during that time. There is no work. Are you understanding? These 3 hours, these 3 types of hours, they are not working. So totally, how many hours they are not working means 48 hours for 6 months time. For 1 year time, 96 hours. 96 hours they are not working. Effectively, they are working for 2,400. Effectively, they are working for 2,400. Are you understanding? So this 2,400 is the working hours of the operator, which is nothing but machine hours. So 21,58,933 divided by 2,400, which equals to 800 and 900. 0.55, take it as 900. 900 per hour. Have you understand this? What happened? Any different there? What is the answer there? No, what? How many hours they taken? Oh, sorry. 6 operator. We have to do, na? 2,400 per operator. 2,400 into 6. 2,400 into 6. I'm sorry. 2,400 into 6. 14,400. Now tell me the per hour. Correct? 150 you can take. Are you understanding this? All of you. So I forgot to multiply with the 6 operators. Okay. So total working is 14,400. So you'll get 150. All of you clear about this? Understood? So this is about the machinery. One of the important topic, overheads. So basically it is their primary distribution, secondary distribution, absorption, under over absorption, machinery. These are the 5 topics in this chapter. We discuss all the 5 topics. Clear? Fine. From now onward, let's discuss some easy topics. Let us start with the activity-based costing. In short, we'll call it as ABC costing. So please understand, this topic is ditto similar to the overheads. The only difference is, in overheads chapter, overheads will be charged to the departments. From department will charge it to the product. From department will charge it to the product. This approach is called the traditional costing system. They given the name called the traditional costing system, which is called TCS. Are you understanding? So overheads will be charged to departments: production department, service department, from service department to production department, from there to product. So this is called the traditional costing system, which is the TCS. Next, when it comes to activity based costing system, overheads will be charged to activity. In place of department, we charge it to activity. From the activity, we charge it to the product. From the activity, we charge it to the product. Are you understanding all of it? This is the only difference between activity-based costing system and traditional costing system. This is called as ABC costing. This is called as the ABC costing. In activity-based costing system, they are not asking you to evaluate the product. They'll always ask you as a question to charge it to the activity. That is one thing. And they'll ask you to calculate absorption rate of each activity. Are you understanding? First, overheads should be charged to the activity. First, overheads should be charged to the activity on certain basis. Are you understanding? They'll be giving the different activities and cost driver basis. They'll call it as cost driver. Are you understanding? For each activity, they'll give the cost driver. Using that cost driver, calculate the absorption rate. So by that, your question is done. So they never ask you to absorb the overheads in the activity-based costing system. They'll always ask you calculate the overheads of the each activity and calculate the absorption rate of the each activity. They'll give you the amounts. They'll give the overhead amounts and they'll ask you to apportion to the activities. Are you understanding? All of you. There is nothing much to discuss about the activity-based costing system. It's all about apportioning overheads to the activities. Apportioning overheads to the activities. All of you clear about this? Understanding? Okay, now look at here. Illustration 1. It is there in your book. Illustration 1. Look at this question. ABC Limited is a multi-product company manufacturing 3 products A, B and C. The budgeted cost and production for the year ending 31st March are as follows. Now, first of all, tell me how many products the company is manufacturing? 3. What are the names? A, B, C. What they given is budgeted cost and production. If you look at A, how many units produced? 4,000. B, 3,000. C, 1,600. Resources per unit. Direct material 4 kgs for A, 6 kgs for B, 3 kgs for C. Direct labor 30 minutes for A, 45 minutes for B, 60 minutes for C. This is the information given. Next. Budgeted direct labor rate 10 rupees per hour and budgeted material cost 2 rupees per kg. Production overheads were budgeted at 99,450 and were absorbed to products using the direct labor hour rate. Listen. Production overheads were budgeted 99,450. Absorbed to the products using what? Labor hour rate. So labor hours is the base quantity. Are you understanding? Labor hours is the base quantity. Next. APC Limited followed absorption costing system. At present, they are following absorption costing system, which is called a traditional costing system. Absorption costing system is also called traditional costing system. Are you understanding? Next. APC Limited is now considering to adopt an activity-based costing system. The following additional information is made available for this purpose. So now what happened? Initially, the ABC Limited is following traditional costing system or absorption costing system. Now they are planning to change it to the activity-based costing system. So they given the information belongs to that. What is the information here? Budgeted overheads are analyzed into the following: material handling, storage cost, electricity. If you make a total, that will be equal to 99,450. The same 99,450 they identified activity-wise. Are you understanding? How many activities are there? 3. What are the 3 activities? Material handling, storage cost, electricity. Are you understanding? Next. Cost driver. I told you now this is the basis. One more name for the basis, cost driver. The cost driver of the material handling activity is weight of material handled. The cost driver of storage cost is number of batches of material. The cost driver of electricity is number of machine operations. Are you understanding? Now, data on cost drivers was as follows: ABC. For complete production, batches of material 10 batches, 5 batches, 15 batches. Next, per unit of production, number of machine operations 6, 3, 2. This is per unit. Be careful. They given per unit of production, number of machine operations required for A is 6, B is 3, C is 2 per unit into number of units. We'll get the total operations of A, total operations of B, total operations of C. Are you understanding? All of you. I'm repeating again. First of all, what is happening? The company is following the traditional costing system or absorption costing system. Now they're changing it to the activity-based costing system. Under activity-based costing system, they identify 3 activities. What are the 3 activities? Material handling, storage cost, electricity. And for these 3 activities, they identified the cost driver. And for the 3 activities, they identified the cost driver. What is the cost driver of material handling? Weight of the material. Next. What is the cost driver for the storage cost? Number of batches of material, electricity, number of machine operations. Are understanding? Now, when it comes to number of machine operations, here they given per unit. We need to take total number of machine operations. How to calculate total? How many units of A produced? 4,000. B, 3,000. C, 1,600. So, here 6 into 4,000, 3 into 3,000, 2 into 1,600. We'll get the total machine operations. Now tell me 6 into 4,000, 3 into 3,000, 2 into 1,600. Total 36,200 is the machine operations. Are you understanding? Next. Can you tell me weight of the material handled? Look at here. A requires 4 kg, B requires 6 kg, C requires 3 kg. 4 kg into 4,000, 6 kg into 3,000, 3 kg into 1,600. How much it comes to? This is 16,000 kgs. This is 18,000 kgs. This is 4,800. Total 38,800. So weight of the material is 38,800. Are you understanding? So number of machine operations is 36,200. 36,200. All of you understanding this? Are you understanding this? Next. Batches. batches of material 10, 5, 15 directly given for complete production. For complete production, A require 10 batches, B require 5 batches, C require 15 batches. So 10, 5, 15 total batches is 30 batches. We know the overheads, we know the base quantity, calculate the absorption rate. All of you clear about this? Understanding. So what they are asking now, you are required to prepare a statement for management showing that unit cost and total cost of each product using the absorption costing method. First they are asking to follow the absorption costing. Under absorption costing method, what is the basis? Labor hours. Are you understanding? So overheads is 99,450 labor hours. We need to calculate the labor hours. How to calculate the labor hours? Look at here. Here they given direct labor minutes per unit. Direct labor minutes per unit. So 30 minutes into 4,000 will get the total minutes divided by 60. Are you understand? I am repeating again. 4,000 units into 30 minutes divided by 60 minutes will get hours. How many hours? 2,000 hours. Next. 3,000 into 45 divided by 60. 2250. 1,600 into 60 divided by 60. 1,600. Total comes to 5,850. 5,850 hours. Are you understanding? Are you understanding or not? Anyone want to repeat this again? Anyone want to repeat this again? Shall we continue? Yeah. 5,850 hours. Total overheads is 99,450 divided by 5,850 hours, which equals 17. 17 per labor. 17 per labor. Now what they are asking? They are asking to calculate unit cost. Unit cost means material, labor, overheads. Are you understanding? First let me take A. If you take A require how many kgs? A require how many kgs? 4 kgs. 4 kgs into each kg how much? 2 rupees. Here it is. 2 rupees per kg. Are you understanding? So, 4 kgs into 2 rupees, 8 rupees. When it comes to labor cost, how much is per hour? 10 rupees. Now 30 minutes. Okay, I'll do one thing. Rupees 10 into 30 minutes divided by 60 minutes, which equals to 5. We'll get the prime cost. How much is the prime cost? 13 rupees. Are you understanding? We need to add overheads. Overhead per hour is how much? 17. So 17 rupees into 30 divided by 60. How much it comes to? 8.5. Now total comes to 21.5. This is the per unit cost of A. Like this we'll calculate B, C. Total cost means into units. Total cost means into units. Are you understanding? All of you. So that is the first requirement. Next. Prepare statement for management showing product cost of each product using ABC costing. When you follow the ABC costing, there are 3 activities: material handling, storage, and then electricity. If you want to calculate the same A, let's see how to calculate A. First material 8 rupees, labor 5 rupees. These two will not change. Prime cost is how much? 13. When it comes to overheads, first we need to take material handling cost. When it comes to material handling, what is the base? Weight. What is the base? Weight. Are you understanding? Now tell me, weight is 38,800, overheads is 29,100. Can you tell me how much is per kg? Can you tell me how much is per kg? 29,100 divided by 38,800, which equals to 0.75 per kg. Correct? Next, 31,200 divided by 30 batches. Can you tell me per batch? 1040 per batch. Correct? Next, 39,150 divided by number of machine operations. 36,200. Can you tell me how much is per batch? 1.08 per operation. Correct? Using this absorption rate, we'll absorb it to product A, product B, product C. Are you understanding? All of you. So product A, 0.75 per kg. A is consuming how many kgs? 4 kgs. Correct? A is consuming 4 kgs. So 4 into 0.75. How much it comes to? 3. That is the material handling cost. That is the material handling cost. Are you understanding? Next, storage cost. When it comes to storage cost, 1040 per batch. A require how many batches? 10 batches. 10 into 1040. 10,400. Divided by how many units? 400 units. Sorry, 4,000 units. So please understand here slightly we are deviating 1040 per batch. So what we need to do into number of batches of A. How many batches of A? 10 batches. So 1040 into 10, 10,400 divided by how many units? 4,000 units. Can you tell me per unit? I am writing here 1040 into 10 batches divided by 4,000 units, which equals to 2.6. 2.6 per unit. Are you understanding? Same way we will calculate electricity. When it comes to electricity per movement, per machine operation, per machine operation is 1.08. A require how many operations? 6. So 6 into 1.08. 6 into 1.08. How much? 6.48. Total? 13, 3, 16, 18.6, 48. No? 28. 16 plus 2, 18, 18 plus 6, 24, 25.08. This is the right answer. Are you understanding? All of you. Now, according to absorption cost, how much you are getting? 21.5. According to absorption costing, 21.5. According to activity based costing, 25.08. Which is accurate? ABC is more accurate compared to absorption. ABC is more accurate. Are you understanding? See, I cannot explain you why now because we don't have the time. But please understand, ABC is more accurate compared to activity based costing. All of you clear about this? Okay. Sorry, ABC is more accurate compared to absorption cost, not activity based, absorption costing. Now, last requirement, state what are the reasons for the different product cost under two approaches. Why there is a difference? Overheads, because of overheads. Prime cost is same, 13 rupees, 13 rupees. Look at here. Here 13 rupees. Here also 13 rupees. The difference happened because of the overhead absorption. All of you clear? Understood? Next. Illustration 4 in your material. Illustration 4. What is the name of the bank? Hamara Apna Bank. Okay, look at this. Hamara Apna Bank offer three products. Deposits, loans, credit cards. For the bank, these are the selling products, correct? From the bank perception, deposits, loans, credit cards are the products. Are you understanding? Next, the bank has selected 4 activities for a detailed budgeting exercise following activity-based costing method. The bank wants to know, so how many products are there? 3. How many activities are there? 4. Are you understanding? Products are 3. Deposits, loans, credit cards. Activities, they haven't given the names. Look into that. The bank wants to know product-wise total cost per unit for the selected activities so that prices may be fixed accordingly. The following information is made available to formulate the budget. So what is the following information is made available to formulate the budget. They given the activity, present cost, estimated cost. Please understand, they given the activity detail, present cost and estimated cost. Look at the first activity. What is the first activity? ATM services. When it comes to ATM services, it has maintenance of machine, rent, currency replacement cost. See, first activity is ATM services. The bank is providing ATM services. That is the first activity. Within that activity, there are different expenses. What is the different expenses means? Machine maintenance, rent, currency replacement. Machine maintenance, what is the present cost? 4 lakhs. Rent, what is the present cost? 2 lakhs. Currency replacement, what is the present cost? 1 lakh. I don't know, what is the page number in your study material? 5.27. Okay. Here, present cost is 4 lakhs. All fixed, no change. In the estimation also no change. So, how much I will take? Rent is 2 lakhs, fully fixed, no change. Here also we'll take currency replacement, presently 1 lakh. Expected to double during the budget period. What the total comes to? 8 lakhs is the total for the ATM services. Planned. Planned is 8 lakhs. Actual is, or present is 7 lakhs. Presently it is 7 lakhs, but planned is 8 lakhs. Are you understanding? Okay, next. Same way. This activity is driven by number of ATM transactions. So, number of ATM transactions is the basis. Number of ATM transactions is the basis for the ATM services. Are you understanding? All of you. So, they given the activity name and they given the present cost details and they given the estimation cost basis and they given the cost driver. All of you clear about this information? Now, what is the second activity? Computer processing. What is the present cost? 5 lakh. What is the cost driver for this? Cost driver. What is the cost? Computer transactions. Number of computer. There it is number of ATM transactions. Here it is number of computer transactions. Are you understanding? When it comes to planned cost, half this amount is fixed. No change. So, 5 lakhs they divide into 2. 2.5 lakhs. 2.5 lakhs. This is fixed. No change. Are you understanding? Next. The variable portion. This one. The variable portion is expected to increase 3 times the current level. Into 3 times. How much it comes to? 7.5 lakhs. Total is how much? 10 lakhs. Are you understanding? 5 lakhs divided into 2. Variable fixed. Fixed is constant. No change. 2.5 lakhs. Variable is increased by 3 times. So 2.5 into 3 7.5. Fixed of 2.5. Variable of 7.5. 2.5 fixed. 7.5 variable. Total 10 lakhs. Have you understand this? So estimation is 10 lakhs. Next. What is the next activity? Issuing statements. Issuing bank statement. The meaning is issuing bank statements. How many statements? What is the value present? 18 lakhs. What is the activity for that? What is the cost driver? Number of statements. Are you following? Next. What are they given? Presently, 3 lakh statements are made. In the budget period, 5 lakh statements are expected. Presently, they are issuing 3 lakhs. But in the budget period, they are expecting 5 lakhs. For every increase of 1 lakh statements, 1 lakh rupees is the budgeted increase. Now tell me, what is the increase in number of statements? What is the increase in number of statements? 2 lakhs. 3 lakhs become 5 lakhs. Good morning, yaar. Are you following the discussion? See, I'm little bit fast only because no option. Try to understand, but follow the discussion. Follow the discussion. Are you understanding? Now, presently 3 lakh statements issued, but in the budget period they're planning 5 lakhs. What is the increase in statements? 2 lakhs. For every 1 lakh statements, extra cost is 1 lakh. For 2 lakh statements, extra cost is 2 lakhs. So present cost is 18 lakhs. 18 lakhs plus 2 lakhs, 20 lakhs. Are you understanding?
Yes.
All of you? Okay, next. Computer inquiries. What is the present cost? 2 lakhs. What is the cost driver? Telephone minutes. Estimated to increase by 80% during the budget period. So 2 lakhs plus 80%. Correct? How much it comes to? 3 lakhs 60,000. So everywhere we calculated the cost of budgeted period. And we know the cost driver. And we know the number of products. How many products? 3. What are the 3 products? Deposits, loans, credit cards. Around 3 products, 4 activities. And for 4 activities, they given the estimated cost and they given the cost drivers also. All of you clear? Now look at here. The activity drivers and their budgeted quantities are given below. When it comes to ATM transactions, deposits 1,50,000, 50,000. Okay. Tell me number of ATM transactions total. 2 lakhs is the total. For ATM it is, for deposits it is 1,50,000. For credit cards it is 50,000. Tell me total of number of computer processing transactions. 20 lakhs. Total of number of statements. Total of telephone minutes. 7,20,000. We know total as well as product wise. We know total as well as product wise. Are you understanding? Yeah. Look at the requirement now. Let us look at requirement one by one. Now, the bank budgets a volume of 58,600 deposits. 58,600 deposits. 13,000 loan accounts. 14,000 credit cards. Are you understanding? These are the products. Total quantity of the products. See, this question is slightly confusing. We need to have the clarity. I'm telling you again and again, 3 products, 4 activities. 3 products, 4 activities. Products are deposits, loans, credit cards. Activities are ATM transactions, computer processing transactions, and issuing statements, and last one, computer inquiries. These are the 4 activities, 3 products. 3 products total is 58,600, 13,000, 14,000. 4 activities total is 2 lakhs, 20 lakhs, 5,000, 720,000. Are you understanding? All of you? Okay, next. Calculate budgeted rate of each activity. Budgeted rate of each activity. How to calculate budgeted rate? Budgeted overhead divided by budgeted base quantity. Budgeted overhead divided by budgeted base quantity. They are asking for each activity. What is the first activity? ATM transactions or ATM services. Are you understanding? ATM services. What is the estimation cost? Look at here. 8 lakhs. Divided by what is the transaction? Number of transactions? 2 lakh. So here we'll take 8 lakh divided by 2 lakh. How much it comes to? 4 per transaction. Like this we'll calculate issuing statements, computer inquiries, and then what is one more one? Computer processing. Computer processing 10 lakh. 10 lakh divided by 20 lakhs, 0.5. Next, 20 lakhs divided by 5 lakh, 4 rupees. 3 lakh 60,000 divided by 7 lakh 20,000, 0.5. Are you understanding? So we are getting 4.5, 4.5. Super. All of you clear about this? Next, we're done with the first one. Second one, prepare the budgeted cost statement activity wise. Prepare budgeted cost statement activity wise. Actually, we already calculated that. Budgeted cost activity wise. We calculated now. So actually, it is ulta. It should be like this. First, they should ask this, second, this. But they ask it ulta. First, they would have asked budgeted cost and they would have asked budgeted rate. But they ask budgeted rate first and then budgeted cost next. Are you understanding? We already calculated that 10 lakh, 20 lakh, 5 lakh. What we get is the budgeted cost of activity. Clear? Next. Compute the, listen. Compute the budgeted product cost per account for each product using 1 and 2 above. They are asking budgeted product cost per account. Budgeted product cost per account. Do you know the number of accounts of deposits? Number of accounts of loans? Number of accounts of credit cards? So we know number of accounts. We need to know the cost of deposits, cost of loans, cost of credit cards. How to calculate that? See here. This is the basis. We already calculated per transaction 4 rupees. Correct? ATM transaction per transaction 4 rupees. Computer processing 0.5 per transaction. Number of statement 4 rupees per statement. Telephone minute 0.5 per telephone minute. That is the first requirement. 4.5, 4.5 here. Are you understanding? Now tell me, out of 2 lakh, how many transactions happened by deposits? 1,50,000 into 4. Correct. Next, computer processing 15 lakh into 0.5. Number of statement 3,50,000 into 4. Telephone minutes 3,60,000 into 0.5. If you make a total, we'll get the total cost of deposits. Are you understanding? How many deposit accounts? 58,600. So divided by 58,600, we'll get per account. Are you understanding? So here slightly confusing. You need to have the clarity between the activities and products. Clear? So by this we're done with the activity based costing. Take a break for 5 minutes. We'll continue. Now the time is 12:12. We'll start by 12:17. Let us start with the next topic. Cost accounting system. First of all, tell me, does all the companies require to maintain the cost books? Yes or no? Answer is no. Does all the companies require to maintain the financial books? Answer is yes. So please understand, every company has to maintain the financial books. But few companies required to maintain the cost books. Sir, which are those companies? The companies notified by the central government. The companies which are notified by the central government has to maintain the cost books. Voluntarily, if they want to maintain the cost book, they can. But compulsion is there when the company is notified by the central government. When the company is notified by the central government, they have to maintain the cost books. Along with that, they have to maintain the financial books. So now, to maintain the cost books, there are two approaches. One is non-integrated. And one more thing is integrated. When I say non-integrated, two set of books will be maintained. One set is for the cost and one more set is for the financial. This is called non-integrated system. Are you understanding? So under non-integrated system, we will maintain two sets: cost books, financial books. Under integrated system, we are going to club both. We are going to club the both financial books as well as the cost books, which is called integration clubbing. Are you understanding? Here only one set of books. Now, when they follow non-integrated system, they will maintain cost books separately, financial books separately. Cost books will give cost to profit according to costing P&L. Financial books will give financial profit according to financial P&L statement, P&L account. Now, here we have only one profit, which is financial profit. Are you understanding? Now, the point is, when they have two profits, when they are reporting cost to profit according to cost books and financial profit according to financial books, there will be some difference. That difference we need to reconcile, which is called as the reconciliation statement of cost to profit and financial profit. Are you understanding? So please understand, reconciliation statement will be there only in case of the non-integrated system. In case of integrated system, there will be no reconciliation because we are reporting only one single profit. Two profits reported in case of non-integrated system. Are you understanding? Now, when it comes to that means totally we are going to discuss three concepts. Number one, non-integrated system. Number two, integrated system. Number three, reconciliation of the cost profit and financial profit. These are the three concepts which we are going to discuss in this chapter. Clear? Now, when it comes to non-integrated system, we have to discuss cost books and financial books. Financial books is not our syllabus, which you studied in the financial accounting. We are going to discuss only cost books. In our syllabus, we are going to discuss only cost books. We are studying cost accounting, correct? So we discuss only cost books. Financial books is not our syllabus. You are already experts in that, correct? Now, let me take the cost books. Cost books under non-integrated system. Cost books under non-integrated system. Now, please understand, when you are following the non-integrated system and when you want to prepare the cost books, there are 11 ledger accounts which you need to prepare. Mandatorily, we have to prepare the 11 ledger accounts. What are the 11 ledger accounts? Means number one, stores ledger control account. I'll write the short form. Stores ledger control account, which replicate the raw material. Are you understanding? Number two, work in progress control account, which is denoted by WAP. Number three, finished goods control account, which is denoted to finished goods. So tell me one thing. We are preparing and we are following non-integrated system for the manufacturing company. When you are doing it for the manufacturing company, how many types of stocks will be there? Categories. How many categories of stocks will be there? Three categories: raw material, work in progress, finished goods. Any manufacturing company will have three different types of stocks: raw material, work in progress, finished goods. So for raw material, we have taken separate ledger called as the stores ledger. For work in progress, we take a separate ledger called as the work in progress control account. For finished goods, we take a finished goods control account. All of you clear about this? Now, once we done with the material, what is the next cost? Wages. So for that, we have separate ledger called as the wages control account. For that, we have separate ledger called as the wages control account, WC account. Are you understanding? Material is done, wages is done. What is next? Overheads. When it comes to overheads, please understand there are three types of overheads. What are the three types of overheads? Production overheads, administration overheads, selling and distribution overheads. For these three things, we have three separate ledgers. I am going step by step. First, we taken three different stocks. Then we taken wages. Then we taken three different overheads. What are the three overheads? Means production overhead, control account. Number 6, admin overheads, control account. Number 7, selling and distribution overhead, control account. All of you clear? This is the POH. This is the AOH. This is the SNDOH. Clear? So by this we done with the 7 ledgers. 8. What is the 8th one means? Abnormal loss account. This is the ledger which helps to record the loss. Which helps to record the loss. Abnormal loss account. Clear? Next. Number 9. Cost of sales account. This helps to take the total cost. Cost of sales account. This helps to take the total cost. Please understand. The entire cost sheet we are presenting in ledger forms. This is the only chapter which we are going to study the cost accounting with the help of journals and ledgers. Remember, all other chapters is about statements, calculation of something. This is the only chapter where we are learning how to pass the entries. How to pass the entries in cost books. Simple. The entire cost sheet in the statement form we are converting to entries. The cost sheet we are converting into entries. When I say cost of sales, we know that there is a total cost. To the cost of sales, add the profit, you will get the sales. When I say cost of sales, it includes material, labor, production overhead, admission, selling and distribution, everything has been included. So we are preparing separate ledger. We are preparing separate ledger to accumulate the cost, which is called cost of sales. Are you understanding? One ledger for recording loss, one ledger for accumulation of cost, one more ledger to calculate profit or loss, which is called as costing P&L account. Are you understanding? See, one more ledger is number 10, costing P&L account. Costing P&L account. So to calculate the profit or loss. Clear? Last one, cost ledger control account or general ledger control account. Cost ledger control account or general ledger control account. So what is the purpose of this ledger means? It is a dummy account actually. I can tell you like this. It's a dummy account. If you are not able to fit into about 10 ledgers, we are going to write into the general ledger. As how we have the journal proper in the subsidiary books. How many subsidiary books are there? How many subsidiary books is there? 8. Purchases, sales, purchase returns, cash book, bills receivable, bills payable, journal proper. So 8 subsidiary books are there. The purpose of the journal proper is if you are not able to record in the above 7 books, we are going to record in the journal proper. Same way here also, if you are not able to fit into this 10 ledger accounts, we are going to use the general ledger adjustment account. Please understand, this ledger denoted by balance sheet items. Balance sheet items replicate in these ledgers. Because about 10 ledgers replicate only expenses. About 10 ledger accounts replicate only expenses. Whatever balance sheet items are there, sundry debtors, creditors, fixed assets, long-term borrowings, whatever it is going to show in the general ledger adjustment account. GLA, cost ledger control account. Are you understanding?
Yes.
Okay, now. So these are the 11 ledger accounts which we need to prepare under the non-integrated system. Clear? Next. Using these 11 ledger accounts, let us understand how to pass the entries. When it comes to entries, I am classifying into 4 categories. Transactions related to material. First we will discuss transaction related to material. Number 2, transaction related to labor. Transaction related to overheads. Closing entries. Last one is closing entries. So just I am classifying the entries into 4 categories. Transactions related to material, transactions related to labor, transactions related to overheads and closing entries. Okay, for time being, don't write anything. I'll show you one beautiful picture. You can take the photocopy of that. Okay, but follow the discussion. I'll give you the picture. Just follow the discussion. Now, let us discuss the material. When it comes to material, from whom we are going to purchase? Supplier. What's your name? Sushant. Correct. Sushant is our supplier. A beautiful guy. Okay. Sushant is the supplier. Now what happened? Sushant is supplying the raw material. Where you will keep in the factory? Storeroom. It will go to the storeroom. From storeroom, we'll issue to what? Production. Where the production will happen? Factory. Storeroom will be the storeroom. From storeroom, we'll issue the raw material to the factory where they'll produce the product. Okay. So it will go to the factory. In factory, they are going to convert raw material into finished good. These finished goods will be transferred to where? Go down. That will be transferred to go down. Are you understanding? Now, tell me one by one. I already told you 11 ledger accounts. Please be understand this. Subject to condition is you have to use only 11 ledger accounts. What are the 11 ledger accounts? What is the first one? Stores ledger control account. Second one, work in progress control account. Third one, see, no need to buy hard. Simple. First three stocks. Next one is wages. Next three is overheads. Next four is out of three. Out of four, three is one is for loss, one is for accumulation of cost of sales, one is for calculation of P&L, profit or loss, and last one is GLA. Okay, first one is store ledger control account. Second one is work in progress control account. Third one, finished goods control account. Fourth one, wages control. Fifth one, production overhead control account. Sixth one, administration control. Sixth one, selling and distribution. Seventh one, abnormal loss. Eighth one, cost of sales. Ninth one, costing P&L. 10th one, sorry, we missed out one thing. Abnormal loss, cost of sales, costing P&L. Everything correct, no? Production overhead, admission, selling and distribution overhead. And then 8th one is abnormal loss. 9th one is cost of sales. 10th one is costing P&L. And the last CLC account or GLA account. All of you clear? Now the condition is whenever I tell you the transaction, you have to tell me the entry only by using 11 ledger accounts. You cannot use any other ledger. Okay, tell me first one. Purchase of raw material. This is the SLC. This is the WAP. This is the finished goods. He is the supplier. Now tell me, what is the entry for the purchase of raw material? SLC account debit to GLA account. We don't have the creditor or we don't have the cash account. So we'll transfer it to GLA account. Are you understanding? So the entry is SLC account debit to GLA account. Next, issue of raw material for production. WIP to SLC. Return of raw material from factory to stores. Return of raw material to supplier. GLA to SLC. All of you clear about this? Understanding? Next. Issue of indirect material. Listen. Issue of indirect material. What overhead? Production overhead. Indirect material means overhead. What overhead? Production overhead, because we are issuing for the factory, which is called a factory overhead, production overhead, work overhead, manufacturing overhead. These are the different names. Are you understanding? So the entry is production overhead account debit to SLC account. Clear? Next, loss of raw material from stores. Loss of raw material. Abnormal loss account. Super. Abnormal loss account to SLC. Loss happened in factory. Loss happened in factory. What is the entry? Abnormal loss to WAP. Super. Abnormal loss to WAP. Loss happened in godown. Abnormal loss to finished good. Are you understanding? So we have to look into the place where the loss happened. If it happened in the storeroom, raw material. If it happened in the factory, work in progress. If it happened in the godown, finished good. All of you clear? Next, completion of goods. Finished goods to WIP. Super. All of you clear? Last one. Purchase of material for special job. Sometimes they'll give you the information, purchase of material for special job. So what is the special job? Regular production, special production. Regular production is as usually whatever the product designed, they'll produce that. Special production according to special order. Suppose they are manufacturing these bottles. Now one of the companies coming and asking, I don't want your own branding, I want my branding. One of the companies approaching and asking, you deliver me some 1 lakh bottles with my own branding. Then company, what they'll do, they remove this label and they have the one more special with their name. With their name, they have the label. That label this company will not produce. They'll take it from outside. Which is called for special job. Are you understanding? Okay. Or else they may ask, okay, one example is enough. Now, when they ask for special job, when they purchase for special job, now this labels regular production means it will be kept in the storeroom. When it is using for one specific job, directly will take it to the factory. Directly will take it to the factory. Are you understand? Now tell me the entry for that. WIP to GLA. When you are doing it for special job, WIP to GLA. All of you clear about this? So totally we discuss 8 entries. What are the 8 entries? Number 1, purchase of raw material. Number 2, issue of raw material. Number 3, return of raw material. Number 4, return to supplier. Number 5, issue of indirect material. Number 6, loss. Number 7, for special job. Number 8, completion. These are the 8 entries related to the material. Are you understanding? As I promise you, I'll show you the picture. You can take that. Oh, you can take the photocopy of this. But don't show it to anyone here. I use the Trump photo. Don't tell anyone. Clear? Okay, done. So this is the entries related to material. Unless you do one thing, copy the entries related to material also. I think it is there in the material. Don't worry. It is there in the material. Okay. So this is about the entries related to material. Next, entries related to wages. Just we have only two entries. When it comes to wages, we have two entries. Number one, incurrence. Number two, utilization. Number one, incurrence, and number two, utilization. Whenever you are making the payment, wages to the direct and indirect. Please understand, in this chapter, you have to take wages as direct wages and indirect wages, both together. We'll take together first. Then we'll adjust into the overheads. That is different story. So what I mean to say, wages control account means it includes both direct wages as well as indirect wages. Now first tell me payment of wages. What is the entry? Wages control account debit. Payment is wages control account debit to GLA account because we don't have the cash or bank. So wages control account debit to GLA. Now in this wages it includes direct workers wages, indirect worker wages, admin staff wages, selling staff wages, distribution staff wages or salaries. Are you understanding? Now tell me, when we are making payment to the direct worker, when you are making payment to the direct worker, see this is called utilization, absorption, utilization or absorption. When you are making payment to direct worker, which account will be debited? WIP account. Why we are debiting WIP account? They are working in the factory. They are working in the factory. Are you understanding? Factory divided by WIP. Now tell me indirect worker. Production overhead account. Production overhead account debit, indirect worker. Now admin staff. Admin overhead account debit. Okay, admin staff. Next, selling staff. Selling overhead account debit. Next, distribution staff, selling and distribution overhead. Let me keep it like that. Selling and distribution. Now tell me, I am paying for idle time. I am paying for idle time. Idle time. Idle time. Okay. Idle time wages is the loss to the company. Is the loss to the company. Now tell me which account to be debited. Abnormal loss. Idle time is a loss to the company. No production carried on, but wages is paid. That is called idle time wages. It's a loss to the company. So we'll debit abnormal loss account debit to wages control account. Initially we debited, now we're going to credit. Are you understanding? Whenever you make the payment, wages control to bank, but bank is not the GLA. When it comes to utilization, we have to see to which worker they are making the payment. If it is to direct workers, WIP, indirect workers, production overhead, admin staff, administrative, selling and distribution staff, selling and distribution overhead, idle time, abnormal loss to wages control account. All of you clear? And these are the only two entries in relation to the wages. Next, overheads. When it comes to overheads, first we have to incur, absorb, under over absorption. So incurrence, absorption, under over absorption. First of all, tell me production overheads incurred. What is the entry? Production overheads incurred. What is the entry? Production overhead account debit to GLA. Production overhead account debit to GLA. Are you understanding? Administration overheads incurred to GLA. Selling and distribution overheads incurred. Selling and distribution overhead account debit to GLA. Clear? Understanding? Now, production overheads absorption. Production overheads absorption. Which account to be debited? Work in progress account. I'll tell you why. Please understand, in cost sheet, direct material, direct wages, direct expenses will get prime cost, add production overhead. We'll get gross work cost. Correct? Using the gross work cost, we are going to evaluate the opening WIP, closing WIP. That means production overheads is forming part of the WIP. That means the production overheads has to be absorbed to the WIP first. Then it will get converted to finished goods. Are you understanding?
Yes,
On this logic basis, tell me, admin overheads related to production should be charged to what? No, how can you charge to WIP? After, see, gross work cost, opening WIP, closing WIP, network cost, and then quality control cost, research and development, and then administration overhead related to production. After evaluating WIP, we are taking administration overhead related to production. How can you charge it to WIP? Now tell me, this should be charged to what? Finished goods. Because once you add the administration overhead related to production, you will get cost of production. Using cost of production, we will evaluate the finished goods. Are you understanding the logic here? Now, if you understand really, tell me, admin overhead general, it should be charged to which account? Account our ledgers. Cost of sales. It form part of cost of sales at last. After getting cost of goods sold, add administration overhead general, selling and distribution overhead, cost of sales. Are you understanding? So we'll get the cost of sales. Selling and distribution overheads, cost of sales. Clear? So production overheads is WIP. Admin overhead related to production is finished goods. Administration overhead general is cost of sales. Selling and distribution overheads is cost of sales. All of you clear? Understanding? So here WIP to production overheads. If it is related to production, admin overheads to finished goods. If it is related to general, admin overheads to cost of sales. Sorry. I'm sorry. Finished goods to administration overheads. Here it is cost of sales to administration absorption. Just I'm telling you about absorption. Are you understanding? Now, can you tell me the entry here? Cost of sales to selling and distribution overheads. Clear? Understood? Now, here what happened? Production overheads is 1000. Absorbed is 800. Production overhead incurred is 1000. Absorbed is 800. Under absorption or absorption? Under absorption. Under absorption by how much? 200 rupees. That under absorption should be transferred to P&L account. In this chapter, please remember that under and over absorption will be adjusted to P&L account. Are you understanding? Why you will take it to balance sheet? There are cases where you take to balance sheet also. Either we will adjust to P&L account or we can take it to balance sheet also. I'll tell you that. I'll tell you later on. As of now, you remember that will be transferred to P&L account. Are you understanding? There are multiple adjustments. I'll tell you. As of now, you remember that it will be transferred to P&L account. Under accounted. If you account debit the P&L, credit the P&L. Overheads should be debit the P&L, credit the P&L. Debit the P&L. Overheads is an expenditure. Under accounted by 200 rupees. Now you want to account that we are going to debit to the P&L. Are you understanding? So what is the entry? Costing P&L account debit to production overhead 200. Both will get match. 1000 rupees incurred, absorbed 800, accounted to P&L 200. All of you clear? Now suppose incurred is 1200. Sorry, incurred is 1000. Absorbed is 1200. Under absorption, over absorption. Over absorption. Now we need to reduce. Debit the P&L, credit the P&L. Credit the P&L. Cost in P&L debit, credit. Production overhead debit 200. Are you understanding? So that means under absorption means debit the P&L, over absorption means credit the P&L. Either it is production overhead, that means telling all the three cases same adjustment. Under absorption debit the P&L, over absorption credit the P&L. All of you clear about this? So this is about the overheads. At last, see, we open the 11 ledger accounts. We passed the entries. Now it is the time to close. It is the time to close all the entries. Sorry, all the ledgers. Tell me one by one. When it comes to stores ledger control account, we'll get the closing balance. It is a stock of raw material. So that you carry forward to next period. Are understanding? Next. That is about the SLC. Next. Work in progress. That will also have the closing balance. Are understanding? Finished goods. That will also have the closing balance. Now, wages control account automatically tallied. First we write in the payment entry and then utilization entry. It will get automatically tallied. There is no balance in the. You will never find the balance in the wages control account. If you find the balance, means that means you are doing mistake. You are doing some wrong. Or you will never find the balance in the wages control account. Are you understanding? Next. Production overheads. Here what happened? If you adjust to P&L account, there is no balance. 1000 rupees incurred, 800 absorbed, under absorption 200. Both will get tally. If suppose they given the balance, it means that they are not transferring it to the P&L account. They are carry forward to the next period. It depends. Two adjustments possible. One, transfer it to P&L. Second, transfer it to next period. Are you understanding? Two adjustments possible. It depends upon the information given in the question. In the opening trial balance, they given administration overhead amount given. What does it mean? From last period carry forward to current period. In the opening trial balance, you didn't find the overheads only. That means they're transferring it to P&L. Are you understanding? There are two types possible for the adjustment of overheads. under or absorption. Whenever there is under or absorption, either transfer to P&L or transfer to next period. If you transfer to P&L, both will get tally, set off. No balance, no further balance will be there. Closing balance will not be there, opening balance will not be there. If you are not transferring it to P&L, when you are carry forward to next period, current year it is closing balance, next period it is opening balance. In the next period also we'll take the balance and we'll carry forward to upcoming period. There is one way of accounting. Another way of accounting, directly transfer it to P&L. Are you understand? Sometimes they'll tell you to adjust to finished goods account, or sometimes they'll adjust to transfer it to directly transferring it to P&L account. See, multiple things possible. I'll tell you there are two things. One is carry forward to next period. One more thing, transfer it to P&L. Third one is they will specify the adjustment in the question, how to adjust. Accordingly, adjust it. Whatever they stated in the question, accordingly adjust the overheads. Clear? So three adjustments, three types of adjustments to the under or absorption: transferring it to P&L, carry forward to the next period, or adjustment as stated in the question. All of you clear about this? Okay, now. So that is about production overhead, administration overhead, selling and distribution overhead. Clear? Next. Abnormal loss. See, when you tally this ledger, what are the balance that you are getting? Transfer to which account? Abnormal loss account, transfer to P&L. P&L only, na? That loss will be transferred to P&L after taking the balance. Are you understanding? Next. Cost of sales will be transferred to P&L. That is also that is the accumulated cost transferred to P&L. Now the point is costing P&L normally when you prepare the P&L, profit or loss, transfer to balance sheet. Do you have the balance sheet in the cost books? Do we have the balance sheet in the cost books? No. To which account we transfer this? GLA. Are you understand the logic why we are transferring it to GLA? Because we don't have the balance sheet. We don't have the balance sheet, so that we are transferring it to GLA. This is how we are going to close the 11 ledger accounts. First 3 ledger accounts, closing balance. Wages control account, automatic tally. Production overhead, automatically tally if you transfer to P&L. We will get the closing balance if you don't transfer to P&L. We will adjust according to the question as how they given in the question. These are the 3 things possible for the production overhead, administration, selling and distribution overhead. Clear? Next, abnormal loss transfer to P&L account. Cost of sales transfer to P&L account. P&L balance transfer to GLA. That's it. We're done with the cost books. Have you understand this? All of you? Okay? No. Look at the first question. Look at the first question. This is, what is the page number? Illustration 2. 7.14. ACME Manufacturing Company Limited opens the costing records with the balances as on 1st July as follows. They given the opening balances as on 1st July. As on 1st July. Material control account, nothing but SLC account. Material control account is nothing but SLC account, 1,24,000. Work in progress control account, 62,500. Finished goods control account, 1,24,000. Production overhead control account, 8,400 rupees debit balance given. Please stop talking. Listen to me. They given the SLC 1,24,000, work in progress 62,500, finished goods 1,24,000. Production overhead control account 8,400 rupees opening balance given. That means what they are doing? Carry forward to the next period. Now that is point number 1. Point number 2, they given the debit balance. They given the debit balance. Tell me, is it under absorption or over absorption? Think. Is it under absorption or over absorption? Debit balance given. Under absorption. How? Under absorption correct. Under absorption correct. Why? Because I'll tell you. When you incur, what is the entry for production overhead? Production overhead to GLA. When you absorb, what is the entry? WIP to production overhead. Correct? When you incur, production overhead to GLA. When you absorb, WIP to production overhead. Are you understanding? Now, whenever you incur, debit. Whenever you absorb, credit. Debit balance means incurrence is greater than absorption. Are you understanding? See, when you incur, production overhead account debit to GLA. When you absorb, WIP account debit to production overhead. Are you understanding? Incurrence debit, absorption credit. Debit balance means incurrence is more. Debit balance means incurrence is more. So incurrence is greater than absorption. So under absorption. Are you understanding? All of you. Okay. So this is under absorption. Now tell me, administration overhead control account 12,000 credit balance under over absorption. Over absorption. Selling and distribution overhead control account debit balance under over absorption. Under absorption. Clear? Next. Cost ledger control account credit balance given 3,13,150. All of you clear about this? Now tell me one by one. The following are the transactions for the quarter ended 30th September. Here they are asking to prepare quarterly basis. Second quarter information. They started with the July, ending with the September. It is about Q2. Clear? Now tell me material purchased. What is the entry? SLC account debit to GLA. Material issued to jobs. WIP to SLC. Material to works maintenance. Production overhead, works maintenance means repairs and maintenance, which is one of the indirect expenses. So production overhead account debit to SLC. Material to administration office, administration overhead to SLC. Sales department, S&D overhead to SLC account. Now wages direct indirect given. First we need to add these two. Whenever they given wages direct and indirect, take the total. What is the total? 2,14,300. 2,14,300. First to pass the payment entry. What is the payment entry? Wages control account debit to GLA account. Utilization entry. Direct work, direct wages. WIP. Indirect wages. Production overhead. 2. Wages control account. 2 wages control account. 2,14,300. Are you understanding? Next. Transportation for indirect material. Listen. Transportation for indirect material. Which account? Production overhead account. We have only 11 ledger accounts. It's a indirect material. Transportation charges. One of the indirect cost. Production overhead account debit to GLA account. Next. Production overheads incurred. What is the entry? Production overhead to GLA. Absorbed production overheads. What is the entry for absorption? WIP to production overhead. Super. Administration overhead incurred. What is the entry? Administration overhead to GLA. Administration overhead allocated to production. Listen. Allocated to production. Related to production. Which account debit? Finished goods. Administration overhead related to production. Finished goods. Administration overhead general. Debit to cost of sales. Are you understanding? So related to production means finished goods. Administration overhead allocated to sales department means cost of sales. Or general is cost of sales. Are you understanding? Next. Selling and distribution overheads incurred. Entry. Incurred entry. Selling and distribution overhead account debit to GLA account. Selling and distribution absorbed. Cost of sales to selling and distribution overheads. Okay, next. Finished goods produced. Finished goods produced. Finished goods to WIP. Super. Finished goods to WIP. Here the point is, I want to explain this. See, there are two things. Number one, cost of goods sold. One more thing, sales. There are two things. Cost of goods sold and sales. Now, cost of goods sold form part of what? Look at the cost sheet. Cost of goods sold form part of what? Cost of sales. It will be included in the cost of sales. Cost of goods sold, add administration overhead, add selling and distribution, will get cost of sales. That means it is forming part of cost of sales. Whenever they given you in the question cost of goods sold, debit to cost of sales, to finished goods. Please understand. Cost of sales to finished goods. Sir, why you are crediting finished goods? I'll tell you the point. Cost of goods sold is at cost. Are you understanding? Now we are debiting to the cost of sales because it form part of the cost of sales. And when I'm making the sales, goods are going out. Already, credit what goes out? Real account. Credit what goes out? Debit what comes in? Credit what goes out? Correct? Which is going out? Finished goods are going out. So cost of sales to finished goods. Clear about this? Now, when it comes to sales, let me take an example. First, tell me the entry for the cash sales. What is the entry for the cash sales? In financial books? Cash account debit to sales account. This sales will be transferred to which account? Trading account. That will be transferred to trading account. Correct? What is the transfer entry? Sales to trading account. Correct? Sales to trading account. But you will never study this entry because closing entries is not found, will not discuss in the financial books. But actually in trading account, we'll always write buy sales. We don't know the logic. Ma'am said we'll write. That's it. Correct? But why writing buy sales? This is the entry. Sales to trading account. In trading account, buy sales. It's a transfer entry. Are you understanding? Now, in our cost books, in place of cash, we'll write GL account to sales. Sales to, we have only one account called as the costing P&L. Are you understanding? Sales will get cancelled. What is the final entry? GLA account debit to costing P&L. This is the entry. Are you understanding? So when it comes to cost of goods sold, cost of sales to finished goods, I told you the logic. Cost of sales form part of cost of goods sold form part of cost of sales, and finished goods are going out. So create the finished goods. When it comes to sales, we are receiving cash or debtor. So GLA account debit to costing P&L account. That will credit it to the costing P&L account. All of you clear about this? Understanding? Okay. Now tell me the entry here. Finished goods sold. What is the entry? Cost of sales to finished goods. Sales. What is the entry? GLA to costing P&L account. GLA to costing. These are the entries for this. All of you clear? What they are asking? Make up the various accounts as you envisage in the cost ledger and prepare the trial balance. So we need to open the ledger accounts. We need to open all this. See, and I'll tell you the system how to prepare the books. First, what we need to do whenever they given this kind of question, you know the opening trial balance. Correct? They given the opening trial balance. Whatever the balance is given, first open the ledgers. First you open these ledgers. Then start writing one by one entry. Wherever the ledger is required, you open one additional ledger. Don't do first material control account, then work in progress control account, then don't do that. It will take so much time. Sometimes you are not able to tally the trial balance. Do it in systematic way. Are you understanding? So what is the system means? First to open the opening balances accounts. Then start writing the entries. Are you understanding? Pass one by one entry. Wherever there is a requirement to open the ledger, open the ledger. Clear? And then what we'll do? While closing the books, see, we'll pass all the entries. When you want to close the ledger, start with the storage ledger first. Start with the storage ledger. Are understanding? Start with the then WAP, then finished good. We go by the sequence. You can able to tally the trial balance without any errors if you do it in a systematic way. Clear? Understood? Okay now. So that is about the first question. Next, let us discuss the one more thing called the non-integrated system. Sorry, integrated system. We done with the non-integrated. Integrated system. What is this integrated system? Okay. What is this integrated system means? So in case of integrated system, we are going to club both the books. So please understand, totally we have 11 ledgers. Out of 11 ledgers, we'll keep 10 ledgers. GLA account will be deleted. And we are going to replace with the respective financial ledger. Are you understanding? This GLA account will be closed and we are going to fill with the respective financial ledger. We are going to have the debtors, creditors, fixed assets, everything will be there. All of you clear about this? Understanding? So what I mean to say, when it comes to integrated system, all 10 ledger accounts will be there except this GLA account. Clear? So that is the integrated system. Next, reconciliation of cost books and financial books. Reconciliation of cost books and financial books. Now, listen to me. First of all, why we need to reconcile? The purpose of reconciliation is to check the accuracy, of the financial books and cost books. If the reconciliation is not matching, that means there is some error in the books. That is the main purpose. And one more thing, to report to the management. We need to report the management why there is a difference. What are the transactions that create the difference? Clear? Now, when you want to do the reconciliation, see, there are 5 items which can create the difference. When it comes to cost books and financial books, there are 5 items which can create the difference. What are the 5 items means? Number 1, items included only in cost books. Number 2, items included only in financial books. Number 3, under slash over absorption. Number 4, stock valuation. Okay, and one more thing, method of depreciation. Method of depreciation. These are the 5 things which can create the difference between cost books and financial books. First one, items included only in cost books. What are the items included only in cost books means? Notional expenses. Notional expenses. What is this notional expense means? Suppose if I am running the business in my own building, if I am running the business in my own building, if I am doing that, will I pay the rent for myself? No. If the same premises, if I let out to someone, I am going to get the rent. That means by doing the business in my own premises, I am losing the rent, which is the opportunity cost. That rent is called as the notional rent, imaginary rent. Or understand? In cost books, we are going to book the notional rent as the opportunity cost. By doing the business in my own building, I am losing the rent, which is called as the opportunity cost. That will account in the cost books. Do we account that in the financial books? No. Only actual expense will be accounted in the financial books. Are you understanding?
Yes.
All of you. So, when it comes to items included only in cost books, that is notional expenses. Notional expenses will form part of only cost books. It will not be there in the financial books. Okay. Items included only in financial books is non-operating activities. Non-operating activities. What are the non-operating activities? Investing and financing. Are you understanding? See, when you prepare the cash flow statement, have you come across the cash flow statement, fund flow statement? Now, while doing that, there are 3 types of activities. What are the 3 types of activities? Operating, financing, investing. Operating activities will be considered in cost books and financial books. But financing and investing will be considered only in the financial books. It will not be there in the cost books. In cost books, do we come across anywhere equity dividend paid, preference dividend paid? Do we come across anywhere purchase of fixed asset? Nothing like that. Because we are not going to consider the financing and investing activity. We consider only operating activity. Are you understanding? So, what is the items included only in financial books means non-operating activities. That will be included only in financial books. Clear? Next. Under or over absorption. Cost books, financial books. In financial books, we will have the actual overheads. In cost books, we will have the absorbed overheads. The difference is the under over absorption, which creates the difference between cost profit and financial profit. All of you. So please understand, cost books, financial books. In financial books, we have the actual overheads. In cost books, we have the absorbed overheads. The difference is the under over absorption. That creates the difference between cost profit and financial profit. Clear? Next. Stock valuation. In cost books, we are following FIFO. In financial books, we are following LIFO. There will be difference in value. The difference in value creates the difference. Are understanding? At last, method of depreciation. Cost books, WDV. Financial books, SLM. When there is a change in method, the value gets changed. That creates the difference. So these are the 5 items which can create the difference between cost books and financial books. Whenever you prepare the reconciliation, you just remember about these 5 items. Comfortably, you can prepare the reconciliation statement. All of you clear about this? Understanding? Okay? Now. So, let us discuss illustration number 7. Okay. Before doing the illustration 7, I have to explain one small thing. When we prepare the SLC account, it is going to consider transactions in relation to what? Raw material. Transactions in relation to raw material. Now, when I say material, what all the transactions possible? There will be a opening stock, there will be a closing stock, and purchases issue. Correct? These are the main transactions possible in the SLC. There will be a opening stock of raw material, closing stock of raw material, purchase of raw material, issue of raw material. All of you clear about this? And these are the 4 transactions which are mandatorily mandatorily should be there in the SLC. Apart from that loss, normal loss, abnormal loss, that will be there. But mandatorily, it need to have the opening stock, closing stock, purchases issue. Same way, can you tell me WAP? Can you tell me WAP? What are the mandatory items? Opening stock, closing stock. Next. Material consumption. Material consumption. Next. Wages cost. Wages absorption. Are understanding? So first we'll incur the wages and we'll absorb the wages. No? Are understanding? Wages. Next. Overheads absorption. All of you clear? And then transfer to the finished goods. Whichever goods completed, that will transfer to finished goods. These are the major transactions possible in the WAP. Are you understanding? Next, finished goods. When it comes to finished goods, what are the transactions possible? Opening stock. Next, closing stock. Next, receive from WAP. Super. Receive from WAP. Next, cost of goods sold. Cost of goods sold. Are you understanding? Next, wages control account. Incurrence will be there, absorption will be there, both will get tally. Are understanding? Next, production overheads. Incurrence will be there, absorption will be there, under our over absorption. Same way, administration overheads, selling and distribution overheads. Are you understanding? So, when you are preparing one ledger, we need to know what all the transactions possible, because sometimes what they'll do, they'll give the questions with the missing values. Or we need to find what is missing. To find the, first of all, we need to have overview knowledge of the account. What are the transactions possible in the account that we need to understand? Are you understanding? All of you. Okay, now. Look at the first one. Illustration 7. Look at the illustration 7. Following are the figures extracted from the cost ledger of a manufacturing unit. They given the stores. Opening balance, purchases. Opening balance. It is a position as on beginning of the day. Correct? We'll take on the debit side 15,000. Purchases, what is the entry? See, and one more thing, keep it in mind. The transactions related to stores. Transactions related to store. Now tell me purchases. SLC account debit to GLA account. Transfer from WAP. Transfer from WAP. Transfer from WAP to SLC. That is the meaning of this. See, many people what they'll do, transfer from WAP means they'll take WAP to finished goods. The moment you see that, transfer from WAP to where? Finished goods. But here the entry related to stores. From WAP, either you can transfer to finished goods or you can transfer to stores. Two things possible. Here it is about stores. Now tell me the entry. SLC to WAP. Next, issue to WAP. WAP to SLC. Issue to repairs and maintenance. Production overhead to SLC. Sold as a special case at cost. Sold as a special case at cost. GLA to SLC. GLA to SLC. Are you understanding? So what happened? Sold as a special case. Some of the raw material they might found unusable. It is not in the usable condition, so that they sold. So GLA to SLC. Next, shortage in the year. Shortage in the year. Abnormal loss. Abnormal loss to SLC. They found some shortage, which is a loss, unexpected, abnormal loss. Are you understanding? Okay, next. Work in process. Opening. Debit side balance. Direct labor charged 30,000. Debit side, the wages control account. Overhead cost charged. Debit side, production overheads absorbed. Are you understanding? Next. Closing balance. Credit side, closing balance. Now, what is missing here? Received from the SLC. Received from the SLC and transfer to finished goods. Both are missing. All of you clear about this? Next. Finished product. Entire output is sold at 10% profit on actual cost from work in progress. Listen. Finished product is entire output will be sold. If entire output is sold, what is the closing stock? 0. They would have done the same thing in the last year also. So opening stock is 0. Are you understanding? So for finished good, there is no opening stock, there is no closing stock. Normally they sell the entire output by adding how much percentage? 10%. 10% to the cost of WAP. Are you understanding? 10% will be added to the cost from work in progress. All of you clear about this? Yes. Understanding? Okay. Next. Others. Wages for the period 35,000. Can you tell me the entry for this? Wages control account debit to GLA account. Overhead expenses. Production overhead account. See, normally if they given overheads, take it as production overhead. Take it as production overhead. So production overhead account debit to GLA account. Ascertain the profit or loss as per financial accounts and cost accounts and reconcile them. So now what we need to do? We need to calculate the cost books and financial books. In cost books, what we'll do? We'll prepare the SLC. We'll prepare the AAP. We'll prepare the finished goods. And we'll prepare the GLA and costing P&L. By preparing the costing P&L, we get the profit or loss. Are you understanding? So they give some transaction. Using the transaction, prepare the SLC along with that AAP, finished goods, GLA, costing P&L, cost of sales. When you close all the books in the costing P&L, we'll get to know profit or loss. That is the profit or loss account to cost books. In financial books, we need to prepare the P&L account. In P&L account, are trading and P&L account. What is the first item? Opening stock. Are you understanding? In this question, how many types of stocks given? 3 types of stock. But out of three types of, how many types of stocks has the balance? 2. Raw material and finished goods. Sorry, raw material and work in progress. Are you understanding? So we'll take the opening stock, purchases and wages incurred, overhead incurred, and on the credit side we'll take the sales, closing stock of raw material, closing stock of work in progress. Are you understand? We'll get the gross profit, and we'll calculate the net profit by taking the non-financial items or non-operating items. Have they given anything? Nothing has been given. Nothing has been given. Yeah, it is not there. Okay, so as I told you, what you need to do? First, open the SLC, AAP, finished goods, along with that GLA, costing P&L, cost of sale. Wherever you open the ledger, from the costing P&L, we'll get to know profit or loss. That profit or loss is the cost profit or cost loss. When you prepare the P&L account, we'll get no profit or loss. That is the financial profit or loss. Reconcile both. Are you understanding? Okay, next. We'll do the last one. This question we'll do. Somewhat important. Now, look at the question. It is practical question 1. It is a practical question 1. Now, before going to this question, how to prepare the reconciliation statement? What is the format? We'll write particulars, amount. We'll take profit account to cost books and then add what all the items will increase the profit less what all the items will decrease the profit. Correct? And by doing this, we'll get profit account to financial books. Are you understanding? So we start with the cost books. What all the items to be added, and what all the items to be reduced, we'll get the profit account to financial books. This is called reconciliation statement. There is one more thing called as the memorandum reconciliation account. Memorandum reconciliation account. Instead of presenting the statement form, we are going to present the account form. Are you understanding? Same thing. What we'll do? Profit account to cost books. We'll start here. Profit account to cost books. We'll take it on the credit side. Profit, so we'll take it on credit side. What all the items to be added, we'll write on the credit side. What all the items to be reduced, we'll write on the debit side. We'll get the balancing figure. That is the profit account to financial books. Are you understanding? See, memorandum reconciliation account means we are going to take the T form. We are going to take the T form to present the statement, to present the reconciliation. That is the only thing. Conceptually, both one and the same. Presentation is different. Here statement, here account. Conceptually, both one and the same. Are you understanding? Suppose, if they given loss, we need to start with debit side, credit side. What is the page number? 7.50. Okay, now, if they given loss, we need to start with debit side or credit side. Debit side, loss is debit, na? We start with the debit side. Loss as per cost books. What all the items to be added? Debit. What all the items to be reduced? Credit. Are you understanding? We'll get loss as per financial books. Are you understanding? All of you. Okay, now look at this question. HK Piano Company showed net loss of 4,60,000 as per their financial accounts for the year ended 31st March. So this is the financial loss. Correct? Next, the cost accounts, however, disclosed a net loss of 3,28,000. What is this? Cost loss for the same period. The following information were revealed as a result of scrutiny of the figures for both the set of books. So these are the transactions given which create the difference. Now what we'll do, they're asking prepare memorandum reconciliation account. I'll do one thing. I'll open the account here. No need to do. It's there in your book. Okay. Debit, credit. Which loss will take? Financial loss. Shall we take the financial loss? No. Loss as per financial books. How much is that? 4,16,000. 4,16,000. Now, what all the items to be added should be shown on debit side or credit side? Debit. What all the items to be reduced shown on credit side? We'll get the loss as per cost books. How much is the loss as per cost books? 3 lakh. We have to get 3,28,000. All of you clear about this? Let us go entry by entry. First one. Factory overheads under recovered, under absorbed. Now, incurrence is greater than absorption. Correct? That is the meaning of this. Under absorption means incurrence more than absorption. Incurrence is in which books? Financial books. Absorption in which books? Cost books. Are understanding? Now, here under absorption 6,000. That means incurrence is more. We are taking loss according to financial books. So keep it in mind. We are in financial books. We are in financial books. Comparing with the cost books. Accordingly, we will adjust here. When you take in the financial books, you think that you are in financial books. You belongs to financial department. You need to adjust now. Adjust your profit. Sorry, adjust your loss. I'm sorry, adjust your loss. Are understanding? Now, in our books, amount is shown more or less. More. Income is ours. We are accounting more. More by how much? 6,000. When you account more amount, listen. When you account more overheads, loss will be more or less. More. When you account more cost, loss will be more. Now what we need to do? Less. We have to less in our books. When you taken according to financial books, you belongs to financial department. When you belong to financial department, in your books, 6,000 is accounted more. Now you need to adjust that. What you will do? You will reduce. Are you understanding? Okay, so under absorption of overheads. How much? 6,000. All of you clear on this? Understood? Next. Second, administration of over recovered means incurrence is less than absorption. In our books, we accounted less. Are you understanding? When we account less, loss will be less. Now we need to increase. How much? Over absorption of overheads. Clear? Next. Done with this too. Next. Depreciation accounted in financial accounts 1,20,000. Depreciation recovered in cost accounts 1,30,000. In our books, how much we shown? 1,20,000. In cost books, how much they accounted? 1,30,000. We are accounting less or more? Less. By accounting less depreciation, loss will be less. Now what we need to do? Increase. Add. Add how much? 10,000. Under accounting of depreciation. Are you following the discussion? All of you? Okay, next. Interest on investment not included in cost books. Interest on investment, income or expenditure? Interest on investment, income or expenditure? Income. Are understanding? So how much is that? 20,000. We accounted, but cost book they didn't account it. By accounting the income, loss would have been decreased or increased? Decreased. Now what we need to do? Add back. Sorry. Correct. Interest on income, add back. How much? 20,000. Next. Income tax provided. Listen to me carefully. Interest on investment is income. We added. Income tax provided. Expenditure. Correct? Income tax provided in financial books. But not provided in cost books. Are you understanding? So, and one more thing. Interest added. Income tax reduced. We can go by like that also. Income added, expense to be reduced. Are you understanding? Should I repeat again? Okay, now. Income tax. How much is that? 1,20,000. What is the doubt? No. It is an income. Don't go by the accounting rules. Here, that is what I am telling you. memorandum reconciliation account. What does it mean? Means we are not going to follow the accounting rules. It is just a statement account format. That's it. As she said, she is telling us our interest and investment is the income. We have to credit. But we are not going to follow the accounting rules here. It is just to present in the account form. It is just that we are presenting in the account form. Are you understanding? I already told you, if you taken this, what all the items to be added, show it on the debit. Are you understanding? Okay. See, income tax is an expenditure, but I'm taking the credit side. Income tax is an expenditure, but I'm showing the credit side because I need to reduce that. Are you understanding? It's about add and reduction. It's not about debit and credit formula. I mean, we know the golden rules. We're not going to follow the golden rules here. It's about what to be added and what to be reduced. Clear? Yeah. Next. Transfer fee. Credit in financial books. Transfer fee. Credit in financial book. When you created in our books, transfer fee. See, credit in financial book. What does it mean? They're treating it as income. Transfer fee. Credit in financial book. That means they're treating it as income. When they treat as income, by showing the income, loss would have been decreased. Now, what we need to do? Add back. Are you understanding? So, transfer fee 2000. Stores adjustment credit in financial books. Again, credit. So, stores adjustment 2000. Please tally this. 4,16,000 plus 4,000. 4,20,000, 4,30,000, 4,50,000, 4,54,000 is the total. I'll take 4,54,000 this side. 4,54,000 minus 1,26,000. 4,54,000 minus 3,28,000. How much they given here? 3,28,000 matching. Are you understanding? Memorandum reconciliation account. Don't follow the golden rules of accounting. It is just what to add, what to reduce. Clear? All of you? So these are we need to prepare the guest system. Okay. Before starting with this. Okay. Take a break. We'll continue. Okay. Let's continue. Let us start with methods of costing. Methods of costing, which has the importance up to 30 to 35 marks in the examination. Okay. What are the methods? Means number one, unit and batch costing. Number two, job costing. Number three, process costing. Number four, joint production by products. Number five, service costing. These are the methods which is there in your syllabus. Today target is to complete first four. Okay, from these 5 chapters, expectation is 30 to 35 marks. So we are going to complete the unit and batch costing, job costing, process costing, joint production by products. So getting 30 to 35 marks from these chapters is very, very easy. It's not that difficult. Suppose if you take material costing and labor costing, there is a chance for twisting. When it comes to last 3 chapters, budgetary control, marginal costing, standard costing, again there is a chance for twisting. But these topics, straightforward questions will come in the examination. It's very easy to answer. Okay, now let us start with the unit and batch costing. Unit and batch costing. We already discussed the unit cost method. When I'm giving the introduction, I told you unit cost method. Correct? Unit cost and job cost. Both are about stock valuation. Correct? When we'll follow the unit cost? When the output is similar. When the output is similar, we'll follow the unit cost. When we follow the job cost, different, dissimilar. When the output is dissimilar. I give you the example Reynolds company and L&T company. L&T is into the construction. They're doing different projects. When it comes to Reynolds, they're going to manufacture the same type of pens. So the Reynolds company will follow the unit costing, whereas L&T construction company will follow the job costing. All of you clear? Now, when it comes to unit costing, but there is one sub-concept called the batch costing. In the unit costing only, there is a sub-concept called the batch costing. Let me take the examples of the Reynolds. Let me take the example of the Reynolds. When it comes to Reynolds company, they are producing different products. So can you tell me some of the brands? Fine Grip. Next. Tell me some pen names here. Okay. 5 rupees Fine Grip pen will be there. 10 rupees pen will be there. 20 rupees pen will be there. Like that, different categories are there. 3 rupees pen will be there. Okay. So what I mean to say, they are going to produce batch wise. They are going to produce batch wise. Suppose if you take fine grip, there'll be red, green, black, blue, different categories are there. So red color fine grip. So okay, let me take like this. Red color fine grip pen of 5 rupees. One batch will be produced. And then green color fine grip of 5 rupees. One batch will be produced. So here unit costing only. What we are going to follow is unit costing only. But output of same nature. See, output of same type of multiple products. Same type of multiple products. See, products are same, but multiple nature. Colors are different. Are you understanding? So in this case also we are going to follow the unit costing only. The point here is when it comes to unit costing, as I told you, we are going to evaluate the stock on average basis. That is the first point which you need to remember. Whenever I say unit costing, we are going to evaluate the stock on average basis. Then what is the subconcept batch costing means? It is about production. Per batch, how many units to be produced? Are you understanding? Per batch, how many units to be produced? Here the concept of EBQ will come. What is EBQ? Economic batch quantity, which is ditto similar to EOQ. EOQ is about purchase of raw material. How much quantity to be placed as the order? That is the EOQ, order quantity, economic order quantity. EBQ, economic batch quantity. It is about production. How many units to be produced per batch? Are you understanding? So the problem, see, when it comes to EOQ, it is about two costs. One is carrying cost. One more thing is ordering cost. We have to do the trade-off. We have to do the trade-off between these two. Wherever these two are equal, that is the economic batch quantity. Are you understanding? Wherever the ordering cost is equal to carrying cost, that quantity is called as the economic order quantity. Same way here also, when it comes to production, if you produce more number of units, which cost will be more? Carrying cost, storage cost will be more. If you produce very less number of units, which cost will be more? Setup cost. Because whenever you want to start with the batch, you need to make necessary setting up of the machinery. Sir, what do you mean by setup? Changing the color, changing the molds, cleaning up of the machinery, applying certain degrees of temperature, adjusting the temperature, heat temperature. All these things are called as setting up of the machinery. Are you understanding? From black color pen, if you want to change it to blue color, you have to change the color, you have to change the input. This is called the setting up of the machinery. Are you understanding? So what I mean to say, when it comes to economic batch quantity, again two costs will be influenced. One is carrying cost, which is called storage cost. One more thing is setup cost. We have to do the trade-off where these two are equal. That is called the economic batch quantity. Are you understanding? Here the formula EOQ equal to, what is the formula? EOQ equal to root of 2AO divided by C. Here the formula is EBQ is equal to root of 2AS divided by C. But in your study material, they give root of 2 demand. D stands for demand. Here A stands for annual demand, but they call it DS divided by C. Nothing but demand into setup cost divided by C. Both one and the same. Are you understanding? Now tell me how to calculate carrying cost. Half of BQ, half of batch quantity. Can I write like that? Half of batch quantity into carrying cost per unit per annum into C. Carrying cost per unit per annum. Are you understanding? Here it is carrying cost equal to half of OQ into C. Ordering cost equal to A divided by OQ into O. Are you understanding? Here carrying cost equal to half of BQ into C. Can you tell me setup cost? Setup cost equal to A divided by BQ, batch quantity. We'll get number of setups into, yes, ditto same. Here it is ordering cost and carrying cost. Here it is setup cost and carrying cost. Are you understand? Very, very important. Either they'll ask you the question from economic batch quantity or they'll ask you the question based on the economic order quantity. Out of these two, one will be there in the examination. Out of 10 items, 7 items will be there. Are you understanding? Okay, no. This is about the economic batch quantity. This is the only thing which is important in this concept. Clear? Let us do one question based on this. Illustration 6 in your material. Illustration 6. Page number 8.12. Take page number 8.12. Look at the question. KBC Bearings Limited is committed to supply 48,000 bearings per annum to KMR fans on a steady daily basis. It is estimated that it cost rupee 1 as inventory holding cost per bearing per month, and that the setup cost per run of bearing manufacturing is 3,200. Determine optimum run size of bearing manufacture. Let us understand the given facts. So, KBC Bearing Company is committed to supply how many bearings? 48,000 bearings. Can I call it a demand? That is the demand for the company, or annual demand A. Are you understanding? Either you can take it as D or you can take it as A. A stands for annual demand, D stands for demand. Both one and the same. Okay, next. But it's better to take it as A to avoid the confusion. Annual demand. It is the annual demand. Okay, next. This is given per annum. So this is the annual demand A. Next. KMR fans on steady basis. It is estimated that it cost rupee 1 as inventory holding cost per bearing per month. But what we want? Per bearing per annum. CC stands for carrying cost per unit per annum. I already told you this multiple times. CC stands for carrying cost per unit per annum. So here they given per month. Convert into per annum. What is per annum cost? 12. C stands for C equal to 12. Are you understanding? Okay, now. At the setup, see that the setup cost per run setup cost per run of bearing manufacturing 3,200. So can I call it as S? So they given A, they given C, they given S. What they are asking? Optimum run size. What do you mean by optimum run size? The run size which can reduce the cost, which can make the cost least. That is the optimum. Optimum is in favor of us. Are you understanding? So how to calculate that? What is the formula? Root of 2 AS divided by C. So root of 2 into A 48,000 into S 3,200 divided by C 12. How much it comes to? 5,000? 5,060 bearings. 5,060 bearings. That is the optimum run size or economic batch quantity. Clear? Next. State what would be the interval between two conservative optimum runs. They are asking interval between, gap between the two batches. Gap between the two batches. Are you understanding? What is the demand? 48,000. So how many runs we need to run? How many runs we need to run? Divide by 5060. 48,000 divided by 5060, which equals to 9.48. 9.48 batches. We'll get number of batches. A divided by BQ. A divided by BQ will get number of batches. So in a 1 year time, how many batches they need to run? 9.48 batches. Or understand in a year how many days? 365 days. So 9.48, which equals to how many days? 39 days is the gap between one batch to another batch. That is what they are asking. Interval between one batch to another batch. So that first we'll calculate number of batches. Suppose 12 batches, 1 month, 1 batch. We can say like that. But here it is 9.48 batches. So 365 divided by 9.48, we will get 39 days. 39 days once they need to conduct one batch. Are you understanding? Okay, next. Find out the minimum inventory holding cost. They are asking to calculate the carrying cost. What is the formula to calculate carrying cost? See, minimum inventory holding cost. They are asking to calculate minimum inventory holding cost. That will be minimum at EBQ. That will be minimum at EBQ. Now tell me how to calculate holding cost or carrying cost. Half of BQ into C. Half of BQ into C. That is half of, what is the batch quantity? 5,060 into C. 12. How much it comes to? 30,000? 360. This is the minimum carrying cost. I hope you're clear about this. Understand? So this is one of the important questions from this chapter. Sometimes what they'll do, they'll ask you to calculate the average cost per unit. So take the total cost divided by number of units, you'll get the average cost per unit. I hope you're clear about this. This is about the batch costing. Let us start with the job costing. See, job costing. When we follow the job costing method, when the output is dissimilar, we'll go for the job costing. Software companies, job costing. Construction companies, job costing. So whichever the companies has a unique type of production, they all follow the job costing. Are you understanding? They'll be giving the numbering: job A, job B, job C, job D, job 1, job 2, job 3, job 4. Like that, they'll give the numbering. Each job will be valued separately. And even if you take the auditor office, that they are following the job costing. Each client, are they going to charge common fee to all the clients? It depends upon the work what we are performing to them. What kind of service that we given to the client. It's the job costing. Each and every client will be assessed separately. Are you understanding? So whenever the output is dissimilar, they have to follow job costing. Each and every job will be valued separately. Now tell me, when the company is following job costing, they will be having different jobs. Job A, job B, job C, like that. Let me take an example. Job A 153. Just example. Job A 153. I am valuing this. How to value this? I'll take the direct material consumed by this job to the job A 153. Just I taken some random number. Don't specify, sir, why 153? Don't ask me. It's a random number. Okay. So the name of the job is job A 153. So whatever the material consumed, we are going to account the direct material. Next, we are going to take the direct wages. By adding this, we will get prime cost. Add production overheads absorbed. Production overheads absorbed by the job A53 or job A153. Are you understanding? Now, production, we will get the works cost. There is no gross net now because there is no stock. We are evaluating one job. When I'm evaluating this chair, today take the opening stock closure. What is the opening stock closure there? I'm evaluating one product. Where is the stock? When I'm evaluating 1 month period, how many units produced means I can take opening stock, closing stock, all these things. But I'm doing for one product. When I'm doing for one product, there is no stock. So when there is no stock, gross work cost equal to net work cost. Then calculate a gross cost. Instead of calling gross and net, I'm going to calculate works cost. Are you understanding? Now, we'll get the works cost. After getting works cost, normally we need to add quality control cost, research and development cost, administration related to production, minus scrap income price plus primary packing. Such information will not be there. So, can I call it as cost of production? In this chapter, they won't give such kind of info. If they given, we'll consider. Normally, they won't give. Are you understanding? Can I call it a works cost as the cost of production? Now, after getting cost of production, we'll adjust opening finished goods, closing finished goods. There is no stock details here. Can I call it as cost of goods sold? Are you understanding? After getting cost of goods sold, we need to add admin overhead general, add selling and distribution overhead, we'll get cost of sales. Add profit to this, we'll get selling price, not sales, selling price of one product. Are you understand? One job. So this is the cost sheet. This is called as the job cost sheet. Are you understand? Simple. Job cost sheet means no stock. That's it. We are doing it for one product. Remember in mind. Job cost sheet means we are doing for one job. Clear? Okay, this is the format of the job cost sheet. Now, let us do one question based on this. And one more thing, before proceeding further, job A153, let me take an example. Job A153 started on 19th December 2024. Just example, 19th, okay, let me take like this. Started on 11th November 2024, completed by 19th December 2024. Just example I'm taking. They started on 11th November, completed on 19th December. Now we need to validate the job A153. Now what will happen? Let me take an example. They are accounting for the December month. They are doing monthly based accounting. Now what is happening here? Some part of the cost incurred in November, some part of the cost incurred in December. Are you understanding? When they close the books of November, listen. When they close the books of November, they would have accounted this as WIP because still under process. Are you understanding? They would have accounted in the end of November. At the end of November, it is a work in progress because still under process. By the end of December, it's a finished good because completed. Are you understanding? As on 19th December, when I'm evaluating, I have to take cost incurred in the November, cost incurred in the December, partly incurred in November, partly incurred in December. Are you understanding? Let me take an example. In the month of November, material cost given 1000. Material cost is 1000 in the month of November. In the month of December, they incurred 968 rupees in the month of December. How much is the total material cost? 1968. Are you understanding? So I have to take last period cost as well as current period cost. Total comes to 1968. Same way labor, same way overheads. Make the total cost, add the profit, selling price. Are you understanding? All of you. Now, let's do one question. Look at this. Market is important. Just whatever chances there for examination, that only I taken. Look at this question. In a factory, following the job costing method, an abstract from the work in progress as on 30th September was prepared as under. Though this is as on what date? 30th September. Okay, what they given? As on 30th September, job number, see, listen, they are following job costing method, number one. They are following job costing method. And then they given an abstract from the work in progress as on 30th September. Work in progress as on 30th September was prepared. Job 115, job 118. Okay. Job 115, 118, 120. All these things are the WAP. They only mentioned that. I am not telling. They only mentioned. Are you understanding? These are the WAP. This is the material cost incurred. This is the material cost. This is the labor hours. This is the labor cost. This is the factory overhead supplied as on 30th September. All of you clear? Next. Materials used in October. Material used in October. This is in the month of October. They given as on 30th September. For the October month, that is the opening stock. As on 30th September closing. By the 1st of October, that is the opening stock. Are you understanding? Now, if you look at the last line, okay, I'll come back to that. Now, let's go step by step only. Here they given, see, 115, 118, 120 are the opening work in progress. If you look at here, job number 118, material requisition number. I already explained this. Who will write the MRN? Who will write the MRN? Production department to which department? Stores. Purchase department, purchase requisition note. Material request notice from production department to stores. They are raising MRN number 54. Again, who is raising? Job number 118. Job number 118 is raising the MRN number 54 with the value of how much? 300. Are you understanding? MRN document issued by job number. See, job is produced in factory, in the production department. One of the job in the factory is 118. It is issuing MRN to the storeroom. MRN number is 54. What is the value of that MRN? 300. Again, same 118 issued 55 with the value of 425. Again 118 issued 56, 515. Next, job number 120 issued 57, 665. Job number 121, 124 new jobs. Because opening jobs is 115, 118, 120. These are the opening. 115, 118, 120 are the opening. What are the new jobs? 121, 124. They are the new jobs started in October. Are you understanding? Okay, next. A summary for labor hours deployed during October is as under. Job number, see, in the month of October, it is about the labor details. Job number 115. How many hours taken from shop A? How many hours taken from shop A? 25. How many hours taken from shop B? 25. 118. How many hours from A? B. 120. How many hours from A? 75. 10 from B. 121. 65 from A. 124. 25 from A. 10 from B. Have you understand this? This is about the hours. And then they given there is some indirect labor waiting for material 2010, machine breakdown 10.5, ideal time 5.6. Together comes to, okay, overtime premium 6.5. Together comes to 360, 101. Now, a shop credit slip was issued in October. That material issued under requisition number 54 was returned back to the stores as being not suitable. Let us understand this point. This point is about MRN number 54. This point is about MRN number 54. What happened? So they found the material is unsuitable for the job 118. Who issued the 54? 118. 54 issued by the 118. But they found that this is not suitable for the production. So they returned back by raising the credit note. By raising the credit slip, they returned back. Look at here. Material issued under requisition number 54 was returned back. Returned back to stores. Are understanding? So, should we consider this cost? Should we consider the 300 rupees? No. It is returned back. Clear? Next. A material transfer note issued in October indicated that material issued under requisition number 55 for job 118 were directed to 125. Who ordered? 118. Who consumed? 124. So that should be accounted to 124, 118. 124. Are you understanding? So this should not be accounted to 118. It should be accounted to 124. 720. 725, 425, correct. 720 is the consumed by 124 plus 425. All of you clear about this? Next. Are you understanding? Okay, next. The hourly rate of shop A per labor hour is 3 rupees per hour, while at the shop B is 2 rupees per hour. So shop A is at the rate of 3 rupees, shop B at the rate of 2 rupees. That is the hourly rate. Okay, next. The factory overhead is applied at the same rate as in September. Job 115, 118, 120 were completed in October. See, the factory overhead, they given about the material wages. Now they're speaking about the overhead. When it comes to overhead, is applied at the same rate as in September. As how they did it in the September, same way we have to do it in October. What they did in September, we'll discuss. Or understand, whatever they followed in the September, same thing we need to follow in the October. And then they mentioned job 115, 118, 120 were completed in October. These three jobs are at a work in progress, beginning, now get completed. Are you understanding? Next. You are asked on one more thing. Based on this point, 121 and 124 still under work in progress. Agreed? Okay, still under work in progress. Next. You are asked to compute factory cost of the completed jobs. That means they are asking only about 115, 118, 120. Completed jobs. The question is about completed jobs. Don't consider the information of 121 and 124. It is irrelevant. Are you understanding? Next. It is the practice of the management to put 10% on the factory cost to cover admission and selling cost and invoice the job to the customer on the total cost plus 20%. So what is going to happen? Once we calculate the factory cost, add 10% to load the admission and selling overheads. We'll get the total cost. Add 20% as a profit. We'll get the invoice value. Are you understanding? Next. Determine the invoice price of these three jobs. How to calculate invoice price? First calculate the factory cost. Add 10%. Administration and selling overheads. We'll get total cost. Add 20% profit. We'll get the invoice price. Are you understanding? So now the discussion is how to calculate the factory cost. When I say factory cost, material, labor, overheads. Material, labor, overheads. Are you understanding? So let us discuss only about 115. Same thing applicable for 118, 120. Are you understanding? Now 115. Tell me regarding 115. What is the opening material value of 115? What is the opening material value of 115? 1325 incurred in the last month. Is there any cost incurred in the current month? Is there any cost incurred in the current month? 115? No. See here, 118, 180, 180, 120, 121, 121, 124. There is no 115. So October month material cost is 0. Are you understanding? So material 115. I am speaking about 115. Direct material is 1325 plus 0, which equals to 1325. Direct labor. How much is the cost incurred in the last month? 800 plus current year cost. 25 into 3 plus 25 into 2. 125. Are you understanding? This is 75 plus 50, 125. Are you understanding? So 800 plus 125, 925. Are you understanding? Next. So by this we'll get the prime cost. How much is the prime cost? 2,250. This is the prime cost. Now we need to add the overheads. When it comes to overheads, I'll tell you. We have to follow the direct wages. I'll tell you why. See, when it comes to overheads absorption, we already discussed how many types of base quantities are there. 6 types. What are the 6 types of base quantities? Labor hours, machine hours, production units, material cost, labor cost, prime cost. These are 6 types. Labor hours, machine hours, production units, material cost, labor cost, prime cost. Now, last year, this is the last year information. Yenappa. The first table is the last year, 30th September is the last month. Last month information is this. Agreed. How much is the overhead charged to 115, 640, 118, 400, 120, 380. Now we need to know on what basis they are absorbing this. Are understanding? What all the basis possible? Number one, material cost possible. Direct labor cost possible. Hours possible. What else is possible? Prime cost is possible. Some of these two. Prime cost is possible. Are you understanding? Now what we need to do? Let us check one by one. First, let me take material cost. Let me take material cost. Listen to me. Okay, we'll do one thing. First preferable method is normally first preferable method is labor hours. We'll do one thing. Tell me 640 divided by 400. 640 divided by 400. 1.6. 400 divided by 250. 1.6. 380 divided by 300. 1.27. See, if they would have followed the direct labor hours, the absorption rate should be same, but the absorption rate is different. Are you understanding? See, how to calculate absorption rate? Absorption rate equal to overhead divided by labor hours. Are you understanding? Now, if it is 1.6 for everything, for all the three jobs, 1.6 means they followed only labor hours. Try to understand for all the jobs, absorption rate should be same. When you are using the labor hours, absorption rate is not same. So labor hours is not the base. Are you understanding? Now let us take the material cost. Let us take the, so this is not the base. Let us take the material cost. 640 divided by 1325. 640 divided by 1325. 0.48. 400 divided by 810. 380 divided by 765. 0.49. Correct? Huh? So this is also not base because it is not same. So material cost is not the base. Are you understanding? Just I'm trying to identify what they followed in the last year. Last month. Are you understanding? So when I'm using the labor hours, absorption rate is not same. When I'm using the material cost, absorption rate is not same. Let us use the labor cost. 0.8, 0.8, 0.8. And that means it is same. Which is the base? Labor cost is the base. Are you understanding? So last year they followed 0.8 in the sense 80%. Can I call it like that? 0.8 in the sense, can I call it as 80%? That means overheads equal to 80% of labor cost. Overheads equal to 80% of labor cost. 640 is 80% of 800. 400 is 80% of 500. 380 is 80% of 475. That means overheads is 80% of labor cost. Are you understanding? Now on that basis here, how to calculate overheads? They told that you have to follow same in the October month also. So you have to take 80% of labor cost. How much is the labor cost? 925. 925 into 80%. 740. Tell me the factory cost. 2990. Are you understanding? After getting factory cost, add admin and selling. How much percentage? 10%. How much is 10%? 299. So you'll get the total cost. 3289. To this, add profit. What is the percentage? 20% on cost. How much it is? 657.8. 658. Total. 3,947. Huh? Oh, this is the price. Like this, calculate for 118, 120. Have you understand this? Also, one of the important thing in this question is identifying the last month absorption rate. Apart from that, it's a very simple question. And one more thing, considering the last period material cost and current period material cost. Last period labor cost and current period labor cost. That is also important. These 2 points are important. Are you understanding? So by this we done with the job costing. Clear? Yeah. So let us start with the one more important topic called as the process costing. See, I'll tell you in very simple line. Process costing. I'll directly explain you the content. What is this process costing? Please understand, this is one of the method which can be used by the companies in which the same raw material passes through different process before converting into finished good. The same raw material passes through different process before converting into finished good. In those kind of companies only, they can follow the process costing. I'll give the best example. The company which is manufacturing cotton products, the company which is manufacturing cotton clothes. What is the basic raw material? Cotton. First they'll purchase the cotton, they'll purify the cotton, convert into thread, which is called as spinning. That department is called as the spinning. This thread will convert it to cloth, weaving. This cloth will be converted to colored cloth, dyeing. Colored cloth will convert into shirt, stitching. Are understanding? Okay. For better understanding, I'll show you the picture. This is the picture. See, this is the cotton, basic raw material. Went for the spinning department, converting into thread, and then went for the weaving department, and then went for the stitching department, and finally this is the finished product. And either it can be sari or dhoti. Okay. So when you take a cotton products man, simply I can say textile companies will follow the process costing. That is one thing. I'll tell you one more thing. Leather products manufacturing company, they'll purchase the leather. From leather they'll produce multiple products: leather bags, leather belts, leather shoe. Are understanding? So everywhere the raw material is leather. I'll have to clear about this. So like this, there are multiple things like that. So the companies in which the basic raw material passes through different process before converting into finished good. Are you understanding clear? Next. The point is, the objective of this chapter is valuation of the stock. The objective of this chapter is valuation of the stock. Let me take an example. Process 1. Process 1. In process 1, we are going to incur the material cost. That is called 2 direct material, or we will call it a material introduced. That is the first process. That is the first process. So use the terminology called the material introduced into the process. Are you understanding? Next, we are going to write 2 additional material. Sir, what is this additional material? Please understand. In case of stitching department, when they're stitching the shirt, to this shirt they're adding the buttons. This is the additional material. Are you understanding? So main material is cloth. Additional material is button. Are you understanding? So like that, see, when it comes to to material introduced to additional material. Additional material is also called the auxiliary material. Additional material is also called the auxiliary material. Are you understanding? Next, 2 wages, 2 overheads, production overheads, 2 other expenses. If you make a total, we get the total cost incurred in the P1 department. Total cost incurred in the P1 department. Are you understanding? Now, this total cost, we need to apportion to the output. Are you understanding? On the debit side, we are going to record the input. On the debit side, we are going to record the input. On the credit side, we are going to record the output. Whatever the input cost is there, that should be apportioned to the output. That is what we are going to do in this chapter. Nothing else. Throughout the whatever the method it is. Ultimately, goal is process wise. What is the input? What is the cost? Apportion to the output. That's it. It is the apportionment of cost. This chapter is nothing but apportionment of cost. Are you understanding? Now the point is, let me take an example. Input given is 1000 units. Input given is 1000 units. Are you understanding? Okay, let me write here only to avoid the confusion. Process 1. Input material introduced is 1000 units at the rate of 1 lakh. Generally, we have 2 columns. One is to track the units and one is to track the amount. Units, amount, particulars. Are you able to visualize? Now, what happened to this 1000 units? That is the question mark now. The 1000 units can be come out as the output in 3 forms. The 1000 units can be come out as the output in 3 forms. What are the 3 forms means? Number 1, completed, which is called finished goods. Number 2, uncompleted, which is called work in progress. Number 3, loss. These are the 3 outputs possible. Either the 1000 units should have been completed, or it is lying as a work in progress, or it is lying as a loss. Nothing else is possible. When it comes to loss, how many types? Two types, normal loss, abnormal loss. Abnormal loss, P&L, normal loss, load it to the good units. Are you understanding? Now the point is completed is finished goods, uncompleted is work in progress. That is what we are going to do in the process costing here, nothing else. Are you understanding? But with few adjustments for the appropriate apportionment. For the appropriate apportionment, we are going to do few adjustments. Are you understanding? This is all about process. Process costing is about units valuation. Process costing is about units valuation. And one more thing, to apply the process costing, the output should be similar. If the output is similar, which method will follow? Unit costing. That means we are going to take the average cost. Are you understanding? Here, just I told you there is a loss. When there is a loss, whenever there is a loss, what is the formula for cost per unit? Total cost minus normal loss scrap income divided by total input or total unit minus normal loss units. Total cost minus normal loss scrap income divided by total input minus normal loss units will give cost per unit. All of you clear about this? Understanding? So this is the overview of the chapter. Now, how many types of problems possible means only 3 types. With stock, sorry, let me take first without stock. Without stock, with stock, inter-transfer profits method. Inter-transfer profits method. These are the 3 types that can be possible in the process costing. Either the question without stock, either the question can be without stock, or the question can be with stock, or the question with inter-transfer profits. These are the only 3 methods possible in your syllabus. All of you clear? Now, as I told you, whenever it comes to process account, this is the format. There will be particulars, units, amount. Particulars, units, amount. I hope you remember this. Are you understanding? On the debit side, we write all the expenses. On the debit side, we'll write all the expenses. In addition to that, material introduced 1,000 units at the rate of 1 lakh. And then we'll write additional material, wages, overheads, other expenses. Take the total, we'll get the total cost. And then we'll apportion. All of you clear? Now the point is, without stock, what does it mean? There is no opening stock, there is no closing stock. No opening stock, no closing stock. If there is no closing stock, see in this case, stock means closing stock, opening stock means work in progress. Sir, why? Once it gets completed, immediately will transfer to the next process. Once the product gets completed, immediately will transfer it to the next process. So there will be no closing stock of finished goods. In any process, there will be no closing stock of finished goods. The closing stock, what is possible, is only work in progress. Are you understanding? Yes. So, where we are? Okay, there is no opening stock, there is no closing stock. There is no opening stock, there is no closing stock. If that be the case, output. See, I already told 3 types of outputs possible. What are the 3 types? Completed, uncompleted, loss. So in this chapter, closing stock means only work in progress. Once the goods get completed, immediately we transfer to the next process. Closing stock means work in progress. So in this case, what I am telling, no stock. No stock means no work in progress. No work in progress, no finished goods. So whatever the input given 1,000 units, it will be resulted into completed units, loss units. No closing stock. Either it can be completed or loss. Are you understanding? So if this be the case, without stock means directly we will prepare the process. Directly we can start preparing the process. Are you understanding? So first to go through the question. Once you go through the question, you will get to know, is it with stock or without stock? If it is without stock, directly start preparing the process account. Are you understanding now? If it is with stock, we have 4 steps. We need to follow 4 steps. First, statement of equivalent units. Number 2, cost per equivalent unit. Number 3, apportionment. Number 4, process account. Are you understanding? So, without stock, directly process account. With stock, 4 steps. Statement of equivalent units, cost per equivalent unit, apportionment, process account. Clear? Next, when it is inter-transfer profits method, I'll explain later with the help of one question. All of you clear about this? Okay, now I took 3 questions under 3 methods. Please take illustration 2 in your book. Please take illustration 2 in your book. Look at the question. A product passes through 3 processes. The output of each process is treated as raw material for the next process. The output of one process will be taken as input to the next process, to which it is transferred, and output of third process is transferred to the finished stock. So 3 processes are there. 1, 2, 3. 1 will go to 2, 2 will go to 3. From 3 it will go to finished goods, because the goods get completed. Are you understanding? Next. If you look at process 1, let us look into the process 1. Material issued 40,000, labor 6,000, manufacturing overheads 10,000. 10,000 units have been issued to the process 1, and after processing, the output of each process is as under. First of all, tell me, to the process 1, how many units given? 10,000. How many units is the output? 9750. Listen to me carefully. Listen to me carefully. In the entire question, see, no stock of material of work in progress was left at the end. So there is no raw material, there is no work in progress. I already told you there is no finished goods. Are you understanding? So no raw material, they only mentioned that no raw material, no work in progress. I already told you no finished goods. Why? Because once it gets completed, immediately transferred to next process. So there is no opening stock, there is no closing stock. If there is no opening stock, closing stock, what we are going to do? Directly we are going to prepare the process account. Are you understanding? Now tell me, before that, process 1, 10,000 units given as input. Process 1 input is 10,000. Output completed 9,750. Stock, closing stock 0. Closing stock is 0. Yeah, they want to mention. I understand. So what is left out? Loss. This completed 9,750 will transfer to which account? Process 2 will transfer to process 2. And how many units is the loss? 250 units. Are you understanding? In this 250, we need to identify how much is normal and how much is abnormal. What is normal loss? No. What is normal loss? Expected loss. What is abnormal loss? Unexpected loss. What is the expectation here? 2%. Normal loss is 2%. Now the point is, this 2% should be applied on what? Input or output? In the absence of information, input. In the absence of information, input. If they specifically mentioned to apply an output, apply it on output. Are you understanding? Now tell me, 2% of input, 2% of 10,000, how much it is? 200. So normal loss is 200. Abnormal loss is 50. Are you understanding? So now what I am going to do? I am going to write it as normal loss 200, abnormal loss 50. Total 10,000, total 10,000. Are you clear? Same way, process 2. What is the input? 9,750. We are giving the input of 9,750. Are you understanding? Output of process 1 will become input to the process 2. Output of process 1 will become input to the process 2. 9,750. Out of 9,750, how many units completed? 9,400. This will transfer to process 3. This will be transferred to process 3. Now tell me, what is the loss? Total loss 350 here. 9,750 given as input, output is 9,400, difference is 350. 350 is the loss. Are you understanding or not? Okay, now out of this, transfer it, classify into normal loss and abnormal loss. Normal loss, abnormal loss. How much is the normal loss? 4. Expected is 488, correct? Actual loss is 350. Actual loss is 350. Normal loss is 488. Now tell me, difference is called as what? Abnormal gain. The management expected to lose. Understand this properly. The management expected to lose 488. But actual loss is only 350. God is sitting beside to the management so that they're getting good units. What they expected as a loss turned into good, which we call as abnormal gain. Are you understanding? How much is the abnormal gain? 138 is the abnormal gain. Now what we need to do? Here we need to account normal loss only. We are going to account 488. Are you understanding? We are going to account normal loss 488. And we are going to account abnormal gain 138. First we'll account the expected loss. First we'll account the expected loss. The turned into good we are going to account the abnormal gain. Beyond expected loss, whatever the loss happened is abnormal loss. Are you understanding? All of you. So we are going to account the expected loss. Whatever the expectation of the management, first we'll account that. And then we'll compare where the loss is exceeding expectation or below the expectation. If it is exceeding the expectation, abnormal loss. If it is below the expectation, abnormal gain. That is how we'll account. Are you understanding? Okay. So abnormal gain is 138. Total loss is 488. If you make a total, the total units will match. Next, process 3. Process 3. Can you tell me input? How many units we given input? 9,400. Are you understanding? Now what is the output? 8,000 is the output. Now what is the loss? 1,400 is the normal loss. What is the net? What is the total loss? 1,400 only. Normal loss 940. Yeah. Okay. Total loss is 1,400. Out of this, normal loss is 940. Abnormal loss is 460. So normal loss 940. Abnormal loss 460. Have you understand this? So this is about the process 1, process 2, process 3. Now what will happen? This is about the units classification. After this units classification cost, when it comes to process 1, how much is the material cost? How much is the material cost in process 1? And one more thing. What is the material cost? 40,000. Labor cost 6,000. Overheads 10,000. Total 56,000 is the total cost. Are you understanding? We need to calculate cost per unit. How to calculate cost per unit? Total cost minus normal loss scrap income divided by total input minus normal loss unit. Total cost is 56,000 minus. Is there any scrap income given? No. So we'll take it as 0. Divided by total input 10,000 minus normal loss units 200. Here it is. Are you able to understand? All of you. 10,000 given as input, 9,750 is the good units, 250 is the loss. Out of 250, 200 is normal loss, 50 is abnormal loss. Okay. Now, so which equals to 56,000 divided by 9,800 rupees 5.71. Are you understanding? This 5.71 we need to apportion. Look at here. I'll show the solution. See here. 10,000 units, 40,000, and one more thing, unit should be taken only for material, and it will be there only for material because the same material passing through different process. Here the target is I given the input of 10,000 units. What is my finished goods? I am going to track these two. I given the input of 10,000 units. What is my finished goods? That is what I am tracking here with the help of units. Normally, when we prepare the ledger, we will not write the units. But here I am writing the units because I need to know how much input I given and how much output I am getting. To trace the every process. I am counting the units also. Are you understanding? So 10,000 units, 40,000, 6,000, 10,000, total 56,000. This is what we calculate 5.7142. It's better to take the 4 decimals. Why? Because due to rounding out difference, some difference will come between the debit and credit. To avoid that, take the decimals, take the 4 decimals, so that you can make it very nearer. 3 rupee, 4 rupee difference will come. The 3 rupee, 4 rupee difference we have to adjust in the stock, closing stock. Normally we adjust in the closing stock. That is how they did it in the study material. Are you understanding? Now the point is here. When it comes to normal loss, 2% of 10,200, abnormal loss 50, process 2 account 9,750. Now this 5.7142 has been apportioned to process 2, has been apportioned to abnormal loss. Do we apportion cost to normal loss? First of all, tell me, do we account the normal loss? Do we account the normal loss? According to financial accounting, they used to say, na, normal loss should not be accounted. Why? Because normal loss cost shared by good units. Are you understanding? So we are not accounting anything against to normal loss. All of you clear about this? No. Here I want to mention one more point. What is the one more point means? Against to normal loss, we have to write the scrap income. Luckily, in this question, there is no scrap income. If there is a scrap income, we have to write against to normal loss. Why? Why? There is a logic for that. I'll tell you the logic. The loss has been identified. Let me take an example. Just example. In this case, 200 units. Na? Suppose, if they would have given 2 rupees, if they given 2 rupees, how much is the scrap income? 400 rupees. Are understanding? So, they identified the loss 200 into 2 rupees, 400 rupees. This 200 units identified as a loss. In factory, what they'll do? They'll take out from the process and they keep it as a scrap. One person will come with the auto. Dabba wala, Gujri wala. Gujri wala will come with the auto. Are you understanding? He will come and he'll pay the money. How much he pay? 2 rupees per unit. 200 into 400 rupees. Are you understanding? He'll pay the 400 rupees and then he'll take the scrap. Gujri wala. Are you understanding? Now, when he pay the 400 rupees, we have to pass the entry. Can you tell me the entry? Cash account debit 400 to normal loss 400. Or understand, from normal loss only we are getting the scrap income. Cash account debit 400 to normal loss 400. Here the doubt, sir, how can you create the loss account? Few people will get the doubt, how can you create the loss account? Please understand what is loss pa? Incurring cost, not getting benefit, correct? Now tell me first of all, are we accounting any cost to the normal loss units? Are we going to account any cost to the normal loss units? What happened to the normal loss units cost? Shared by good units, adjusted to good units. Are you understanding? Normal loss cost is adjusted to good units. If normal loss cost adjusted to good units, then where is the point of loss? If there is no cost, then where is the point of loss? Are you understanding? If there is no cost only accounted, then where is the point of loss? Namesake, it's a loss account. Namesake, it's a loss account. There will be no normal loss. Are you understanding? So, I am writing cash account debit to normal loss account. Now, this normal loss should be transferred to respective process. In this case, 200 units happen in which process? Process 1. So, how to transfer that? Normal loss account debit to process 1 account. Can I write like this? Transfer entry. Normal loss account debit to process 1 account. Or else you can treat it like this also. We are accounting normal loss. Sorry. Okay, now transfer it in normal loss to process 1 account. How much is that? 400. Are you understanding? All of you. So, in process 1 account, what will write? By normal loss 400. That is the logic behind writing the scrap income here. Are you understanding? We have to write by normal loss 400. By normal loss 400. So, remember one thing. Against to normal loss, we are not going to write the cost because cost will not be accounted. What we are going to write is scrap income. Luckily, in this question, there is no scrap income, so that we are not writing anything. Have you understand this? All of you. So, what I mean to say, very simple. Whenever you want to prepare the process account, open the format. Particulars units amount. Debit all the expenses. Take the units column, material introduced. What are the units? And then come to the credit side. Look into the output. How many units are completed? How many units are loss, normal loss, and how many units are the abnormal loss? If there is a stock, we will go for the equivalent unit. That we will discuss later. Luckily, in this question, there is no stock. I told you only 3 types. With stock, without stock, with stock, inter-transfer profits. This question is without stock. So that we started preparing process accounts directly. Are you understanding? So, only 2 things possible. Completed loss. Identify that. Calculate cost per unit. Apportion the cost to the completed units. Apportion the cost to the abnormal loss. But don't apportion the cost to the normal loss. Against to normal loss, what will write? Against to normal loss account, what will write? Scrap income. All of you clear about this? Same way we are going to prepare the process 2, process 3. I hope you are able to understand this. Okay, see. Process 2, 55,714. Here we will take process 1, 55,714. They started with 9,750. And how much is the additional material incurred in the process 2? 20,000. This is the additional material added in the process 2. Are you understanding? Okay, this is the additional material added in the process 2. Next, labor, manufacturing overheads. Here, abnormal gain is there. Abnormal gain, we are going to show it on the debit side. Why? Because see, input given is 9,750. Output what I am getting is 9,400. Expected loss is 488. Total comes to 9,888. Input is only 9,750. That excess units I am book it as the abnormal gain on the debit side. Are you understanding? It is not the input, just accounting adjustment. It is just accounting adjustment. Are you understanding? Okay, now. So, process 3, how much transfer? 91,051. Total cost allocated to process 3. 91,051. Now, process 3 account, 91,051. Additional material 10,000. What is the labor cost incurred? 1,000. Manufacturing overhead 15,000. Are you understanding? Next. Here normal loss 0. Abnormal loss. And then finished goods value is 1,10,687. That will be transferred to the finished goods account. That will be transferred to, this is the last process. Process 3 is the last process. So transferred to finished goods account. All of you clear about this? Okay, now let us do one question with stock. I'll tell you in simple language so that you can understand better. Okay. Look at this. Total cost of 1,000 units. Total cost of 1,000 units introduced 1 lakh. Units transferred to next process 800. The closing stock is 200 units. Completed by 50%. This closing stock is completed by 50%. That means work in progress. All of you now prepare process 1 account. When I am preparing process 1 account, first particulars units amount, particulars units amount. Total cost, which includes material, labor, overhead, everything. Total comes to 1 lakh. Belongs to how many units? 1,000 units. What I am going to do? 1 lakh divided by 1,000. How much it comes to? Rupees? 100. 100. Now tell me, 800 into 100, 80,000. 200 into 100, 20,000. Now tell me, is this correct or wrong? Wrong. What is the mistake? Closing stock valuation. How can we apportion equal cost to the finished goods and closing stock? Closing stock is 50% completed. Process 2 units are 100% completed. How can we apportion the same cost to the 100% completed and 50% completed? Which is wrong. Are you understanding? Closing stock is 50% completed, na? Process 2 accounts are 100% completed. 100% completed, so that only we transfer to process 2. Are you understanding? We cannot apportion same cost to the closing stock and completed units. Then what we need to do? We need to calculate equivalent units. Are you understanding? Listen. See here. 1,000 units given as input. Output is completed 800, stock 200. This stock is 50% completed. So now what we need to do? This 800 is into 100%, 800. This 200 is into 50%, 100. So how many units are the equivalent units? 900. This 900 is the equivalent units. Please tell me how many units given as input. How many units given as input? 1,000. How many units are the units? How many units are the output? 1,000. How many units are the output? 1,000. How many units are the equivalent units? 900. You need to have the clarity of this. There is no loss in this question. In this example, I given the input 1000, output is also 1000 units. When you take it as equivalent units, 900. Why I am calculating equivalent units? To do the right apportionment of cost. Are you understanding? All of you, listen, see, try to understand. Input is 1000. Out of input 1000 units, 800 are completed, 200 are uncompleted. 800 completed, 200 uncompleted. But totally 1000 units only. Output is 1000 units only. Out of 1000 units, 800 completed, 200 uncompleted. Are you understanding? No. I'll repeat again. Should I repeat? Not repeat. So please understand, input is 1000 units. I hope you understand that. Then output is also 1000 units. But what happened? What is the classification in that means? 800 is completed units, 200 is uncompleted units. Are you understanding? For the proper apportionment of cost, for the purpose of proper apportionment of cost, I am calculating the equivalent units. How many units are the equivalent units? 900 units. Now what I'll do? I will calculate cost per unit. That is 1 lakh is the total cost divided by 900, which equals to 111.11111. Are you understanding? Now, then what I'll do? I'll do the apportionment. First, completed units. How many units are completed? 800. See, while doing the apportionment, completed units equal to equivalent units of completed. See, 111.111 per equivalent unit. Can I write like this? That is not per unit, that is per equivalent unit. Per unit means I would have divided with 1000. But with how many units are divided? 900. What is the 900? Equivalent units. So per equivalent unit. Are you understanding? So okay. So 111 per equivalent unit. Now the point is apportionment. Completed units. How many units are equivalent? 800. So 800 into 111.11111. You will get 88,889. Are you understanding? Next, stocks. How many units are equivalent units? 100. How many units are closing stock? 200. Units is 200, but equivalent units is 100. Are you understanding? So, equivalent units is 100 into 111.11111. That is 11,111. Are you understanding? So, this is how we need to do the cost apportionment. Now, what we will do? When you prepare the process account, everything is correct except this cost apportionment. So what here it is 88,889. Here it is 11,111. Units is 200 only. Don't write 100 here. Here I am writing units, not equivalent units. Are you understand what I am explaining? All of you. Okay. So this is how we need to prepare the process account when there is a stock. Here the point is what is happening whenever there is a closing stock. First step is equivalent units. Second step is cost per equivalent unit. Third step is apportionment. And then fourth step is process. Are you understanding? Step wise we need to prepare. First calculate the equivalent units. Second calculate the cost per equivalent unit. Third calculate the apportionment. Apportionment in the sense to which how much cost we need to apportion to the output. And finally we are going to calculate the process. We are going to prepare the process. All of you clear? Now, before proceeding further, let me explain the format. Equivalent unit statement. Don't write. I'll tell you. We are going to classify into 3 categories. We'll write input, we'll write output, and then we'll write equivalent units. Under equivalent units, we'll take material, labor, and overheads. Under this, we'll take percentage of completion units, percentage of completion units, percentage of completion units. So, ultimately, for easy remembrance, I'm telling you how to remember this means there are only 3. Number 1, input. Number 2, output. Number 3, equivalent units. Okay. First, under input, I'll take particulars, units, Under output, I'll take particulars units. Equivalent units of material we need to calculate separately, labor we need to calculate separately, overheads we need to calculate separately. Clear? Understanding? Now, material percentage completion will get equivalent units. Here percentage completion will get equivalent units. Percentage completion equivalent units. Let me take an example. Just example. No very related to any question. Just example. So I'll write here opening stock. Listen. Opening stock 2000 units. Introduced 10,000 units. Total 12,000 units. Okay. In the question, they'll give like this. Opening stock of 2000 units. Amount comes to 15,000. Material 40% completed. Okay. Material 100%. Labor 60% completed. Overheads 40% completed. How to read this? When I say opening stock, there is a closing stock of last year. When I say opening stock, there is a closing stock of last year. In the last year, when they evaluate the closing stock, what is the cost comes to? 15,000. That 15,000 incurred in the last period or current period? Last period. Are understanding? And what is the percentage completion means? Material, how much percentage? 100%. Current period, how much is the material? Huh? 0. Last period, 100% already incurred. Current period, how much will incur? 0. Labor, last period, how much they incurred? 60%. Current period, how much will incur? 40. Overheads, last period, how much they incurred? 40%. Current period, how much will incur? 60%. Are you understanding this information? Cost incurred towards the opening stock in the last year is 15,000. That is the first point. Second point, when it comes to material, 100% is already accounted in the last period. Current period accounting is 0. Labor 60% accounted in the last period. Current period accounting is 40%. Overheads 40% accounted in the last period. 60% in the current period. Are you understanding? Okay, so here opening stock 2000 units. Material introduced 10,000. Total comes to 12,000. So that means total input, how many units? 12,000 units. Out of 12,000, they given like this. Completed 9,000 units. Completed 9,000 units. Normal loss. Okay. Closing stock 1,000 units. Normal loss expected is 10%. Like this they given. Now completed how many units? 9,000. Completed means when they follow FIFO method. This accounting is when they follow FIFO method. This is one more thing which we need to consider. Which method the company is following? FIFO or weighted average. So FIFO method. Let me take an example. Company following the FIFO method. You tell me out of 2,000, 10,000, which will be completed first? Which will be completed first? 2,000. Which came first? Opening stock came first. Opening stock came first. So first they'll complete opening stock. And then they'll start with the new introduction. Are understanding? So total complete is how many? Total complete is how many? 9,000. They are following FIFO method. And total complete 9,000. What I am going to do? I'll record it to 2. Opening completed, introduced and completed. I'll classify like this. Are you understanding? Because percentage of work done is not same. Opening completed means last year some percentage of work done, current year some percentage of work done. Introduced and completed means full work done in the same period. Are you understanding? Introduced totally 9,000 units completed. First they'll complete the opening stock. Opening stock already some percentage completed in the last period. Already some percentage of work done in the last period. Balance percentage will be done in the current period. Are you understanding? So what I'm doing, this 9,000 I'm splitting into 2. I'm classifying into 2. Opening completed, introduced and completed. How much is opening completed units? 2,000. How much is the introduced and completed? 7,000. Are you understanding? So here I'll write opening completed 2,000. Introduced and completed 7,000. Are you understanding? Opening completed 2000, introduction completed 7000. Look at this. How much is the closing stock? 1000. Nothing can be understandable, sir. Closing stock, sorry. Closing stock 1000. Are you understanding? Closing stock is 1000. What I'll do? I'll write here closing stock 1000. What is the balance left out? 2000. Totally 12,000. Opening completed 2000, introduction completed 7000, closing stock 1000. Balance left out is 2000. What is the 2000? Loss. The 2000 is loss. In that we need to know normal loss, abnormal loss. Normal loss is how much? 10%. Are you understanding? 10% of input. Input is how much? 12,000. 12,000 into 10%. 1,200. So abnormal loss is 800. Total comes to 12,000. This is how we need to write the units, input, output. Have you understand this? All of you. Okay, now. And then, now what will happen? We have to write the percentage completion. Listen to me very carefully. Percentage, if you are able to write correctly, remaining all the steps, clerical job. If you are able to do this one steps properly without any mistake, remaining all the steps is clerical job. You can arrive at you can easily tally the process account. If you do one small mistake in this step, your entire question is wrong. If you wrongly calculate the equivalent units, your cost per equivalent unit is wrong. If your cost per equivalent unit is wrong, apportionment is wrong. If apportionment is wrong, your process account is wrong. Are you understanding? Now, look at this information and tell me opening completed. Opening, what is the meaning of opening completed? Opening stock which get completed. That is the opening completed meaning. Now tell me in the current period. Let me take an example. Let me take in months for easy understanding. This is the November month. This is the November month. Okay. We are doing it for the December month. Now tell me in the month of December, what percentage of material added to the opening stock? 0. Because in the month of November only 100% accounted. In the month of December, 0. Are you understanding? Now tell me what percentage of labor cost added in the month of December? 40%. Because 60% added in November. In the month of December, 40%. Can you tell me overheads? 60%. Are you understanding? Next. Introduced, completed. What is the meaning of this? Introduced in December, completed in December. How much is the material? 100. Labor 100. Overheads 100. Everything completed in the same period. Are you understanding? Next. Closing stock. Just example. Material 100. Labor 70%. Overheads 50%. Are you understanding? See, 70% completed in the December. In the month of Jan, how much percentage they linker? 30%. 50% completed in the December. In the month of Jan, 50%. Are you able to understand these percentages? Now, normal loss. What we'll do? See, actually, we have to take the units. Nothing. See, 1,200 units is there. But why I'm not taking units means anyhow we are not going to apportion the cost. Are we going to apportion cost to normal loss? No. Are you understanding? So that no need to take the units of the normal loss. Abnormal loss. See, nothing has been stated regarding the loss. Loss can be identified at different stages. Loss can be identified after completion of the 60%, after completion of the 80%, after completion of the 100%. It depends upon the nature of process. If nothing is stated in the question, then 100%. After completion of 100% only they are able to identify the loss. I am repeating again. Loss can be identified according to stage of inspection. At what stage they are doing the inspection. See, once you do the inspection, then only you will get to know where the product is, where the unit is loss or good unit. Without doing inspection, how you will get to know? Now the question mark is when they did the inspection. Are they doing the inspection after completing 60% or after completion of 80% or after completion of 100%? Until unless you go to the practical life, until unless you go to the factory, you don't know at what stage they're doing the inspection. Then how to do it in the classroom? If they given in the question, we'll take accordingly. If nothing has been stated, we'll assume 100%. Are you understanding? So in this example, I didn't give you anything. So we'll take it as 100, 100, 100. Are you understanding? Using this, we'll calculate the equivalent units. 2000 into 0, 0. 2000 into 40, 800. 2000 into 60, 1200. Like this. Here it is 7000, 7000, 7000. If you make a total, equivalent units of material, equivalent units of labor, equivalent units of overheads. So this is the process to calculate the equivalent units. Keep it in mind, input, output, equivalent units. This is very important. Are you able to understand, all of you? So like this, we'll calculate the equivalent units. Now what happened after calculation of equivalent units? We'll calculate cost per equivalent unit. How to do that? Here I'll take particulars. Cost equivalent units. Cost per equivalent unit. Here I'll take material, labor, overheads. We'll take the cost. Just now we calculate the equivalent units. We'll calculate cost per equivalent. I understand. And then we'll do the apportionment. Clear? No. Do one thing. We'll do one question based on this. Switch off. I don't know where to switch off. Okay, do one thing. Take a break for 5 minutes. We'll continue. Now 3:33. We start with 3:38. Is it get off? No. Do it now. Okay. Let us do one thing. We started this example. Let us complete this example, which can help to understand the full overview of the FIFO method. Okay. The next question, what I'm going to do, that is based on the average method. Okay. Now let us do this question fully for better understanding. This is the opening completed. This is the introduced and completed. And this is the closing stock. This is the normal loss and this is the abnormal loss. Tell me one by one. What are the units here? 2000 into 0, 0, 2000 into 40%, 800, 2000 into 60%, 1000, 200. 7000 into 100%, 7000, 7000 into 100%, 7000, 7000 into 100%, 7000. 1000 into 100%, 1000, 1000 into 70%, 700, 1000 into 50%, 500. 0, 0, 0. 800 into 100%, 800, 800 into 100%, 800, 800 into 100%, 800. Now can you tell me the totals of this? What are the equivalent units of material? 8,800. What are the equivalent units of labor? 9,300. What are the equivalent units of overheads? 9,500. Are you understanding? So this is the equivalent units of materials, equivalent units of labor, and equivalent units of overheads. All of you clear about this? Now let me take an example here also. Normal loss 10%, scrap income equals to, just example I'm taking, per unit 10 rupees. Per unit 10 rupees. Okay, now look at here. So we're done with the equivalent units. What is the next step? Cost per equivalent unit. What we need to calculate is cost per equivalent unit. Look at here. Step number 2. Statement showing cost per equivalent unit. Statement showing cost per equivalent unit. How to do this means, first we'll take particulars and then we'll take cost, equivalent units, cost per equivalent unit. Are you understanding? Now, so first we'll take material, leave one line gap, labor, overheads. Let me take an example. Material cost comes to 92,400 rupees. Material cost comes to 92,400. Labor cost comes to 93,000. Overhead cost comes to 95,000. Just example, I'm taking everything. Okay, now here what is happening? Normal loss is scrap income 10 rupees per unit. How many units are normal loss? 1200 units. 1210 rupees. 12,000 units. 12,000 rupees is the scrap income. Now the point is, while calculating cost per unit, we need to adjust the scrap income. Are you understanding? Total cost minus normal loss scrap income divided by total units minus normal loss units. Here the question mark is out of material labor overheads. Out of material labor overheads. out of material labor overheads. Against what we are going to adjust the scrap income means we are going to adjust against material. We have to adjust against material. Are you understanding? So 92,000 minus 12,000. 92,000 minus 12,000. How much it comes to? 80,000 is the material cost. Labor cost is 93,000. Overheads is 95,000. Have you understand this point? Adjustment of scrap income. All of you clear about it? Whenever it comes to scrap income, adjust only against material or main material. If there is only material, adjust against material. Main material, additional material. Adjust against main material. Are you understanding? Now, equivalent units. Material, how many units? 8,800, 9,300, 9,500. 8,800, 9,300, 9,500. Here it is 10 rupees, here it is 10 rupees. How much is here? 9.10 na? 9.10. 0909 na? 9.0909. Okay. Total comes to 29.0909. Are you understanding here? So this is cost per equivalent unit. Now we need to do the apportionment of cost. Are you understanding? Next step is Roman number 3. Apportionment. Roman number 3. Apportionment. Now the point is apportionment to what? Number 1, opening completed. Number 2, introduced and completed. Number 3, closing stock. Do you apportion cost to normal loss? No. Number 4, abnormal loss. Are you understanding? First, opening completed. Let me take opening completed. I'll do it here. 15,000 is the cost. Remember, 15,000 is the cost. Now, let me evaluate opening completed. Okay, this is the step number 3. Step number 3, apportionment. Apportionment. First, A, opening completed. Opening completed, material, labor, overheads. What is the equivalent units of opening completed material, labor, overheads? What is the equivalent units? Material, 0. Labor, 800. Overheads, 1,200. 800, 1,200. Just I am taking the equivalent units into what is the cost per equivalent unit of material? What is the cost per equivalent unit of material? I am multiplying equivalent units with the cost per equivalent unit. Are you understanding? When I am doing the apportionment of cost, I need to apportion to opening completed, introduced and completed, closing stock, abnormal loss. First I am evaluating opening completed. When it comes to opening completed, I am taking equivalent units of opening completed, multiplying with the cost per equivalent unit. Are you understanding? So 0, 800, some units has been taken. Now we need to multiply with the cost per equivalent unit. 10, 10, which equals to 0 is the material cost incurred in the current period. Are you understanding? Next, what is the labor cost incurred? 8,000. What is the overhead cost incurred? 12,000. What is the total cost incurred? 20,000. What is the last period cost? 15,000. As an example I given you. 15,000 is the last period cost. Are you understanding? Total comes to how much? 35,000 is the value of opening completed. All of you clear about this? Next. B. Introduced and completed. When it comes to introduced and completed, 7,000, 7,000, 7,000. Can I take directly 7,000 units? Are you understanding? So 7,000 units into cost per equivalent unit is 29.0909. Directly I am multiplying with the 7,000. Instead of taking material, labor, overhead separately, I am taking directly 7,000 into 29.0909. How much it comes to? 2,03,636. 2,03,636. All of you clear about this? Next. Next, write C. Closing stock. When it comes to closing stock, material, labor, overheads. What are the equivalent units of material? 1,000. Labor, 700. Overheads, 500. 1,000, 700, 500 into 9.0909. Here it is 10, 10. Here it comes to 9,000, 9,090. Okay, 9,991. Can I take it like that? 9,991. 700 into 10, 7,000. 500 into 10, 5,000. Total comes to 12. 21,091. This is the closing stock value. Normal loss, we are not going to apportion the cost. Against normal loss, we are going to write the scrap income. How much is the scrap income? 12,000. Are you understanding? Next, abnormal loss. We are going to evaluate the abnormal loss. D. Abnormal loss. Abnormal loss. Now, abnormal loss, what are the equivalent units? 800, 800, 800. Can I take directly 800 into 29.0909? How much it comes to? 272.72. Okay. 23,273. Have you understand till here? So we're done with the apportionment. Now what we need to do? We have to go for the preparation of process account. I have to prepare here only. There no space, or else I'll do one thing. Next. Roman number 4. Preparation of process account. Preparation of process account. Process 1. Let me give it as process 1 account. Particulars, units, amount. Particulars, units, amount. 2. Opening stock. 2. Material introduced. 2. Labor. 2 overheads. First, opening stock. How many units? 2,000. Introduced 10,000. Are understanding? So opening stock 2,000. And what is the value of this? 15,000. Correct? Huh? Introduced 10,000. What is the value of this? 92,000. Labor 93,000. Overheads 95,000. So we can make total of this. Next, by process 2. By process 2 account. First what I'll write? I'll write opening completed, introduced and completed. By closing stock. By normal loss. By abnormal loss. Are you understanding? All of you? So now we already calculated the values. Opening completed. What is the value? Opening completed. What is the value? 35,000. Introduced and completed. 21,091. Opening completed 35,000. Sorry, introduced and completed 2,03,636. I'm sorry. 2,03,636. 35,000. First write the units. See, and one more thing. When you prepare the process account, first write the debit side. When you are writing on the credit side, first write the units. Okay. Opening completed. How many units? 2,000. Introduced and completed 7,000. Closing stock 1,000. Normal loss 1,200. Normal loss 1,200. Abnormal loss 800. So units will match 12,000. 12,000. Are you following the discussion? Now the point is opening completed value is 35,000. Opening completed value is 35,000. Introduced and completed 2,03,636. 2,03,636. Closing stock value. Closing stock value 21,091. 21,091. Next, abnormal loss 23,273. 23,273. Now tell me, against normal loss, what will write? Scrap income. How much is the scrap income? 12,000. You will be getting difference of 6-7 rupees. You just check it. First tell me the total of debit side. 2,95,000. Here Exactly matching. Oh, super. 2,95,000. Are you understanding? So exactly it is matching. So this is how we need to prepare the process account under FIFO method when there is a stock. All of you clear? Understanding? Okay. Now, as I told you, you need to remember whenever there is a stock, 4 steps: equivalent units, cost per equivalent unit, apportionment, process account. Equivalent units, 3 columns: input, output, equivalent units. Cost per equivalent unit is total cost. And one more thing: when you are taking the cost, adjust the scrap income against material or main material. If there is only material, material. If there is a material and additional material, main material and additional material, main material. Or understand? And then cost per equivalent unit, and then apportionment. Sorry, preparation of the process account. All of you understand this? This is the FIFO method. Whenever there is an average method, weighted average method, there are some changes. What is the changes means? Number one, when you follow the average method, what is the changes means? Let me explain one by one. Listen. There is, see, we have to take on average. First of all, tell me, weighted average method means we are going to take the average of the quantity and price. We are going to take the average of quantity and price. So, what is the total quantity is 12,000. And one more thing, when I'm evaluating completed units, I require the average cost of the completed units. I'm not going to evaluate opening separately, introduce separately. I'll take on average. When I'm taking on average, don't consider bifurcation. First change, what is going to happen is when it is weighted. See, there are two types of stock valuation in process costing. In process costing, they given you the questions based on 2 methods. One is FIFO method and weighted average method. There is no question based on the LIFO, simple average. So don't scratch your head about that. They given only 2 methods: FIFO, weighted average. Are you understanding? Or not? Okay, so as I told you, only 3 methods. Na? See, I can tell you one more thing. There are 3 questions, 3 types of question: without stock, with stock, and inter-transfer profits. When it comes to with stock, 2 categories. With stock, 2 categories: FIFO, weighted average method. These are the problems. Now what we are discussing is FIFO. We're done with that. Now the time to discuss the weighted average method. When it comes to weighted average method, what is the changes means? Instead of writing opening completed, introduced and completed, directly will write completed units. Directly will write it as the completed units. Clear? All of you? Next. The second change is in step 2. See, first step is directly will write the completed units. In step 2, when you write the completed unit directly, we take in the total units. Please understand. 2,000 is the opening completed, 7,000 is the introduced and completed. I'm not bifurcating. I'm taking total together as a completed units. When I club the units, I need to club the cost. Opening cost, opening stock cost, and introduced and completed cost I need to club. Are you understanding? How to club that means in the second step, what I'm going to do, instead of writing like this, I'll take previous period cost, current period cost, and then total cost. Previous period cost, current period cost, total cost. Previous period cost, current period cost, total cost. Previous period cost, material 15,000, correct? Let me take an example. Out of 15,000, material is 5,000. Okay, 8,000. Material is 8,000, labor is 4,000, overheads is 3,000. Together comes to 15,000. Are you understanding? Current period cost, material 92,000, labor 93,000, overheads 95,000. Are you following the discussion? Totally 15,000 is the opening stock and current period cost. What I'm going to do, I'll club these two, which comes to 1 lakh. Total cost comes to 1 lakh. But from 1 lakh, I have to reduce the scrap income 12,000. If you reduce this, what is the net amount? 88,000. Are you understand? So the only change is, instead of taking only current period cost, take the last period cost also. Are you understanding? So take the last period cost, make the total. We'll get the total. So by taking like this, we'll get the total cost. Everywhere we'll get the total cost divided by equivalent units. We'll get cost per equivalent unit, which is called average cost per equivalent unit. Here cost per equivalent unit is nothing but average cost per equivalent unit. I'm taking the total units. I'm taking the total cost. Total cost divided by total units. Average cost per equivalent unit. Are you understanding? And then we'll do the apportionment. While doing the apportionment, no need to calculate opening completed separately. Opening completed separately, no need to calculate because totally we are accounting completed units. These are the three changes when you are following the average method. The first change is directly take the completed units. Second change is take the last period cost, current period cost, and then total cost. Third change is no need to calculate the opening completed. That's it. These are the three changes compared to FIFO and weighted average method. Are you understanding? All of you? Now, let us do one question based on the weighted average method. Look at this. Following details are related to work done in the process 1 by XYZ company during the month of March. Opening work in process 2000 units. Opening work in process 2000 units. What is the material cost? 80,000. Labor cost. Overheads. Now tell me these three costs incurred in the current period or last period? Last period. This is for the month of March. This is for the month of March. That means this is the cost incurred in the month of Feb. Are you understanding? So 80,000, 15,000, 45,000 incurred in the Feb. Now tell me what is the material cost incurred in March? 14 lakh 80,000. Material cost incurred in the month of March is 14 lakh 80,000. How much is the labor cost incurred in March? 3 lakh 59,000. Overheads 10 lakh 77,000. Now units scrapped 3,000. First of all, how many units is the opening stock? 2,000. Please be interactive. How many units is the opening stock? 2,000. How many units introduced? 38,000. What is the total input? 40,000. Out of 40,000, 3,000 is the scrap. Okay, 37,000. Okay, now. So, look at here. Unit scrap degree of completion. At what stage? At what stage they identified the scrap means once the units get completed by 100%, labor and hours by 80%. So, when it comes to loss, this is the last percentage completion. Degree of completion of the loss or degree of completion of the scrap. Are you understanding? All the time it will not be 100%. If they give the specific percentage, we have to consider the specific percentage. Clear? Next. Closing work in progress 2000 units. Degree of completion is 100%, 80%. Units finished and transferred to process 2, 35,000. Total input given is 40,000. Correct? Out of 40,000 transferred to next process 35,000. Closing stock is, this is completed. Uncompleted. Closing stock is 2,000. Loss is 3,000. Total matches. Then this loss, we need to know how many units are normal loss and how many units are abnormal loss. 5% of total input. 5% of total input including opening work in progress. So can you tell me 5%? 2,000 is the normal loss. Abnormal loss 1,000. Clear? All of you? Okay. Now units fetch 20 rupees per piece. Scrapped units fetch 20 rupees per piece. What is this? Scrap income. It is a scrap income. Are you understanding? Now you are required to prepare using average method. All of you clear? So now they are asking statement of equivalent production, statement of cost, statement of distribution of cost, process 1 account, normal loss account, abnormal loss account. Shall we start doing this in your material? Which question is this? What is the page number? Practical question number 1. Practical question number 1. 10.35. 10.35 is the page number. Study material 10.35 is the page number. Shall we start? Now let us look at the solution. First is statement of equivalent units. Look at this. Statement of equivalent production. Opening work in progress 2,000. Opening work in progress 2,000. Units introduced 38,000. Clear? Totally comes to 40,000. Next. Completed and transferred to process 2. Normally what we'll do? We'll write opening completed, introduced and completed. When? In which method? FIFO. But we are following which method? Average method. We are following average method so that directly we are taking completed. ಏನಪ್ಪ ಏನಾದರೂ ಅರ್ಥ ಆಗ್ತಾ ಇದೆಯಲ್ವಾ? I'm speaking myself. Are you understanding?
Yes.
See, try to understand the constraint. I cannot give the pause here and there because I need to complete all the chapters. I have to give at least overview of all the chapters because they given only 18 hours time. The subject which require 120 hours, not even 1/6. Are you understanding? So try to understand my problem also. But see, I just discussing process costing. I cannot say crash course got over. Crash course means it's like rocket speed. Okay, so there is no other option. Okay, now completed units is 35,000. Completed units is 35,000. Normal loss 2,000. Abnormal loss 1,000. Closing WIP 2,000. Now we have to take the percentage completion. Now tell me. Here the point is material and labor and overhead taken together because the percentage is same. Look at here. What is the labor and overhead percentage? 80. Labor and overhead percentage. Sorry, labor and overhead percentage 80. Both are same in all the cases. So that we are taking the same column. Are understanding? Now look at here. I am taking here 100%. So completed is 100%, 100%. Both are 100% because it is completed. 100% completed. Clear? Next. Normal loss, we are not going to take the units. Abnormal loss, I told you, they identified the scrap at the percentage of material 100%, labor and versus 80%. So they taken the same 100, 80. Are understanding? When it comes to closing WIP, that is also completed by 100%, 80%. Using that, we are calculating equivalent to 38,000, 37,400. Clear? So equivalent units of material, how many units? Equivalent units of material, how many units? 38,000. Equivalent units of labor, equivalent units of overheads, 37,400. Both one and the same because percentage completion is same. All of you understanding? Next point is cost per equivalent unit. Look at here. Statement showing cost of each element. We taken material, labor, overheads. So normally we take vertically, they taken horizontally. Are you understanding? Material, cost of opening work in progress 80,000, 15,000, 45,000. Cost incurring during the month. See, that's what I told you. Previous period cost, current period cost. Previous period cost is this. Current period cost is this. Are you understanding? Make a total. So here they given the scrap income. Scrap income realization that has been reduced. After reducing that, we'll get the total cost. This will be reduced from the material only. Are you understanding? So we are getting the total. Once we get the total cost divided by equivalent units, 38,000, 37,400, 37,400. We'll get cost per equivalent unit 40, 10, 30. Are you understand? Now we'll do the apportionment. While doing the apportionment, you tell me. Look at this. Remember one thing. Equivalent units cost is how much? Sorry. 40. Material is 40. Labor is 10. Overheads is 30. I hope you can store in the mind. Material is 40. Labor is 10. Overheads is 30. Okay. Keep it in mind. First, completed units. Completed units. Material, labor, overheads. 35,000, 35,000. All are same. So directly what we can do, instead of doing like this, directly we can take 35,000 into 80. 40 plus 10 plus 30. Are you understanding? So how much it is? 28 lakhs. Are you understanding this? Next, normal loss. We are not going to apportion the cost. Against normal loss, what will write? Scrap income. Against normal loss, we have to write the scrap income. Normal loss, scrap income. How many units is the normal loss? 2,000. What is the scrap income? 5 rupees. I think 5 rupees scrap income. How much is the scrap income per unit? 20 rupees. I'm sorry. 20 rupees. 20 into 2,000. 40,000. Normal loss scrap income is 40,000. Are you understanding? Next. Abnormal loss. Material 1,000. Material 1,000. Labor and overheads 800. So how to calculate abnormal loss? Look at here. Abnormal loss. Material, labor, overheads. Material is 1,000. Labor is 800. Overheads is 800 into cost per equivalent 40, 10, 30. Are you following? So which equals to 40,000, 8,000, 24,000. Total comes to 72,000. This is our abnormal loss. This is completed abnormal loss. Normal loss scrap income we calculated. Next, closing WIP 2,000, 1,600. Closing stock 2000 material, 1600 labor, 1600 overheads into 40, 10, 30, which equals to 80,000, 16,000, 48,000. Total comes to 1 lakh 44,000. 28 lakhs 72,000, 1 lakh 44,000. Look at here. 28 lakhs 72,000, 1 lakh 44,000. Are you understanding, all of you? Okay. So now we are preparing process 1 account. As I told you, first take particular units amount, particular units amount. First we write the debit side. Do it systematic way. Do it in very systematic way. First write the debit side. In debit side, first write opening WAP. They are written separately, which is not required. We can club these three. We can club and we can write the amount. Are understanding? Opening WAP 2000 units. Total cost comes to, this is 60, 1 lakh 40,000. Directly we can write that. Opening WAP 2000 units, 1 lakh 40,000. This step itself is not required. This entire thing is not required. This 3 is not required. Directly you can write 2000, 1 lakh 40,000. All of you clear? Next. Material 38,000 units, 14 lakh 80,000. Labor 3 lakh 59,000. Overheads 10 lakh 77,000. Make the totals. Clear? Now on the credit side, first tally the units. We given the total input of 40,000. What happened to that 40,000 means completed. How many units? 35,000. Uncompleted 2,000. Normal loss 2,000. Abnormal loss 1,000. Against abnormal loss we have to write the, against normal loss we have to write the scrap income 40,000. 2,000 into 20. Abnormal loss we valued. Process 1 account we valued. WAP we valued. If you make it total is in match. Are you understanding? All of this is how we need to prepare the process account. So we discussed the process account without stock, process account with stock FIFO, process account with stock weighted average. The only method left out is inter-transfer profits. Are you understanding? Okay now. Inter-transfer profits method. Now let us understand this first, then we'll go to the question. Now please understand what is this inter-transfer profits method means. Till now we discussed that from one process, the output what we are getting will transfer to next process. From there it will go to the next process. From there it will go to the finished goods. That means when we are transferring from one process to another process, we are transferring at cost. But now instead of transferring at cost, we are going to add some profit, which is called inter-transfer profits. From process 1, when we are sending it to process 2, we are not going to transfer at cost. We are going to add some profit. Let me take an example. Completed value is 1 lakh. We are going to add some profit. Are you understanding? I'll tell you. See, I'll take one basic example to understand this. Process 1. Process 1. What happened? Cost is 100 rupees. Cost is 100 rupees. Now, they're planning to add transfer profits. They're planning to add transfer profit. Transfer profit 20 rupees. What is the total transfer price? What is the transfer price? 120. Are you understanding? See, what is the cost incurred by the process 1? 100. How much is the transfer profit added? 20. What is the transfer price? 120. Now, when it comes to process 2, now tell me, in process 2, they will record from 2 process 1. They'll record, see, here we'll write by process 2. There they'll write 2 process 1. Now tell me how much they'll record. 100 or 120? 120. For them, the cost is 120. Are you understanding? Now what happened? 2 additional cost incurred. In process 2, they'll be incurring some cost. Labor, overheads, everything will be incurred. Let me take an example, 30. What the total comes to? 150. So according to process 2, total cost is 150. Are you understanding? Now they will add some profit, transfer profit. They'll be adding some transfer profit. Let me take 50. Are you following the discussion? Now tell me, according to process 2, how much is the transfer price? 200. In process 3, they will account 200 as the cost. Do you understand the scenario? Now, in these two processes, can you tell me how much is the actual cost incurred according to company? What is the actual cost incurred? What is the actual cost incurred? 130. 100 rupees in the process 1, 30 rupees in the process 2. That is the actual cost incurred. Are you understanding? So the actual cost incurred is 130. But we are transferred at what price? 200. That means 200 includes 130 actual cost, inter-transfer profits of 70. How 70? 20 added by process 1, 50 added by process 2.
Yes.
Are you understanding? So 130 is the actual cost, 70 is the inter-transfer profits. So what I mean to say here, the management wants to know what is the actual cost of the products and how much is the inter-transfer profits loaded. Are you understanding? So please understand, whenever they prepare process account, whenever they prepare the process account, here we are not going to have 2 columns, we are going to have 3 columns. At every process account, we are going to have 3 columns. Suppose process 2. Okay, let me take process 3. Let me take this is the process 3. Process 3, we are going to have particulars, total. This is the total column. Oh, more space. Okay. This is the total column. This is the cost column. This is the profit column. Here also particulars. This is the total column, cost column, profit column. Like this, we have three columns. In process 3, we have to write to process 2. Correct? From process 2 only we will transfer to the process 3. Are you understanding? Now, what is the transfer price here? 200. That will write in the total column. Because that is 200 is the cost according to process 3. 200 is the cost according to process 3. Don't think there's a total column means total cost. It's not like that. That is the total column is according to process 3. According to company, how much is the cost? 130. That is the actual cost incurred. So how much is the inter-transfer profits loaded? 70. So what you need to understand is total column denote respect to process. Total column denote respect to process. Cost column denote company cost. Actual cost according to company. Profit is the inter-transfer profits included. Are you understanding? Now, then what happened in process 3? They'll incur some material cost. Let me take an example. 20 rupees is the material cost. 20 is the material cost, which is the actual cost. 0 is the profit included in that. Are you understanding? Then 2 labor. 10, 10, 0. 2 overheads. 30, 30, 0. Now what will happen? We need to tally this. This will transfer to process 4. This will transfer to process 4. When they are transferring to process 4, according to process 3, can you tell me what is the total cost according to process 3? What is the total cost according to process 3? 260. If they mention in the question, profit 10% on cost. Profit 10% on cost means according to process 3 cost is 260. On 260 we need to add 10%. Are you understanding? So how much is the profit? 26. So total comes to 286. Now here also we'll take 286. At the 286 we are going to transfer to next process. All of you. Okay. Now here profit is 26 added. Here also we'll take 26. Now total profit. Let us tally the profit. Okay. What is the total? 96. Here also we'll take 96. Here it is 96. Cost. Total cost. 190. 190. 190. It will match. Sorry, not 196. 190. It will match. 190 plus 96, 286. Okay. Tally column by column. First tally the total column with respect to process. Then tally the cost column for the company. Then tally the profit column. Have you understand? All of it. So this is how we need to do the simple thing if you understand the logic. If you don't understand, complicated. As I told you, 3 columns are there. What are the 3 columns? Total, Cost, profit. Total according to which? Respective process. Total column according to respective process. Here we are doing two at a time. According to process, according to company. We are accounting two things. According to the respective process and according to the company. According to the respective process, total column. According to the company's cost column. And this difference is profit column. Are you understanding? All of you? Okay? Now. Illustration 6. A Limited produces product AXE, which passes through two processes before it completed and transferred to finished stock. The following data relate for the month of October. They given, look at this. They given two processes, process 1, process 2 and finished stock. Let us go process by process. First we'll do process 1, then we'll do process 2, then we'll go for the finished goods. Now process 1, how much is the opening stock? How much is the direct material? Direct wages 11,200, factory overhead 10,000. 10,000. Now tell me, opening stock debit side, direct material debit, direct wages debit, factory overhead debit, closing stock credit. Inter transfer profits included in opening stock 0, because this is the first process. There is no inter transfer profits in the stock in the first process. See, go back to our example. If you look at our example, in this 120, is there any inter transfer profits? In this 120 inter transfer, yes, how much? 20. That will start from process 2 only. In the first process, 100 rupees. Does it include any inter transfer profits? No. In the first process, there will be no inter transfer profits in the stock. From the second process on, it will start. Because second process, whatever input received, that is from process 1. Whatever input received to the process 2, that is from process 1. Are you understanding? So when you are receiving it from the process 1, they will send by adding the profit only. Are you understanding? Okay. So look at the question now. Here 0. But when it comes to process 2, they given 1,500. 9,000 is the opening stock value. It includes 1,500 inter transfer profits. 9,000 is the opening stock value. It includes inter transfer profits included in opening stock is 1,500. This 1,500 added in which process? Listen to me carefully. Opening stock value 9,000. They given inter process profits included in opening stock 1,500. My question is, this 1,500 rupees loaded in process 1 or process 2? Process 1. Process 1. Opening stock means which is not yet completed, work in progress. Are you understanding? That opening stock, whatever we are having, that is the stock received from process 1. From the process 1, when they send it to process 2, they'll add the profit. The 1,500 rupees added in the process 1. When the process 2 will add the profit, when they transfer it to process 3. Are you understanding? When they'll add the profit, when they're sending it to next process. Which one? Process 1 0. Process 1 0. My question is, this 1,500 rupees added in which process means? See, this is the process 1 0 regarding opening stock of process 1. I am discussing about opening stock of process 2. Opening stock of process 2 received from process 1. When they receive from process 1, they'll add the profit and then only they'll transfer to process 2. Are you understanding? All of you? Okay. Now, we'll go back to we'll do the process 2 later. First, let us complete the process 1. If you look at the process 1, and one more thing. Here, let us understand this information. Process 1, process 2, finished stock. Look at here. The output of process 1 is transferred to process 2 at 25% profit on the transfer price. Now tell me, this 25% is on sales or on cost? Sales, because on transfer price, nothing but sales. Transfer price is the sale price. Are you understanding? 25% on sales. Listen. 25%, 25 divided by 100 on sales. Can you tell me on cost? Profit on sales, that is 25%. I taken 25 divided by 100 on sales. Can you tell me on cost? Okay, 1 by 3. Can I write as 25 by 75? Are you understand? Simple, pa. So 25 divided by 100. This is the sales. On sales means this is the sales. I want on cost. 100 minus profit. 100 minus 25, 75. So 25 by 75 on cost. Don't convert into proportion. You just go by this. It will be easy for you. Are you understanding? Suppose if they given 20% on cost. That means 20 by 100 on cost. Can you tell me on sales? 20 by 120. This is the cost. Add the profit. Are you understanding? Don't convert into 1 by 5, 1 by 4. Forget about that. This is the best thing. 20% on cost. So 20 by 100 on cost. On cost means 100 is the cost. I want on sales means 100 plus 20, 120. Are you understanding? All of you. Sometimes they'll give you 18% on sales. 18% on sales. I want on cost. So 18 divided by 100 is the on sales. 18 divided by 82. 18 divided by 82 on cost. See, in our calculation, maximum time they'll give you 20%, 25%. Do you think the same profit in the practical life? In the calculation, always they'll give 10%, 25%, which is easy to calculate the proportion. But in the real life, it will not be like that. 17.5% is possible. 17.32% is possible. Are you understand? So what I mean to say, if they given 18% on sales, 18 divided by 100 on sales. On cost means 18 divided by 82. Are you understanding? Okay, now. Now, output of process 2 is transferred to finished stock at 20% profit on the transfer price. So this is the see, process 1 transfer to process 2 is 25% on transfer price. Process 2 transfer to finished stock is 20% profit on the transfer price. Are you understanding? 1 to 2 is 25%. 2 to finished goods is 20%. Are you understanding? All of you? I am understanding that you are becoming overloaded, but let's complete this question. Okay, now. Stock in process is valued at prime cost. This is very important. Stock in processes is valued at prime cost. What is the prime cost? Direct material plus direct labor plus direct expenses. Finished stock is valued at the price at which it received from the process 2. See, when it comes to processes, process 1, process 2, we are going to value at prime cost. Consider only direct material, direct wages. Don't consider the overheads. Are you understanding? When it comes to finished stock, valued at the price at which it received from the process 2. Process 2 will send to finished goods, na? At the same price they are going to value it. Clear? Next. Sales during the period is 1,40,000. This sales will happen from finished goods account. From process 2 will send it to finished goods. From finished goods the sales will happen. What is the sales happen in the current period? 1,40,000. All of you clear? Now, prepare process cost account and finished goods account showing the profit element at each stage. This is the question requirement. Let us do one by one. First, process 1. As I told you. Simple, pa. You tell me. Opening stock. And one more thing. We have 3 columns. Total, cost, profit. Correct? Opening stock. Total how much? 7,500. Cost how much? 7,500. Profit how much? 0. Direct material. 15,000. 0. Direct wages. 11,200. 0. But stop there. Here we need to calculate prime cost. Because for the stock valuation purpose, we require the prime cost. Are you understanding? How much is the prime cost? 33,700. 33,700. 0. Clear? Now we add the factory overheads. How much is the factory overheads? 10,500. 10,500. 0. So by this we'll get the total cost. What is the total cost? 44,200. 44,200. Listen to me carefully. This is the debitor. When it comes to credit, some amount has been transferred to next to process and some amount is lying as a closing stock. Now, here also I'll take total cost profit. First write the closing stock. 44,200 is the cost incurred. Correct? What I'll do, I'll write by closing stock. How much is the closing stock? 3,700. 3,700. 0. Correct? All of you. Now the point is, closing stock is already valued. What is the total cost incurred? What is the total cost incurred in the process 1? 44,200. 44,200 is the total cost incurred. All of you? Now, out of 44,200, how much is stuck as a closing stock? 3,700. What is the balance? 40,500. Normally, that 40,500 will transfer it to process 2. Normally. But here, we need to add the profit. Or understand? Normally, we'll transfer at cost. That 40,500 would have been transferred to process 2. But in this case, we are following inter-transfer profits. Means for that 40,500, we need to add the profit. How much is the profit given in the process 1? 25% on sales or cost? Sales. But 40,500 is cost or sales? Cost. On sales, 25%. Means 25 divided by 100 on sales. On cost, 25 by 75. Are you understanding? So, 40,500 is the cost plus profit. 40,500 into 25 divided by 75. 13,500. What the value comes to? 54,000 is the total value according to process, respective process. According to respective process, value is 54,000. Total column is the respective process. Remember, total column is the respective process. Cost column according to company. Are you understanding? Profit is the profit transfers, internal transfer profits. Are you understanding? Now tell me. 54,000 by will write what? Sales. By will write sales according to respective process. We done. Now, can you tell me the cost? Can you tell me the cost? 40,500. Profit? 13,500. We'll tally this. Are you understanding? That is what they given here. Look at here. 54,000, 40,500, 13,500, 3,000, 3,700. So, 44,200, 44,200, 13,500, 13,500. Have you understand the process 1 account? Now, understanding process 2 is very important. Process 1 is very simple, but you need to understand process. Why I am stressing so much into this question is, previous to previous attempt, they given the question. And even this time in RTP, it is there. This question is there. Maybe for your attempt, they may give in the examination. Are you understanding? Now, let us prepare the process 2. I am preparing process 2, total cost profit, total cost profit. Now, look at the process 2. Look at only this. Don't look at this. Only this one. Okay. Tell me one by one. First one is what? 2 opening stock. What is the total? 9,000. What is the cost? 7,500. 1,500 is the profit. So 7,500 is the cost. 1,500 profit. Next. 2 process 1. 2 process 1. Are you understanding? 2 process 1. 54,000 we transferred. 40,500 is the cost. 13,500 is the inter-transfer profits. Next, 2 direct material. How much? 15,750. 15,750. 0. 2 direct wages. 11,250. 11,250. 0. We'll add this. We'll add this because to get the prime cost, which helps to evaluate the stock. Are you understanding? Now, how much is the prime cost? 90,000, 75,000, 15,000. This is the prime cost. 2 factory overheads. Just factory overheads. 4,500, 4,500, 0. So this is the total cost. 94,500, 79,500, 15,000. I'm sorry, I made a mistake. 15,000. All of you clear about this? No. This is the debit side done. We have to write the credit side. As I told you, see, they given first process 2 only, but you always write the closing stock first. Take my advice, always write the closing stock first. Are you understanding? Now, write by closing stock. According to process 2, what is the value of closing stock? 4,500. I'll write it directly. Are you understanding? Now, the point is that 4,500 includes some profit. As how the opening stock includes the inter-transfer profits, same way the closing stock also includes the inter-transfer profits. Are you understanding? What they mentioned? Stock will be valued at prime cost. Stock will be valued at prime cost. Listen, this is the prime cost. Are you understanding? Total column prime cost is how much? Total column prime cost is how much? 90,000. Total, cost column prime cost is how much? 75,000. That means what is the meaning of that? At prime cost, total cost. Total is 90,000, cost is 75,000. Correct? Huh? Now, closing stock total is 4,500. How much is the cost? Cross multiplication. Are you understanding this? All of you? I am trying to calculate what is the profit included in the closing stock. Closing stock is valued according to prime cost. This is the prime cost details. This is the closing stock details. Now tell me how much is the cost? 3,750. So I'll take cost 3,750. Are you understanding, pa? Now, how much is the profit? 750. 750 is the profit included. Clear? All of you? No. Listen. So we're done with the closing stock. Next, what we'll write? By finished goods. We'll write by finished goods. When it comes to finished goods, first look at the total column. What is the total of debit side? What is the total of debit side? 94,500. Out of 94,500, how much is stuck in the closing stock? 4,500. What is the balance amount? 90,000. If it is a cost transfer method, that 90,000 would have been transferred to next process. But we are under which method? Inter-transfer profits method. So we need to add some profit. Are you understanding? So 94,500 is the total cost. 4,500 stuck in the name of closing stock. To that 90,000, we need to add some profit. What is the percentage? 20% on sales. So 20 by 100 on sales. On cost? 20 by 80. 20 by 100 on sales. 20 by 80 on cost. Are you understanding? According to process 2, cost is 90,000 into 20 by 80. How much is the profit? 22,500. So 90,000 plus 22,500. 1,12,500. Have you understand this? 90,000 is the cost. I'm adding the profit. So total comes to 1,12,500. Are you understanding? No. So 1,12,500 is the total. Now let us take the total. First, let us tally the total column. What is the total on credit side? 1,17,000. Here also I'll take 1,17,000. To profit. How much is the profit? 22,500. All of you clear? We tallied the total column. While tallying the cost column, what is the total of cost column on the debit side? 79,500. Here also I'll take 79,500. Difference 75,750. Are you understanding? Don't write. Some people write 90,000 here. 90,000 is the cost according to the process 2. But cost column is not the cost of the process 2. It is the company cost. What they'll do? They'll write 1,12,500 here, 90,000 here, and 22,500 in the profit column. That is wrong. 90,000 is the cost according to the process 2. 75,750 is the cost according to company. That cost column denote company. Are you understand? So that's what I mean to tell you. Tally column by column. First you tally the total column, which is according to process. Then tally the cost column. While tallying the cost column, total of the debit side is 79,500. Out of 79,500, how much is stuck in the stock? 3,750. Are you understanding, pa? 79,500 is the cost column. 79,500 is the cost column. Stock stuck is 3,750. The balance is 75,750. Now tell me profit. Now how to calculate profit? Listen. How to calculate profit? Debit side. First take the debit side. 22,500 is the current profit added. Already profit is 15,000. Now we added 22,500. What is the total? 37,500. So 37,500 minus 750. 36,750. If you make it these two total, you will get this. Are you understanding? So this is how we need to calculate the process. So very important thing is remembering total column represent respect to process, cost column represents company cost and profit. Are you understanding? Same way you have to prepare the finished goods account. Clear? Understood? Okay. So if you look at here, 22,500 profit. Look at here. 22,500, 3,750, 75,750, 36,750. Same. Same way you can prepare the finished goods account. So by this we're done with the process costing. Okay. What? We'll complete the joint product by process tomorrow. We'll do it tomorrow. Tomorrow we'll do it. It's not that big chapter and all. Okay, we'll do it tomorrow. You know, few people come late, na? Okay, we'll do it tomorrow. Okay. Thank you. Are you feeling comfortable? At least are you able to get what I'm trying to explain? Okay, thank you.